Good morning, everyone. So there are few queries. Let me answer that first. So please take Super 50 and any other important topic. Supplementary only contains amendments. For that we can watch your question on amendments video. No. Actually there are like many things which are new for CMA final, which is not at all there in CA. That's the reason why I am taking this. So don't just get carried away, because yesterday also some student asked me, sir, already in YouTube your amendments video is there, we will watch that, discuss something else like that. Whatever I have discussed now yesterday, at least 10 points are not there in CA. So that's the reason. Okay. Next, whether this mighty 50 questions and your solved workbook 200 questions are sufficient? Yes, sufficient. So you can download these mighty 50 questions from my website under downloads. Yes, whatever notes that I am writing, along with you I am also writing now, that notes today I will share with you, because we will complete everything as one PDF. I will share in the Telegram for other students also. You can forward it to your friends also, so that in case if you have missed writing, so you can write it, or it will be useful for that one day before revision. Okay. Then, so continuing further, in our yesterday's class we have discussed some 10 questions and few amendments. Few more points are there in supplementary. Let's complete that. So place of supply, I think we have completed the first point in place of supply, first amendment. Then the next area, even this also we completed, na? That foreign company, etc. Yes. So this is what we need to discuss. That is related to foreign portfolio investors, custodial services which is provided by the banks. Basically what happens is that these banks will be providing custodial services. Custodial services means safeguarding the financial assets. Financial assets like securities or any debt instruments, etc. and all. Who will safeguard? The bank will safeguard. And these assets, financial assets, belongs to whom? Belongs to the foreign portfolio investors, not the Indian investors, foreign portfolio investors. And as they are providing the custodial services, so what will be taken as the place of supply? Generally for banking services, so you can see your book. So banking services, what should be taken as the place of supply? Yesterday I told you that we have a summary related to place of supply for services section 12 and section 13. Now take that page. Page number 98. Page number 98. Page number 98. See that banking and other financial services, what should be taken as the place of supply for section 12? When section 12 will be applicable? If both supplier and recipient are located in India, section 12 will be applicable. And when 13 will be applicable? When either supplier or recipient in India and the other outside India. Now in this case, where bank is located? In India. And where the foreign portfolio investors are located? Outside India. Section 12 or section 13? Section 13. What should be taken as the place of supply? As per section 13, read there. Place of supply is location of supplier if the services are provided to account holders. Otherwise it will be general provisions. Correct? So if the service is provided to account holders, then we will take location of supplier. Hope it is visible to you. Correct? So location of supplier if the service. Vinay. ஏசி சரியா வரல, அது கொஞ்சம் இது இறக்கி வைய, இல்லை கையில் அந்த இது Yes. So location of supplier if the service are provided to account holders, otherwise general provision. So foreign portfolio investors will not have account in India because they are just the portfolio investors. So due to that reason, the place of supply will be as per general provisions. Is it clear? So for that reason only they gave this particular circular. Read this. The circular clarifies the place of supply for custodial services provided by banks to foreign portfolio investors. It states that these services should not be considered as services provided to account holders. So because the place of supply for such service should be determined under default provision. What is a default provision? General provision. And in place of supply, I will tell you one hack. If you don't know what is the place of supply, apply general provisions, 90% your answer will be correct. Okay. If you don't know, so you could not recollect or in exam you are struck, etc. and all, you apply general provisions, 90% probability that your answer will be correct. Okay, because majority of the cases the location of recipient will be taken as the place of supply for that reason. Okay, so therefore, which is subsection 2 of 13, the circular provides details on the definition of custodial services. So what is custodial services, etc. and all they have given. Now look into this example. ABC Bank, where is it located? Mumbai, India, provides custodial services to XYZ Capital on FPI, an FPI, foreign portfolio investor based in Singapore. Now, so custodial services, what should be taken as a place of supply? Is it to account holders or other than account holders? Other than account holders. So we need to take general provisions. What is the location of recipient? Singapore. So Singapore should be taken as the place of supply. So the place of supply will be Singapore, and accordingly it will become export of services. Correct? Where is bank located? India. Where is recipient located? Outside India. Place of supply also outside India. If the consideration is in convertible foreign exchange, supplier and recipient are not to establishments of the same person. Of course, they are not to establishments of the same person. Then it will become export of services. Accordingly, it will become export of services. So kindly write down. So this is point number 31. Point number 31. Yes. So POS in case of custodial services to foreign portfolio investors. Place of supply in case of custodial services to foreign portfolio investors. So general provisions as FPIs do not have account in the bank. What if they have account in bank? If they have account in bank, then location of supplier, that also write down in brackets. If they have account in bank, then POS is location of supplier. POS is location of supplier. Okay. Next, can I proceed? Say this clarification related to data hosting services provided by service providers located in India to cloud computing service providers located outside India. Let's try to understand this with the help of an example. Say Netflix is there. Many of us will watch Netflix, even Amazon Prime. Now, this Netflix and Amazon Prime are the cloud computing service providers, means they are the owners of the data. But where this data will be hosted? Do you think the data will be hosted in abroad? No. The data will be hosted in a server in India, and that server we will be accessing and we will be retrieving the data. Are you getting this? Now there are a lot of people who owns the server who will store that data, called as data hosting service providers. So where is the data hosting service provider located? In India. And to whom they are providing services? Cloud computing operators outside India. Is it clear? Carefully listen. The data storage service provider is in India. Data hosting service provider is in India. To whom they are providing services? Netflix, Amazon, outside India. Are you getting this? Now what should be taken as the place of supply in this case? So basically, will it come under intermediary services? No. Again, it is not intermediary services. Why? I told you, intermediary means just one time activity, but it is a recurring activity. It will not be coming under intermediary services because it is on a principal to principal basis. Now for this data hosting, storage devices are required. That storage devices are given by Netflix or Amazon. Using that storage devices, our people will do the storage and will be maintaining it. So can we say it as performance based service in relation to goods? No, it is not even performance based service in relation to goods, because it is not just carrying out some process on the goods belonging to others. So it will not come. Fine. Will it come under service in relation to immovable property? No. So it will not come under these three places. So naturally what should be taken as a place of supply? General provisions. Is it clear? So that's what they have given. So data hosting service provider and cloud computing service provider. For data hosting service provider, remember, one person who is storing the data in India, and cloud computing service provider, you remember that Netflix and Amazon. Data hosting service provider is in India and cloud computing service provider is in USA, and end users. Who are the end users? We, who will access the Netflix. Nature of contract: the recipient contract with the provider to host their data. The provider operates data centers equipped with computing and networking infrastructure. The provider does not interact with or have any knowledge about the end users. The provider charges the recipient for data hosting service based on the usage of infrastructure. Payment is made by recipient in foreign exchange. The provider provides service like server hosting, IT management, monitoring, etc. The recipient uses these services to deliver cloud computing solutions to its end users. Now in this case, what should be taken as the place of supply? The place of supply is as per 13.2. What is that? General provisions. That is location of recipient. Again, will it qualify for export of services? Yes. If you observe all the circulars, one point is common. What is common? General provisions. Correct? So if you see the previous circular also, place of supply will be general provisions. Correct? The next circular also, place of supply is general provision. This circular also, place of supply is general provisions. That's why I told you 90% of the cases the general provisions only will come. But in exam you need to write why not other provision. You cannot write general provision alone. General provision is applicable, however the other provision, what are the other provisions which are connected here? Intermediary services, performance based service in relation to goods, and service in relation to immovable property. These three are not applicable. That you remember. Answer you know. Answer is what? General provisions. But while writing, you cannot write only general provisions. You have to write why other things are not applicable. Okay. So write down point number 32. Place of supply in case of data hosting services to cloud computing operators located outside India. Place of supply in case of data hosting services to cloud computing operators located outside India. So what should be taken as the place of supply in this case? POS as per general provisions. POS as per general provisions. So it is not an intermediary service, not an intermediary service, not a service in relation to, not a performance based service, not a performance based service in relation to goods, not a performance based service in relation to goods, and not a service in relation to, not a service in relation to immovable property, not a service in relation to immovable property. Okay. Then next one. So here they gave one numerical example, but already we understood what is the implication of this. And now we are moving on to the next area, that is value of supply. In value of supply, there is one important circular that is given, post supply discount. What is the treatment of post supply discount? Generally, if the discount is given after supply, but the terms are agreed before at the time of supply, that discount is allowed as deduction, provided the recipient is reversing the proportionate ITC. Why the recipient should reverse the proportionate ITC? Just try to understand this with a small journal entry. So whenever I make a sale to you for 1 lakh plus 12,000 rupees, what will be the journal entry in my books? I am supplier, you are recipient. In my books, what will be the journal entry? So credit sales. So therefore, debtor account debit, that is recipient account debit, to sales 1 lakh and to GST payable 12,000. This is what I will pass as entry. What about you? It is a purchase for you. So for you it is purchase. So purchase account debit 1 lakh, ITC account debit 12,000, to supplier account, I am your creditor, to supplier account 1 lakh 12,000. This is a normal entry. Now I am giving you a discount. I am giving you a discount of say 5,600 rupees. I am giving you discount. When I am giving you discount of 5,600 rupees, what will you do? First, I need to give you a credit note. So why? Because already I gave an invoice. Now I will be giving a credit note. When I give a credit note, what is the journal entry in my books? Discount allowed. Okay. So discount allowed. How much is the discount allowed? 5,600. Okay. So but here discount allowed account debit 5,000. That 600 rupees I will get a benefit. How I will get a benefit? My liability gets reduced. So my liability shows what balance? Credit balance. GST payable shows a credit balance. Now to that extent 600 rupees it will come down. Means we need to make a debit. So GST payable account debit 600. To recipient account it will be 5,600. Means your account got reduced by 5,600. Clear? Now you have to pass the discount received entry. Discount received is a income for you. Correct? So far you have made a credit of my name. Now it will be debit. So supplier account debit to discount received. How much discount received? 5,000. But that 600 rupees is what? Your ITC should come down. Are you understanding? Previously you took ITC of 12,000. Now it has to come down to, so by 600 rupees. So ITC account you will reduce. Usually ITC is an asset that shows a debit balance. But when you are writing to ITC, means the ITC should be reduced. So that's what they are telling. Whenever a credit note is issued, the recipient should reverse the ITC. Then only this discount is allowed as deduction to the supplier and supplier liability gets reduced. Are you understanding this? But how the supplier will know whether the recipient is really reversing the ITC or not? Supplier will not know, for which they have got given a circular which says that, see boss, whenever you are giving a credit note and you reduce your liability, but after this year, you see how much is the ITC component to be reversed by your recipient. If the ITC component to be reversed by your recipient does not exceed 5 lakh rupees in a financial year, you get a declaration from him. What is that? That he is reversing the ITC. Suppose if you have given credit notes to your recipient, throughout the year you need to check. It is not 5 lakhs for one invoice, 5 lakhs throughout the year, multiple invoices. So you are giving a credit notes to your recipient. And what is the total ITC component that he need to reverse for the financial year? Greater than 5 lakhs. Then ask his chartered accountant. Whose chartered accountant? That recipient's chartered accountant or cost accountant, to certify that he has reversed the ITC. Is it clear? As there is a CMA certification that is required here, definitely this amendment will be tested in your exam. Okay, clear? Say this. Mechanism for providing evidence of compliance with section 15.3. So clarification verifying the ITC reversal by recipient when discounts are offered by supplier through credit notes after the supply has been effected. So but this discount is given pre-supply or post-supply discount, post-supply discount. Currently there is no facility on the common portal to verify whether ITC attributable to the discount has been reversed by the recipient. In view of the above, till the time a functionality is made available on the common portal to enable the supplier as well as tax officer to verify whether the input tax credit attributable to such discount offered through credit notes have been reversed. So they are bringing, like supplier may procure a certificate from the recipient. Supplier may procure a certificate from the recipient of supply issued by CA or CMA containing a unique document identification number UDIN. Usually nowadays certificates should have a UDIN. So we need to upload the certificate in the UDIN website of the ICMA website or CA Institute, etc. They have developed a UDIN website. We need to upload the certificate and get a unique document identification number. Otherwise what will happen? One certificate will be given to supplier and the supplier will take a Xerox of it and he will be keeping. You understood or not? Possible na? So due to that reason, every document we should have a unique document identification number certifying that the recipient has made the required proportionate reversal of ITC at his end in respect of such credit note issued by supplier. Okay. In case where the amount of tax, here amount of tax means that ITC component. Sir, ITC component headwise or total? Total. CGST, SGST, IGST, total ITC. With respect to that supplier or all the suppliers are? That supplier, okay. Involved in the discount given by the supplier to a recipient through tax credit notes in a financial year is not exceeding 5 lakh rupees, then instead of CACMA certificate, the subset supplier may procure an undertaking from the recipient, just a declaration. Okay, declaration in the letterhead of the recipient will be sufficient that they are reversing the ITC. Now, this CAR CMA certificate must include the details of credit notes, relevant invoice numbers, amount of ITC reversal and relevant document. Just like that CACMA should not sign, they should keep all the supporting documents. What are the supporting documents? First, what is the invoice and what is the credit note for which this invoice is, okay, first invoice is given, then the credit note is given. So what is the credit note for this invoice? And so ITC ledger, because in ITC only they will do the reversal. So that details, everything should be evident. And next, such certificates or undertakings are considered suitable and admissible evidence for the purpose of section 15.3. Supplier should procure these certificates during the proceedings. Means we don't have to voluntarily upload. Whenever department is asking, whenever the officer is asking, this certificate or the declaration should be produced. Is it clear? So kindly make note of this. Point number 33. Evidence for ITC reversal, evidence for ITC reversal based on credit note, in case of post supply discount. Evidence for ITC reversal based on credit notes when in case of post supply discount. This is divided into two. ITC, okay, ITC in a financial year with respect to such supplier, okay, ITC in a financial year with respect to such supplier does not exceed 5 lakhs. You understood this? What is the meaning of this? One supplier is giving the credit notes now to a recipient. The total ITC component does not exceed 5 lakhs in a financial year. Okay. So then what is that required? Self-declaration from recipient, that they have reversed ITC. that they have reversed ITC. Suppose if ITC in a financial year with respect to such supplier, if ITC in a financial year with respect to such supplier exceeds 5 lakhs, then if it exceeds 5 lakhs, then CARCMA certificate, CACMA certificate with UDIN, correct? With UDIN and supporting documents that recipient reversed ITC. Who CACMA? Supplier CACMA va, recipient CACMA va? Recipient CACMA, not supplier CACMA. Okay, so this is what you need to remember, and they gave one illustration also. So but this is applicable only in case of post supply discount, but very important condition that the terms are, when we will give credit note in case of post supply discount, the terms are agreed before at the time of supply, but the discount is given after supply. Example, cash discount. Today we will agree that if you pay within 10 days I will give you discount, like that. So it's a post supply discount, but the terms are agreed before or at the time of supply. Okay, now say this: XYZ Private Limited issues a credit note for post sale discount to its recipient ABC Private Limited. A discount of 60 lakh, tax amount 9,15,000 included, is given via credit note in financial year 24-25. 9 lakh means it is more than 5 lakhs. So therefore we need to get CACMA certificate, ITC reversal. Since the recipient must reverse the proportionate ITC if the amount of tax does not exceed 5 lakhs, then undertaking, and if it exceeds 5 lakhs, CACMA, in this case it exceeds 5 lakhs, so therefore we need to get a CACMA certificate. And this is applicable for all financial years, all past financial years also, not only latest amendment. This is a retrospective, even for past period. So the certificate serves, and the certificate for earlier financial years can also be used to demonstrate compliance. Earlier financial years also they need to obtain this. Then next one, the next circular is related to import of services from a related person. Generally in case of import of service from a related person, how to determine the value? Which rule? Rule 28. Remember, always in case of related parties the value will be determined as per rule 28. In rule 28 there is one proviso which says that if the recipient is eligible for full ITC. So when the recipient is eligible for full ITC, I am your supplier, you are my recipient, and I am making sale of goods to you. When you will be eligible for full ITC, your outward supply should not be exempted. If your outward supply is fully taxable, then you are eligible for full ITC on your inward supplies, correct? So therefore, whenever the recipient is eligible for full ITC, then the value declared in invoice is deemed to be the open market value, and that will be taken. Because in case of rule 28, what is the first priority that we will take? Open market value. Now you can see your book, I have given that point. Yesterday also we were referring to that rule 28 in valuation chapter. So you can see that page number 131. Page number 131. In that page number 131 you can see, if the recipient, that is rule 28, transaction between related persons including distinct persons, if the recipient is eligible for 100% ITC, open market value equals to transaction value. Got it? Means what? Whatever value that is reported in the invoice will be taken. What if recipient is not eligible for full ITC? Then we need to determine open market value. Are you understanding this? Now, so simple point only, whenever there is a transaction between related parties, we need to go by open market value. If the recipient is eligible for full ITC, whatever value that is declared in invoice will only be taken as open market value. Even if 1 rupee is declared, that 1 rupee will be taken as open market value. If 100 rupees is declared, that 100 rupees will be taken as open market value. Because anyhow the recipient is eligible for full ITC, subsequently when he sells, he is going to pay the GST. That is the idea behind it. Suppose if he is not eligible for full ITC, we should really determine what is the open market value, that is between two unrelated parties, what is the price prevailing that day, that should be taken. Got it? Now, this is connected to import of services from a related person. So what is it they are trying to convey? See this. Whenever you are importing service from a related person, open market value will be taken, but if the recipient is eligible for full ITC, value declared in invoice will be open market value. What if invoice is not there? Why invoice will not be there? Because the supplier is outside India. In import of service, where the supplier is outside India, where the recipient is located in India, in that case supplier outside India will not give tax invoice now, because supplier outside India don't have to comply with GST provisions in India, so he will not give tax invoice. Is it clear? Then what should be taken as the value in that case? The value will be taken as nil. The value will be taken as nil. That is what clarification they have given. Understood? Again I am repeating. So you read it once, you will get an understanding. In case of import of services by a registered person in India, from whom? Related person located outside India, the tax is required to be paid by a registered person in India under RCM. In such case, the registered person in India is required to give self invoice. Correct? Why? Yesterday we discussed, when the supplier is unregistered, recipient is registered, recipient has to give invoice to the supplier. What is the time limit within which the invoice should be given by recipient to supplier? 30 days from the date of receipt of goods or services and pay. It is clarified that in case where the foreign affiliate is providing certain services to related domestic entity, where full ITC is available to the said domestic entity, the value of such supply of service declared in invoice by the said related domestic entity may be deemed as open market value. Further, in case where full ITC is available to the recipient, if invoice is not issued by the related domestic entity with respect to any service, the value of such service may be deemed to be regarded as nil. When no invoice is issued. If some invoice is issued, whatever value in the invoice. Okay. In case where full ITC is available, if the invoice is not issued by the related domestic entity with respect to any service provided by the foreign affiliate, then the value will be declared as nil. Understood? So, please write down this information. One second. That is, so import of services, there is a service provider. Where is the service provider located? Outside India, and service recipient is located in India, and the service provider is providing the services to the service recipient. It will come under import of services, and this service provider and service recipient, these two people are related. Okay. As these two people are related, we need to determine value under rule 28. Value under rule 28. Now, as per this value under rule 28, we have one point which says that if recipient is eligible for full ITC, recipient not eligible for full ITC, we have to check that. Okay. Recipient not eligible for full ITC. Recipient not eligible for full ITC. When recipient is not eligible for full ITC, what will be taken? OMV. Correct? Open market value. If recipient eligible for full ITC, if recipient is eligible for full ITC, okay. Now again we will divide into two. self-invoice issued by whom? By recipient. Self-invoice not issued by recipient. If self-invoice is not issued by recipient, what does this circular says? What will be the value, pa? Value equals to nil. Got it? Suppose if the self-invoice is issued by recipient, then invoice value is amount in invoice, amount mentioned in invoice, amount mentioned in invoice. Got the clarity? And you apply this in all cases of related party transactions. Whenever there is an import of services, that if the invoice is not issued by recipient, even normally also any related party transaction wherever the recipient is eligible for full ITC, if the invoice is not issued by the recipient, then the value will be nil. Okay. Clear? Next, for this they have given one illustration. Say this: Indian entity ABC Private Limited, a registered person in GST, and foreign affiliate supplier is XYZ Incorporation located in USA, consulting services, service value $10,000, that is 8 lakh rupees equivalent, ITC fully available to ABC Private Limited. Now it will come under RCM. Why it will come under RCM? Import of services will come under RCM, and therefore self invoice to be given. The self invoice include details such as value of services and the applicable GST. Since ABC Private Limited is eligible for full ITC, the value declared in self invoice. What is the value declared in self invoice? 8 lakhs is deemed to be open market value. ABC Private Limited calculates GST on the value of 8 lakhs and pays it under RCM. If ABC Private Limited does not issue a self invoice for the service provided by XYZ Incorporation, the value of service may be deemed as nil. Got it? So that nil itself is the open market value. Then next amendment is related to Rule 28 sub Rule 2. This is a very important amendment. Definitely there is a chance of asking this for CMA final exam, that is related to corporate guarantee. So previously also we had this corporate guarantee point, but now they have amended it little bit. So let's try to understand what is this corporate guarantee. First, corporate guarantee means what? Guarantee given by one company for the other company in relation to loan taken by the other company. Definitely the guarantee will be given by related parties only. So holding company will give the guarantee with respect to the loan taken by the subsidiary company. So when the holding company is giving guarantee, so subsidiary company may pay consideration to the holding company or may not pay consideration to the holding company, but this activity will become supply. Why? Because between related parties, whether the consideration is involved or consideration is not involved, it will become supply under 7(1)(c). Correct or not? So accordingly, in this case, what should be taken as the value? For which they added one new rule, that is Rule 28 sub Rule 2. It says, see what is the guarantee amount. So your subsidiary company, I am holding company, you are borrowing 100 crores. What is the guarantee I need to give for 100 crores? 100 crores into 1%. For how many years the guarantee is given? Say the guarantee is given for 3 years. So 100 crores into 1% into 3, or the actual consideration. Say you are giving me some 5 lakhs or 5 lakhs, whichever is higher. Okay. Say this. With effect from 26 October 2023, insertion of sub-rule 2 of 28, value of supply of services by a supplier to a recipient who is a related person, the term located in India is inserted by providing the corporate guarantee to any banking company on behalf of the said recipient shall be deemed to be 1% of the amount of such guarantee offered per annum or the actual consideration, whichever is higher, provided that where the recipient is eligible for full ITC, the value declared in invoice shall be deemed to be the value. So this proviso is added here also. This point is common in both the places. The regular rule 28 sub rule 1 is applicable in case of all related party transaction. If it is a corporate guarantee between related parties, then it is rule 28 sub rule 2. But in both the places, this proviso is common. What is that? If recipient is eligible for full ITC, then open market value is nothing but the value mentioned in the invoice. Okay. Then what if value is not mentioned in invoice, that is invoice is not issued? That is if it is import of services. Import of services. CBIC issued circular regarding clarification on various issues pertaining to taxability and valuation of supply of service or providing corporate guarantee. Issue number 1. Whether rule 28 sub rule 2 applies to corporate guarantees issued before its introduction on 26th October 2023. So this amendment is applicable from 26th October 2023. Before that it was just 1% of the guaranteed amount, that's it. There was no per annum point and all. Okay. So before that, whether it is intra-group issued prior to this date would require GST payment on 1% of guarantee amount. So, but it is old provision which you don't have to remember. You remember only the updated provision. Then ABC Limited Holding Company provided corporate guarantee to PQR Bank on behalf of its subsidiary XYZ on 1st January 2023. It was old at that time, as it is before 26th October. So we need to go with 1% of the guarantee amount. What is the guarantee amount? 10 crore. So 10 crore into 1% will be taken. Okay. Next we have second example. You see, on 1st November 2023, ABC renewed its earlier guarantee for the same loan of 10 crore on behalf of XYZ Limited. Now since the guarantee is renewed after 25th October, so we need to take 1% of the guarantee amount per annum, okay, or actual consideration, whichever is higher. Okay. And issue number 2. So issue number 1 is not that important because it was related to the old provision. So forget about this. From issue number 2, we need to remember it is very important. When a corporate guarantee is issued for a specific amount, but the loan is only partly availed or not availed at all, how is the value of the corporate guarantee determined? What does it mean? Loan is 100 crores pa. But I mean, loan sanctioned is 100 crores. But loan that you have taken is only 60 crores. Usually we go for a higher sanction, but we will not borrow fully. We will borrow only lesser amount. So loan sanctioned is 100 crores, but loan borrowed is 60 crores. But the corporate guarantee will be given for entire 100 crores now. Now tell me whether we need to multiply 1% on 100 crores or 1% on 60 crores. 100 crores. 100 crores. We should multiply 1% on loan sanctioned, not loan borrowed. Is it clear? Say this. So ABC Limited provides corporate guarantee to XYZ for a loan amount of 10 crore, but PQR Bank approves the loan, but only 6 crore is disbursed to XYZ initially and the remaining 4 crore is not availed. Now this 1% should be computed on 6 crores or 10 crores? 10 crores, that is 10 lakhs. On that GST will be payable. Is it clear? Now can the recipient avail ITC with respect to this? Yes. And how much ITC they can avail? Full 1.8 lakh they can avail ITC? Yes, even though they took a loan of only 6 crore, but entire GST of 1.8 lakhs can be availed. Full ITC of 1.8 lakhs can be availed by them. Is it clear? So like this they have given lot of issues, and all these things point by point we will make note. Okay. So first write down valuation in case of corporate guarantee. Sanction amount is the amount for which guarantee is given, but disbursed amount will be less. Sanction amount is always high, the disbursed amount is less. Even when you also take a loan, may not be required, entire amount you may not require. Initially you may take only lesser amount. Whenever the need arises, you will take the remaining amount, but the guarantee will be given for the total amount only. That's why we need to compute on that. So point number 35. Valuation in case of corporate guarantee. This is rule 28 sub rule 2. Valuation in case of corporate guarantee, rule 28 sub rule 2. Here again 2 points we have. Recipient eligible for full ITC, recipient not eligible for full ITC. Recipient eligible for full ITC, recipient not eligible for full ITC. If recipient is eligible for full ITC, what we will take? Value equals to amount mentioned in invoice. Amount mentioned in invoice. Okay. Suppose if recipient is not eligible for full ITC, what will be taken as value? 1% of guaranteed amount per annum. Okay. 1% of guaranteed amount per annum, or actual consideration whichever is higher. Whichever is higher. So one student is asking, sir, while doing CA revision, you said 1 crore bet if this question is not coming in exam. Yes, pa, I said 1 crore bet and all I have placed, that if this is not coming for exam, I will give 1 crore like that. IDT exam it did not come. Ana IBS exam it came. I said it will come in exam. I did not say IDT exam. Okay. So it came. I was praying God, ayyo, it should come. So why would 10? So it came. So it's actually very important concept because lot of issues are involved in this. So that's why definitely, because CMA Institute's most favorite area is valuation. Not now, from the beginning. That's why if you see so almost everywhere we will be having this computation based questions only. Even in DT also, transfer pricing and all they will be definitely asking. Even IDT, this valuation rules and all, you cannot ignore this and go. Even customs valuation also they will be testing. Okay. So then even SFM also, valuation of equity instruments, valuation of debt, everything. That too, that SPM BV paper is there, full of valuation, valuation of valuation. You understood? So therefore, CMA Institute's favorite area that is. So say this. What is the first issue that we have discussed? Loan disbursed, loan sanctioned. Loan sanctioned. Okay. So even if loan disbursed is, less than loan sanctioned, 1% is computed on what? Loan sanctioned. 1% is computed on loan sanctioned. Then next, ITC. So ITC can be availed by recipient with respect to entire GST paid by supplier even if loan disbursed is less. Even if loan disbursed is less than loan sanctioned. Whatever GST that is paid by the supplier, recipient can avail ITC with respect to that. Okay. Understood now these 2 points. Next one. say this third issue here. Sometimes what will happen, loan will be taken over by one bank from another bank. For example, the subsidiary company has taken loan from HDFC Bank and that loan is transferred to Axis Bank. When the loan is taken over from HDFC Bank to Axis Bank, then what is the treatment? Whether Axis Bank is asking the holding company to give a fresh guarantee or not. If the Axis Bank is asking holding company to give a fresh guarantee, again the valuation needs to be done. 1% of the new guarantee. Is it clear? Suppose if Axis Bank is telling, okay, whatever earlier guarantee you gave for HDFC Bank that is sufficient, then the new valuation will not arise. Is it clear? Say this. So, assignment of existing corporate guarantee. ABC Limited provides corporate guarantee for a loan of 20 crore taken by its related entity XYZ Limited from Bank A. Now, Bank B take over the loan from Bank A. No new corporate guarantee is issued. No new corporate guarantee issued means whether we need to do again any GST computation, etc. No. And the existing guarantee is merely assigned to Bank B. The takeover of the loan by Bank B does not involve a fresh supply of service. The corporate guarantee issued by ABC Limited remains the same. So, as clarified, this activity does not attract GST since there is no corporate guarantee is issued or renewed. Suppose if there is a fresh guarantee is issued, so following the loan taken over by Bank B, the new corporate guarantee is issued because a new bank, that is Axis Bank, is telling, boss, we need a new corporate guarantee, then new supply of service will come. So again we need to determine the value. So if ABC Limited issues a fresh corporate guarantee for the same loan amount of 20 crore, again the value needs to be done. So 1% of 20 crore, 20 lakh, on that GST payable will be 3.6 lakhs. ABC Limited must charge GST on the fresh corporate guarantee provided. Okay. So what is that we need to write in this case? What is the next point you need to write? Next issue. Come on. In case of takeover of loans. In case of takeover of loans by another bank. In case of takeover of loans by another bank. If fresh guarantee is issued, if fresh guarantee is issued, comma, GST liability shall arise. GST liability shall arise. Understood? Suppose if no fresh guarantee is given, the GST liability shall not arise. Then next issue you see. GST on corporate guarantee provided by multiple co-guarantors. What is multiple co-guarantors? Say 3 companies together has given the guarantee for loan taken by the 4th company. All are related. All these 4 companies are related. 3 companies, ABC has given loan, has given the guarantee with respect to the loan taken by company D. Now there are 3 co-guarantors. How to determine the value? You determine the value normally, but you divide it between ABC. In what ratio? Depending upon the ratio in which they are giving the guarantee. What if there is no ratio? Equal ratio. Simple. Okay. So say this. Equal sharing ratio. 2 co-guarantors, company A and B, jointly provide a guarantee for 1 crore on behalf of the related recipient company C. Both A and B share the guarantee equally 50 lakhs. No specific consideration is paid either to the guarantor. Now whatever 1% we will calculate, that we will divide. So 1% of 50 lakhs. What is 1% of 50 lakhs? 50,000. 50,000 will be for company A and company B, and they need to pay GST accordingly. Is it clear? Then suppose unequal sharing is there. 60-40. Again same. 60-40. Total how much? 1 crore. 1 crore into 1% is what? 1 lakh. 1 lakh into 60%, that is 60,000 for company A and 40,000 for company B. On that they will pay GST. Is it clear? Suppose if there is a higher actual consideration paid, say this twist, 1 crore per guarantee and the actual consideration is 80,000 and 70,000. Okay. Now what we will do in this case? First, what is the total consideration? 80 and 70, total is how much? 1,50,000. 1,50,000 or 1 lakh. Provision is what? 1% of the guarantee amount or actual consideration, whichever is higher. So therefore 1,50,000. That 1,50,000 we need to divide between company A and company B, which is already given, that is 80,000 and 70,000. So 80,000 and 70,000 into 18% will be taken. Is it clear? Then next, this is about multiple, that is co-guarantors, multiple co-guarantors. So easily we can determine this way. Whatever is the valuation that we do will be divided between the co-guarantors in their ratio in which they are giving guarantee. In the absence of ratio, that's it. So write down. In case of co-guarantors, in case of co-guarantors, value shall be determined and apportioned. Value shall be determined and apportioned. Apportioned between co-guarantors in their guarantee ratio, full stop. In the absence of that ratio, in the absence of such ratio, comma, equal ratio is considered. In the absence of such ratio, equal ratio is considered. Clear? Next issue. Issue number 5. In case of intra-group corporate guarantees. Intra-group means between the companies. Okay. What if one is in India, one is outside India? Then also the same way, except that the recipient is outside India. So total 4 combinations are possible. Both supplier outside India, recipient outside India, there is no GST, because if there is a transaction between 2 parties, both are outside India, there is no GST, all transactions are exempted. So leave it. Both are in India, just now we discussed how to do. Now 2 more combinations. Supplier outside India, recipient in India, means it is like import of services, then also the same way we will do. Supplier in India, recipient outside India, this rule will not be applicable. This rule 28 sub rule 2 will not be applicable if the recipient is located outside India. Then how to determine the value? As per rule 28 sub rule 1. What is rule 28 sub rule 1? Open market value, like, kind and quality, that we need to follow. Is it clear? Say this. Domestic corporate guarantee, both are in India, company A and company B, guarantee 1 crore. Since both the entities are domestic and related, GST is payable under FCM. So company only will pay and company B can take ITC. Okay, that is easy. Now, foreign intra-group corporate guarantee, parent company X located outside India, subsidiary company is located in India, then also we do the same way. So 20 crores into 1%, 20 lakhs, and 18%, who will pay GST? So company Y, which is in India, RCM na, import of services, RCM. So subsidiary company Y will pay GST. What if, one in India and the other outside India? That they have not given here. In that case, this rule will not be applicable. Where is it given, sir? In the provision itself, it is clearly given that the recipient should be located in India. Is it clear? The recipient should be located in India. So write down this issue also. If recipient is located outside India, if recipient is located outside India, then rule 28 sub rule 2 not applicable, and value as per rule 28 sub rule 1, that is open market value or like, kind and quality, or cost plus 10%, that should be taken. Okay. Clear pa this issue? Next. So this is about these. Next issue, 1 second. Suppose if the corporate guarantee is for multiple years. So far we have seen only 1 year. What if it is for multiple years? We need to multiply by number of years. So for example, fixed term of 5 years, what we will do? 1% into 5, 5%. See here, 10 crore for a tenure of 5 years. So 10 crore into 1% into 5, correct? That is 50 lakhs. Or the consideration, what is the actual consideration? 3 lakh per annum. So 3 lakh into 5, 15 lakh, whichever is higher. Actual consideration also you need to multiply by 5, because the actual consideration may be given per annum. So that also you need to multiply by 5. What if the actual consideration is given in total? Then you compare it directly. Be careful in the question. Okay. Next. Suppose if the corporate guarantee is issued for 1 year and renewed annually for 5 years, then every year you compute. If you know that it is going to be for next 5 years fixed term, day 1 itself you do computation for all 5 years and pay the GST. If it is going to be renewed for every year for next 5 years, year 1 one computation, year 2 one computation, year 3 one computation, year 4 one computation, like that we need to compute and pay on the date of renewal. Is it clear? So a holding company A provides corporate guarantee to a bank for 10 crore on behalf of its subsidiary company for 1 year, renewable annually for 5 years. The total actual consideration is 3 lakh per annum. So what we need to do, 1% of 10 crore will be 10 lakhs or 3 lakhs, whichever is higher, that will be 10 lakhs. Now again next year we will renew now. Again next year we need to do the same computation. Okay. So each time the corporate guarantee is renewed for that year, we need to do the computation. Understood this pa? Suppose if it is for less than 1 year, can the guarantee be given for 8 months also? Then in that case what we need to do? Simple, 1% into 8 by 12. If it is for 9 months, 9 by 12, like that. If it is for 6 months, what we need to do? 1% into 6 by 12. You got it? So write down. In case of multiple years, corporate guarantee fixed term or annual renewal, fixed term or annual renewal. If it is fixed term, what we need to do? Compute based on number of years, and pay GST on the date of guarantee. Okay, and compute GST on the date of guarantee. Compute based on number of years and compute GST on the date of guarantee. Suppose if it is annual renewal, compute for each year, and compute GST on the date of renewal. You understood? Yearly on the date of renewal, the GST liability will arise. Why I did not write pay GST? Because you may get confused. We need to compute GST, but we need to pay the GST by next month 20, because this month liability we need to pay by next month 20. First year only first year we will do. We will write like one note like every year we need to compute and pay the GST accordingly, like that one line you write, okay. But they will give like sometimes the guarantee amount will get reduced. First year guarantee will be 10 crores, second year will be 8 crores, third year will be 6 crores, like that. Then accordingly we need to do the computation. So if the guarantee is for part of a year, write down next point. If guarantee is for part of year, then 1% into number of months divided by 12. Suppose if it is for 9 months, into 9 by 12, 6 months, 6 by 12, like that. Next one, issue number 7, whether the benefit of second proviso to sub-rule 1, which says that value declared in invoice deemed to be open market value in case where full ATC is available to the recipient, is not applicable to sub-rule 2. No, even for sub-rule 2 also it will be applicable. Already we discussed that, correct. So proviso has been inserted retrospectively similar to that provided in second proviso to provide the benefit in case of service of corporate guarantee between related person. Accordingly, it is clarified that in case involving supply of service of corporate guarantee provided between related parties where full ATC is available to the recipient, the value declared in invoice shall be deemed to be the open market value. So that already we discussed. A holding company provides corporate guarantee for 10 crore on behalf of subsidiary company. Subsidiary company B is eligible for full ATC. Value declared in invoice is 1.5 lakhs. So what should be taken? So only 1.5 lakhs will be taken as a value in this case. Is it clear? So we will not see anything. This 10 lakhs and all we will not see. We will see only 1.5 lakhs, even though the 10 lakhs is more than 1.5 lakhs. So therefore, the declared value of 1.5 lakhs is deemed to be the taxable value. And accordingly, we will pay GST. And suppose if subsidiary company B was not eligible for full ATC, then we will compare 1% of the 10 crore or actual value 1.5 lakhs, whichever is higher than 10 lakhs on that GST payable. This point already we have written in the beginning itself. If recipient is eligible for full ATC, what should be taken? Okay. Next, issue number 8, whether the valuation in terms of rule 28 sub rule 2 will apply to export of service or providing corporate guarantee. This also we discussed. What is that? If the recipient is outside India, whether we will apply this rule 28 sub rule 2 or we will not apply? Will not apply. The provisions of said sub rule will not apply in case where the recipient is located outside India. So all these issues we have completed. Okay. So this is one big amendment related to corporate guarantee. Many points are involved. So this information you need to revise and definitely go mark it as very, 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 very important for exam. If they are not testing for June exam, guarantee for December exam. Okay, for sure. Next, another circular is related to this incentive given by Ministry of Information Technology and Electronics for the purpose of promoting RuPay transactions. RuPay means RuPay card, you know na, that, and UPI transaction. This UPI and RuPay is our Indian based. Foreign based is Visa, Mastro, that payment gateways. But Indian payment infrastructure is called as RuPay and UPI, BHIM, Beam UPI. That's where the entire system is now built. Today a lot of people are using GPay, PhonePe, Paytm. This is on UPI infrastructure. Okay, but this UPI infrastructure is created by Indian government for encouraging the people to use that particular UPI payment gateway. So there is no processing fee charged by the acquiring banks. Usually when you do card payments, they will collect 1%, etc. like that. But they will encourage you to use GPay. Simple, go to a shop and tell, I will make payment by card. Card, no sir, you have to pay extra, like that he will tell. Suppose if you say GPay, GPay okay, welcome. Why? Because in GPay if you pay 10,000, 10,000 I will get. But in card payment if you pay 10,000, I will not get 10,000. I will be getting less than 10,000 because there is something called as processing fee that will be deducted. Now, why is it so that in case of UPI transaction, there is nothing like that? Because these acquiring banks are there, intermediaries. Who are the intermediary banks? UPI. You will have OK HDFC, ICICI, Axis, YBL. These people are the acquiring banks. They get the incentive. From whom they will get the incentive? Ministry of Information Technology and Electronics. What is the treatment of that incentive? That incentive will be treated as subsidy from central government and it is not treated as consideration. Is it clear? Generally, consideration definition excludes subsidy from central government or state government. Accordingly, it will not be treated as consideration. Is it clear? So, whether GST payable on that incentive or GST not payable on that incentive? Not payable on incentive. Now, listen. See the twist. Now, not only the acquiring banks, but also other people involved in the payment ecosystem. Who are the other people involved in the ecosystem? These voice box providers. Paytm. When you do one message, voice box will come na. Tirupatta Paytm rupees has been received like that and all. So that, and even merchant onboarding services, some agents, what they do is that they go to shop and they take the form and they print the QR code and put a sticker and place it over there. These people are called as merchant onboarding service providers. All these people also will get the incentive, but not from the government. First acquiring bank will receive, thereafter acquiring bank will share the incentive with all other people. All these people receiving incentive is also treated as subsidy from central government, even though directly they are not getting from central government, but it is also treated as subsidy from central government and that is also not treated as consideration, provided all these people involved are notified by NPCI. Okay, so say this. The Ministry of Electronics and Information Technology pay incentive to acquiring banks under the incentive scheme for promotion of RuPay debit cards and low value BHIM UPI transactions. These incentives are shared with various stakeholders in the digital payment ecosystem as per the proportion and manner decided by NPCI, National Payment Corporation of India. So GST Council clarified that these incentives are not taxable. Okay, for example, say this. First, MEITY pays incentive to HDFC Bank. So there is no GST on that. Now HDFC Bank shares the incentive with SBI, no GST on that. Again SBI shares the incentive with PhonePe, no GST on that. PhonePe shares the incentive with Google Pay, say this is not notified. If this is not notified, then it will be taxable. Is it clear? So up to the level decided by NPCI, so it will be GST not payable. Okay, and so that is what here it is given, but all these things are not required. Just in one line we can complete this discussion. What is the discussion? Incentive, point number 36. Incentive given by whom to whom? MEITY. What is MEITY? Ministry of Electronics and Information Technology. Okay, so MEITY, incentive given by MEITY. To whom they will be giving incentive? To acquiring bank. For what reason they will give incentive? To promote UPI or RuPay transactions. What is the treatment of this incentive? Respond here. What is the treatment of this incentive? Treated as subsidy. Treated as subsidy from government, and GST payable or GST not payable? GST not payable. Now further sharing of such incentive by acquiring bank with others involved in payment ecosystem. Now we need to check two: approved by NPCI, not approved by NPCI. Approved by NPCI, not approved by NPCI. If it is approved by NPCI, what is your answer? What it is? Again, treated as subsidy from government and GST not payable. Treated as subsidy from government and GST not payable. What about this not approved by NPCI? Not treated as subsidy, from government and GST payable. Simple. Okay. Correct. 2000. The low value is 2000. 2000 rupees transactions, they will get incentive. Okay. 2000 rupee transactions. The low value is 2000 rupees. Then sir, for high value transactions, no incentive. Yes. For high value transaction, there is no incentive. That's why what they have done now is that they started collecting some meager amount from the merchants, not from the customer. Like you make payment to me. For example, you give 5,000 rupees to me or 10,000 rupees to me through UPI. I will not receive full amount. For example, you are purchasing a video lecture, 8,850 rupees, like that you are coming and making the payment. You are scanning UPI and you pay. I will not get 8,850 because it is high value transaction. For that, some small amount, 0.25%, like that they will cut. Are you getting this? Not like card payment. Card payment 1%, 2% they will cut. But here it is. Instead, you directly send money to me. Not scanning. Directly you send money to me. I will give you my mobile number. You transfer money to me. Then full amount, because that will be considered as consumer to consumer, not business to consumer. Consumer to consumer. For consumer to consumer, no limit. 1 lakh also you can send. Is it clear? Full amount will be credited. In case of business to consumer, now they have brought in a small amount as processing charges. For low value transaction, that is up to 2,000 rupees, like the transactions, they did not bring anything, because today if you see 50 rupees, if you buy also something, you can do GPay. Roadside, one tender coconut, if you buy also, you can do GPay. If there is processing fee, they will not agree na. That's why up to 2,000 rupee transaction, there is no processing fees. Okay, and for that reason, they get incentive from Ministry of Information Technology and Electronics. Can I proceed? Yes, make note, make it fast. Say this. Now we are moving on to ITC, input tax credit. Generally, what is the time limit for availment of ITC? Availment. What is availment means? Taking credit in GSTR 3B is known as availment. And when we need to avail the ITC, what is the time limit for availment of ITC? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. But in case of RCM, clarification regarding time limit under section 16(4) for RCM supplies received from unregistered persons. So they have given one circular. Section 16(4) of the CGST Act links the time limit for ITC availability with the financial year to which the invoice or debit note pertains. This circular clarifies that in case of supplies on which tax is paid by recipient under RCM are received from unregistered supplier, self-invoice to be given. Who should give self-invoice? The recipient should give self-invoice. The relevant financial year for calculation of time limit for availing ITC will be the financial year in which self-invoice has been issued by the recipient as per section 16(4). This is subject to fulfillment of other conditions and restrictions of section 16 and 17. Additionally, when recipient issues invoice after the time of supply and pays tax thereon, it will be required to pay interest and may also be liable to pay penalty according to section 122. That is, for delay in payment of tax, they need to pay penalty also. That's what they mean to say. Then say this: time of supply and ITC. Supplier is Hanu and Company, recipient Bola Limited. Supplier is unregistered, GTA service provider. Recipient is registered, so it will come under RCM. Service is provided on April 1st, 2019. Freight amount 2 lakh, GST 5%. Now, what will be taken as the time of supply for this transaction? Usually in case of RCM, what should be taken as the time of supply? Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. This is when the invoice is given by supplier to recipient. Yesterday we discussed now. Suppose if the recipient is giving invoice, the date on which recipient gives the invoice. So, date of payment. What is the date of payment? April 10. 60 days from the date of invoice. If no payment date is provided, the time of supply will be June 1st. Hence, the time of supply is April 10 based on the date of payment. And tax payment and self-invoice issued by Bola. Bola issued self-invoice only on July 12, and GST under RCM was paid on August 20. So, as per section 50, interest at 18% is payable for the delay in payment of tax until the payment date. When are they making the payment? August 20. So, what is the time of supply for this transaction? April. April 10 is the time of supply. But when are they making the payment of GST? When they should have paid the GST? 20th May. But 10th April time of supply means, what is the due date of payment of GST? 20th of May. But when are they actually making the payment? August 20th. Means from 21st May to August 20th, they need to pay interest on account of delay in payment, plus there will be even penalty. And what is the relevant financial year for availment of ITC? So, when the self-invoice is issued, July 12, they have given the invoice. July 12, 2024. What is the relevant financial year? 24-25. Means for 24-25, 30th November of next financial year or date of filing and return, whichever is earlier, will be taken. Got it? So, for time of supply and for self-invoice, there might be some difference, but they can take ITC only on the basis of self-invoice. Is it clear? So, just one line. You don't have to read all these things. One line, it is over. In case of RCM, okay, write down point number 37. In case of RCM, in case of RCM, if the supplier is unregistered, ITC can be availed by recipient. ITC can be availed by recipient as and when self-invoice is issued by recipient to supplier. Issued by recipient to supplier. Full stop. Time limit for availment of ITC determined accordingly. Time limit for availment of ITC determined accordingly. Okay. Next, what if self-invoice not given? ITC cannot be availed. because without giving invoice, ITC cannot be availed. Invoice is one of the document for availment of ITC. Without giving self invoice, the ITC cannot be availed. You may get that doubt while reading, so write down now itself in brackets. If self invoice not issued, comma, ITC cannot be availed. ITC cannot be availed. If self invoice not issued, ITC cannot be availed. Next amendment is clarification on requirement of ITC reversal regarding the portion of premium for life insurance policies which is not included in the taxable value. So, if you remember, in rule 32 there is one information related to valuation in case of life insurance. So, insurance policies, what should be taken as the value? You can see page number 136 in your book. Page number 136 in your book. Say this, life insurance business, what should be taken as the value? Because in rule 32, we have a special valuation methodology in case of certain notified transactions. So, total 5 transactions are there under rule 32. First transaction is money, foreign exchange transaction, and next transaction will be air travel agent. Then it will be life insurance business, number 3, and number 4 will be buying and selling of second hand goods. And then next we have vouchers, coupons, etc. These are the 5 special transactions for which we have a separate valuation methodology, means rather than going by transaction value, we can determine the value as per this rule. In that, for life insurance transactions, like for life insurance business, what should be taken? Usually transaction value will be premium received. But if you don't want to go by that, we have a separate valuation methodology which says, if it is risk cover policy, what is risk cover policy? Risk cover policy means we pay the premium, and if nothing happens, the premium will not be returned. If anything happens to the life of that person, if he is dead, then the sum assured will be given to that person. Just like how your motor vehicle insurance will be. Motor vehicle insurance, you pay premium. Nothing happens to motor vehicle, will you get that money back? No. If something happens, the insurance company will pay, correct or not? Just like that, it is risk cover policies. If anything happens to that person, money will be paid. If nothing happens, the premium paid will be lost to that person. So, entire premium will be income to the insurance company. So, that will be taken as the value. Got it? Whereas, second policy you see, single premium annuity policy. In single premium annuity policy, only one premium will be paid. That will be reinvested, and the return on that investment will be used for premium. So, in that case, 10% of the single premium will be taken as a value. Means, for example, I give 1 lakh, how much will be taken as value for payment of GST by the insurance company? 10,000. Means on 90,000 they will not pay GST. Are you understanding this? Next. Suppose if it is reinvestment policy. In case of reinvestment policy, what they will do? They will be taking amount collected, that is premium collected minus amount allocated for investment. Whatever premium I pay, they will invest in the stock market, and they will be allotting the mutual fund units. Units I will be allotting to me. Got it? So now in this case, how much it goes into their pocket? Premium collected minus amount allocated for investment. The difference only will go into their pocket now. On that only they need to pay GST. Where the amount allocated for investment is intimated to policyholder, value will be gross premium minus amount allocated for investment. If the amount allocated for investment is not intimated, then it will be normal policies. If it is all other policies, first we discuss risk cover policy. What should be taken as value in case of risk cover policy? Entire premium. Single premium annuity policy, what should be taken as value? 10% of and single premium. And if it is reinvestment policy, amount allocated is invested is intimated to the policyholder, then premium received minus amount allocated for investment. All other policies, what should be taken as a value? 25% of premium with respect to first year premium, and all subsequent year premium will be 12.5%. What is first year? What is subsequent year? This year, newly some people would have taken policy now, that is first year premium. Some people who already took will continue to pay premium now. So that will be subsequent year premium. So new premium will be 25%. Subsequent year premium will be 12.5%. Now see this question. Zindagi Life Insurance Company Limited has collected premium from subscribers and it does not intimate the amount allocated for investment. Means it is like other policies. Is it clear? To subscribers at the time of collection of premium. During the month of September, it has collected the following receipts. Premium only for risk cover 25 lakhs. Whether entire 25 lakhs will be taken as a value? Yes. Because it is what type of policy? Risk cover policy. Premium from new subscribers. So premium from new subscribers, what we need to do? Into 25%. And renewal premium how much? 80 lakhs into 12.5%. Single premium annuity how much? Into 10%. So 40 lakhs into 25% is what? 10 lakhs, 10 lakhs. 80 lakhs into 12.5%, 10 lakhs. 1 crore into 10%, 10 lakhs. So 25 lakhs plus 10 plus 10 plus 10, that is 55 lakhs will be taken as the value. Is it clear? But how much premium they collected? How much premium they collected? Can you do the total and tell me? Total premium that they collected. 25 plus 40 plus 80 plus 100. 245 lakhs they collected. Correct? 2 crore 45 lakhs they collected. But on what amount they are paying GST? Only on 55 lakhs. On remaining amount they are not paying GST na. Should they reverse the ITC on their inward supply? Insurance company will have inward supply. On those inward supply, whether they need to reverse any ITC? Not required. Even though they collected 245 lakhs as premium, but they pay GST only on 55 lakhs. Usually the remaining portion, should we treat as exempted supply? No. If you treat it as exempted supply, proportionately you need to reverse ITC. You know that na. When you have inward supply used for both taxable and exempted, proportionate to exempted, you cannot enjoy ITC. For example, I have 1 lakh ITC and 60% is used for taxable, 40% is used for exempted. Means in this 1 lakh, 40% I should not take credit. Why? Because it is used for exempted. Now like that, should we treat the remaining premium? No. The remaining premium, what is the remaining premium? 245 minus 55, 190 lakhs should not be treated as exempted. So we don't have to reverse any proportionate ITC. For that reason, they gave the clarification. Understood, pa? Clear? So, say this. Life insurance policies which includes a component of investment along with component of risk cover for life insurance are covered under life insurance business. The provision regarding value of supply of service in relation to life insurance business are contained in Rule 32 sub Rule 4. Just now we discussed that only, that Rule 32 sub Rule 4 in case of life insurance business. Okay. And it provides that value of supply of service in respect of life insurance business is primarily to be determined by deducting the amount of premium allocated for investment or savings on the policyholder's behalf from the gross premium charged. So 17 subsection 2, that is if the ITC is used partly for taxable, partly for exempted, is not applicable in this case. The circular clarifies that just because some amount of consideration is not included, are you able to see this? Just because some amount of consideration is not included in the value of supply as per valuation provision, the said portion of consideration cannot be attributable to non-taxable or exempted supply. So we need to reverse, or we are not required to reverse? We are not required to reverse. So just write down that point number 38. So Rule 32 sub Rule 4, valuation in case of life insurance business. Only a part of premium, is chargeable to GST, and remaining part is not chargeable to GST. Remaining part of premium is not chargeable to GST. That part of premium not chargeable to GST that part of premium not chargeable to GST is not treated as what? Exempt supply. Is not treated as exempt supply, and reversal of ITC shall arise or shall not arise? Shall not arise. Why we will do reversal of ITC? Why we will do reversal of ITC? When invert supply is partly used for taxable and partly used for exempted, we do the reversal of ITC proportionate to exempted. Okay. Here you are sitting now. How many of you attended my class? Remaining you have not attended the classes. Okay. But are you understanding what I am telling? Okay. Clear? Got the clarity about this? Now, they gave an example, but already we discussed that. See this, ABC life insurance, a life insurance policy includes 1 lakh annually, risk cover component is 30,000, investment component is 70,000. So we pay GST only on 30. Reinvestment policy, gross premium minus amount allocated for investment. So gross premium 1 lakh, investment 70,000, so value of taxable supply is only 30,000. So GST we pay on 5,400. Now, whether we need to do any ITC reversal? No. So 70,000 investment component is not exempted, hence no ITC reversal is required. Then next circular that we are discussing is replacement of goods during warranty and extended warranty. First we will discuss this extended warranty concept. Okay. Then we will see what is the treatment of replacement of goods during warranty. There are two issues that is addressed in this circular. The first one is related to extended warranty. Okay, carefully listen. What is this extended warranty? Whenever you buy any electronic product like smartphone or fridge, washing machine, any electronic product, they will tell, sir, 1 year standard warranty, sir, or 2 years standard warranty, sir. If you pay extra money, we will give you extended warranty. Have you observed that? Mainly smartphone, when you are buying, they will give this offer. So you are buying some 50,000 rupees worth of smartphone, they will tell 5,000 rupees extra you pay, 1 year extended warranty you will get. So if anything happens also, we will do the repair freely, etc. like that. That is the concept of extended warranty. This extended warranty charges which is collected, how we need to treat it? Should we treat it as independent supply, or we need to treat it as composite supply and apply the rate applicable to the main article? That is a confusion, for which they are telling simple. If you pay for that extended warranty at the time of purchase of the product to the same supplier who is selling the product, then it is treated as composite supply. Is it clear? Example, there is a mobile shop, Purvika Mobiles. I am purchasing iPhone. When I am purchasing iPhone, 1 lakh rupees, I pay 15,000 rupees for Apple Care Plus. What is this Apple Care Plus? If anything happens to this mobile in the next 1 year, so they will replace the mobile freely. Got it? That is this Apple Care Plus warranty, full repair coverage, accident coverage, everything will be there in that. Now, 15,000 rupees I pay extra to whom? Same supplier, same time. Got it? Now, this 15,000 will be taxable at the rate applicable to mobile phone. Suppose if I am buying TV, MI TV 40,000. I pay 8,000 rupees for extended warranty. TV rate 28%. At the same time of buying TV, I paid 8,000 extra. What is the rate applicable to that 8,000? 28%. Suppose if that 8,000 I pay later, usually we can pay later also. Within 1 month we can pay. If I pay later, then separate supply. So that 8,000 will be taxable at 18%. So which is advisable? You understood? So therefore you should know what is the rate of GST applicable for this extended warranty. Accordingly, if the product rate is 28%, don't buy the warranty at that time. Buy the warranty separately. Got it? So that you pay lower rate, 18%. If you buy the warranty at the same time, they will add this 8,000 to that 40,000 TV, and on the 28% they will pay. So government will get more benefit. You understood or not? So of course, circular they have not given all these things. I am telling you practically how you need to apply. But circular, what they said is that if you pay the warranty at the time of purchase of the product to the same supplier, then in this case it is treated as composite supply. In all other cases it will be treated as independent supply. So that is this. See here, if the extended warranty against payment is provided by the supplier of goods itself at the time of original supply, okay, it will be a composite supply. But if the supplier of goods and supplier of extended warranty are different, and the supplier of extended warranty would be distinct supplier of service, and supplier of extended warranty will be liable to discharge. Okay, so now you can make note of this point number 39. GST treatment on extended warranty charges. GST treatment on extended warranty charges. Now this is divided into two. Actually total 4 points we will see. Okay, paid at the same time of purchase, paid at the same time of purchase to same supplier, paid at different time to same supplier. You understood, pa? Same supplier only, but at a different time. Next, paid at the same time of purchase, to different supplier, Next, paid at different time, to different supplier. You understood? For example, first case, MI TV I am buying in MI showroom. I am also making the payment of warranty at the same time to MI showroom. Got it? Then it will be treated as what? Composite supply, and taxable at the rate applicable to principal supply. Next, I am going to MI showroom, purchase the TV, but I am taking the warranty separately online. Or same showroom, different time I am taking the warranty. Or I purchased MI TV in MI showroom, but I am going to a different dealer and I am taking the warranty over there. Usually warranty we can take with any dealer also. Got it? Now in that case, what is the treatment? In all these three cases, it is same. Treated as what? Independent supply, and taxable at what rate? 18%. Warranty. This warranty is like service charges, taxable at 18%. Clear, pa? So that is what they have given. Extended warranty provided by the manufacturer, supplier DEF Motors, car with extended warranty of 2 years offered at the time of purchase for an additional 10,000. So this 10,000 will be treated as composite supply. So entire amount, car plus warranty, everything will be applicable at the rate applicable to car. Okay. Suppose dealer is Auto World, warranty provider is GHA Warranties, means the one who is selling car and the one who is giving warranty is different. Now in that case, what is the treatment of this extra warranty charges? That 15,000 rupees will be treated as supply of service and chargeable to GST at the rate applicable to warranties. Is it clear? Then another issue is there, that is related to replacement during warranty. What is replacement during warranty means? You are purchasing a product, okay. Say you are purchasing one remote and that remote is not working. So you went to your home, purchased the remote, you went to your home and you are switching on your TV, etc. and all, the remote is not working. So what you will do, again you will come back to the shop and you will tell this remote is not working, give me another remote. Now the defective remote, the manufacturer will replace to the distributor na. For the dealer, the manufacturer will replace the defective remote or defective bulb. Usually bulbs and all will happen like this. In the shop, bulb will work. But when you go to home and if you put it, it will not work. Again when you go and return, he will give a new bulb. But the defective bulb, they will get the replacement from manufacturer. In that case, for the defective bulb, when they got the replacement, whether the manufacturer sending the new bulb as a replacement to defective bulb, whether they need to pay any GST on that? No. One defective bulb, now I am giving a new bulb instead of the defective bulb, but already on this defective bulb GST paid now by me. I am manufacturer, you are dealer, first I sent you one defective bulb. On that anyhow I am paying GST. At the time of sending I don't know that it is defective, so I will pay GST. Now I am sending a new one. Is it really new one or replacement to the existing one? Should I again pay GST or no need to pay GST? Got the clarity? Whenever goods are sent by the manufacturer to the dealer as a replacement during warranty, it is not treated as supply and GST not payable because GST already paid. You got it? Now I will buy the new one. I am a manufacturer, I will buy the raw material for this replacement. Can I take ITC on the raw material? Bulb by manufacturer but inside some raw material I will buy na. Can I take ITC on that? Yes, yes, but I am not selling it to you, I am just replacing. It's okay, I can enjoy the ITC. So this circular has clarified that if manufacturer replaces any parts free of cost during warranty period, they are neither liable to pay GST, correct? On the defective bulb replaced, I am not required to pay GST on the new bulb. Am I right? Nor any ITC availed on such parts needs to be reversed. Now this new bulb when I am sending as a replacement, not a supply, GST not payable, but can I enjoy the ITC? Yes, which is actually exception to the general rule. When you are not paying GST on your outward supply, you cannot enjoy the ITC on your inward supply, but this is an exception to that. Is it clear? Respond, you understood or not? So therefore, first GST also not payable, but they can enjoy the ITC. But this is applicable only in case of replacement of parts during warranty. Okay. So write down point number 40. So treatment in case of replacement of parts or goods during warranty by manufacturer. So first there is a manufacturer, and this manufacturer is replacing the parts during warranty to the dealer. replacement of goods during warranty. Now for this replacement they will buy the inputs, correct? Invert supply used in replacement goods. Invert supply used in replacement goods. Now what is the treatment of this replacement of goods during warranty? Supplier, not a supplier? Not a supply. Why not a supply? Already GST paid on the old one. What they will do with the old one? They will throw only, na? Already they paid GST on that. That's why on the replaced one, no need to pay GST. Not a supply and GST not payable. On replaced product. On this, can they take ITC? ITC available or ITC not available? ITC available and not required to be reversed. And not required to be reversed. Then finished. So that's what they have given. The circular, the clarification via the previous circular will be equally applicable when the entire goods supplied are replaced. If the distributor replaces the parts or goods during warranty from his own stock on behalf of the manufacturer and gets replenishment of the same treatment will apply. That is, manufacturer is neither liable to charge any GST or liable to reverse any ITC. And extended warranty already we discussed. Okay. Next, so there is one query to one friend. Sir, what if the product came for replacement, is repaired and again sold to a different person? Then it is a new sale, GST payable. Now the defective product manufacturer received, he will rectify the defect and he will sell it. That is not replacement, that is sale. Whether GST payable? Yes, GST definitely be payable at that time. Next, another one is related to entitlement of ITC by insurance companies on the expenses incurred for repair of motor vehicles in case of reimbursement mode of insurance claim settlement. It's a very good issue. Generally what happens, so whenever we take a insurance on our vehicle and our vehicle is meeting with an accident, we go to the workshop. Now workshop will do the repair. One point which I discussed yesterday was complete loss of vehicle, but now it is not loss of vehicle, the vehicle is there, but there is a repair that is required for that vehicle, so therefore the workshop will do the repair. Now you tell me, workshop will raise invoice to whom? Workshop, for example, I am the owner of the vehicle, I give the vehicle for repair to the workshop. Now workshop will raise invoice to me or to the insurance company? If they raise invoice to me, I cannot take ITC. Insurance company also cannot take ITC. Why? Because it is a blocked credit. General insurance is a blocked credit. Insurance in relation to motor vehicle is blocked credit, because if the motor vehicle purchased is eligible for ITC, then the insurance is also eligible for ITC. If the motor vehicle purchased is not eligible for ITC, the insurance also not eligible for ITC. There are 4 services in relation to motor vehicle which are block credit. What are the 4 services? Repair and maintenance services, general insurance services, then authorized service center services, hiring of motor vehicles. These are the 4 inward supply in relation to motor vehicle which is blocked credit. However, if the motor vehicle purchased is eligible for ITC, on these 4 also whatever GST paid can be availed as ITC. Okay. So say this, you can see this information in your book, blocked credits. This information is in blocked credits. Check page number 159. Page number 159. You are purchasing motor vehicles and motor vehicle purchase is used for transporting persons, then capacity exceed 13 is not a block credit. Always ITC will be available. Capacity exceed 13. While doing capacity, we need to include the driver's seat. And so what are those vehicles? Buses, tempo travelers, etc. and all. If you buy, ITC will be available. Suppose if it is used for transporting persons and the capacity does not exceed 13 including driver, and it is a blocked credit, ITC not available. But 3 exceptions are there. If it is used for further supply, for example, I am buying a car and that car is used for travels, can I take ITC? Yes. First, car is a motor vehicle for transporting persons, capacity does not exceed 13 and it is used for further supply, so ITC will be available. Used in the business of transportation of passengers, then also I can take ITC. So then used for driving schools, so I am a dealer in car, I am buying and selling car, I can take ITC. I am using the car for the purpose of travels, I can take ITC. I am using the car for the purpose of driving school, I can take ITC. Only 3 exceptions. In other cases, it's a block credit, ITC not available. Then second one is vessels and aircrafts. Vessels and aircrafts also block the credit, but we have 4 exceptions. In these 4 exceptions, these 3 exceptions are common. Further supply, used in the business of transportation of passengers, imparting driving schools, and used for transportation of goods. In these 4 cases, ITC available. Other cases, ITC not available. And all other cases of motor vehicles, other motor vehicles, what are other motor vehicles? Lorry, truck, etc. and all, ITC always available. Is it clear? Now, next point you see, there are 4 services in relation to motor vehicles. What are the 4 services? Repair and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. And if the motor vehicle purchased is eligible for ITC, then these 4 services also eligible for ITC. If the motor vehicle purchased is not eligible for ITC, then on these 4 services also ITC will not be available. Is it clear? For example, I am purchasing a car. I am a professional. I am purchasing a car and I purchase a car in the name of the business, but it is used for my travel. Can I take ITC with respect to the car purchase? No, because first, is it used for further supply? Am I selling the car, renting the car, etc.? No. Am I using it in the business of transportation of passengers? No. And am I using it for imparting driving skills? No. Means car is not eligible for ITC. For this car, I have taken insurance. Can I take ITC on the insurance? No. For this car, I have paid for repairs and maintenance. Can I take ITC on the repairs and maintenance? No. Is it clear? Suppose if I am a Ola driver and I purchase a car for driving it for passengers. Now can I take ITC on the car purchase? Yes. Now for that car, if I receive repair and maintenance, can I take ITC? Yes. Are you getting this? Clear here? Now, why insurance company cannot take ITC? Invoice is in whose name? My name. When invoice is in my name, insurance company cannot take ITC on the repair and maintenance expenditure. Is it clear? Suppose if invoice is in the name of insurance company, can they take ITC? Yes. Always? Yes. Always yes? Yes. See the note below. See the note below. Repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. Got it? So this repair service, insurance service or servicing of motor vehicles, who is receiving? General insurance company. They don't own the motor vehicle. They give the insurance for the motor vehicle. You buy motor vehicle, they give insurance. But the repair expenditure they will bear na. Can they take ITC? Yes. But one condition is what? The invoice should be in their name. Their name. Then only they can take ITC. You got it? But sir, reimbursement mode. What is reimbursement mode? First, I will pay to the garage. I will pay to the garage or I will pay to the workshop and reinsurance company will reimburse me. In that case also, can the insurance company take ITC? Yes. But there is one issue na. If you need to take ITC, you have to make payment to supplier within 180 days from the date of invoice. That restriction is not applicable to insurance company. Insurance company is not directly paying to garage. Who is paying to garage? Insured is paying to garage, but insurance company can take ITC. Is it clear? So for that purpose only, they gave this circular, say this: ITC is available to insurance companies for motor vehicle repair expenses incurred by them in case of reimbursement mode of claim settlement. This is because the insurance companies qualify as a recipient and consideration includes payment made by third person. Some scenarios may exist where the amount of repair service is more than the approved claim cost. This is an issue. Say 1 lakh rupees is the repair expenditure, but entire 1 lakh insurance company will not bear. Insurance company will bear only 80,000. So insured paid 1 lakh, but insurance company reimbursed only 80,000. But the invoice of 1 lakh is given to insurance company. Now tell me how much ITC can the insurance company take? Only to the extent of 80,000, because how much they paid? 80,000. That is this. Some scenarios may exist where the amount of repair service is more than the approved claim cost and the insurance company only reimburses the approved claim cost to the garage after considering this standard deduction. The remaining amount is to be paid by the insured to the garage. Here the circular clarified on following two scenarios. If the garage issues two separate invoices, one to the insurance company regarding the approved claim and the customer for the remaining amount. Suppose if the garage gives two invoices, one invoice for 80,000 to insurance company, another invoice for 20,000 to the insured. ITC is available to the insurance company on the said invoice, subject to the reimbursement of the said amount by insurance company to the customer. So 80,000 only invoice, they are also reimbursing 80,000, so they can take ITC. What if the garage issues an invoice for the full amount of repairs, means entire 1 lakh invoice is given to insurance company, while the latter, that is insurance company, makes reimbursement only for approved claim cost, that is 80,000. Now ITC is available to insurance company only to the extent of reimbursement of approved claim, not on the full invoice value. Is it clear? ITC is available to insurer only when the invoice for the repair of the vehicle is in the name of the insurance company. Got it? So they have given some examples, but we understood all these things. Just write down. ITC to insurance company on the repair expenses. Point number 41. ITC to insurance company on repair expenses. ITC to insurance company on repair expenses. First, invoice should be in whose name? ITC is available only if invoice is in the name of insurance company. Even if payment not made by insurance company to garage, even if payment not made by insurance company to garage, ITC available as they are reimbursing to whom? Insured. As they are reimbursing to insured. If reimbursement amount is greater than, if reimbursement amount is less than, if reimbursement amount is less than invoice amount, proportionate ITC available to insurance company proportionate ITC available to insurance company with respect to what? With respect to reimbursement amount. With respect to reimbursement amount. Just these 3 points you need to remember. Okay. ITC available to insurance company only if the invoice in the name of insurance company. Even if the payment is not made by insurance company to the garage, but they are reimbursing to the insured, then also they can take ITC. Suppose if the reimbursement amount is less than the invoice value, they can take ITC only to the extent of reimbursement amount. Okay. So I'll take a break and then we will continue with the remaining part. There is one issue. One question for one student. Sir, if the part is replaced by some outsourced service and ITC is available for that service, why will the part be replaced by some outsourced service provider? The part will be replaced by manufacturer. You are a dealer, pa. Who supplied you that product? Manufacturer. If there is a defect, the manufacturer only should replace, na. So manufacturer only usually replace. That's why they have given the circular from manufacturer point of view. Sometimes what they do is that you use it out of your stock. Already you have 10 bulbs. One bulb you take out of your stock and you will replace. And that replaced bulb, the manufacturer has to replace, na. Are you getting this? Out of the stock, you have 10 bulbs, you took that and you replace. Because the shopkeeper will not say, okay, this defective bulb I will send back to manufacturer, you wait for 10 days and the bulb will come, at that time I will give you. Until that point of time, without bulb, how can I sleep in my house? Or how can I live in my house? Are you getting this? So I will ask him, I don't wait for 10 days and all, you give me another one. So he will have some stock, using that he will replace, correct? Now that stock what he has used needs to be replenished by whom? By the manufacturer. Then also same story, he will send the new one on that no GST and he buys the raw material or input services, he can take ITC on that. Okay, fine. We'll meet after 15 minutes. Okay, we'll start. Extremely sorry, Pa. I just took a big break due to some personal emergency. So that's why. Sorry for that. Fine. So can you please advise on how to effectively revise day before exam? Only half day is available. Happily sleep. If you are writing both the groups, my personal suggestion is after exam, I think what is your paper 18? I think before 19 is what? Group 3, group 4, like that only na they will conduct. So what is a group 3 exam? DT, DT. After writing DT, definitely it is like you badly need a sleep. So sleep properly, and evening onwards, you just take and start doing solving the problems. Don't read. Time will not be sufficient. You cannot read anything and all. Okay, just solve the problems, and to the extent how much ever problems you can solve, you solve that quickly. Question answer, question answer, question answer, like that. Next day morning, you just revise the topics like place of supply, because place of supply is something which usually we will forget. So anyhow exam is in afternoon only na, morning. So morning somewhere like 7 o'clock you get up. Place of supply usually we forget. Place of supply you revise. Then in my website I have uploaded time limits and monitor limits. Okay, for CA CMA it is both are same. Provision will not change na. So here you can see monitor limits under customs and GST. I have just given the monitor limit. You just go through that monitor limit. For example, eligibility to opt for composition scheme. What is a monitor limit? Then gift by employer to employee. What is a monitor limit? Like that, you just go through this monitor limit. Hardly it is what? Some 9-page information. Pa. Just to know what are all the monitor limits. Useful for MCQ. In MCQ it will help. Then one more is there, that is time limits. So this is monitor limits na. Time limits also is there, that is around some 13 pages. This also, all time limits I have given. This will be useful for MCQ. This 30 marks will be taken care with this. And even in the descriptive questions also somewhere you can apply these things. Okay. So what you need to do on the day of exam morning, so how much time you will have? Some 2 hours time you will have, assuming you get up at 6 o'clock, 6 to 7, 7 to 8. Like that you will have time, 2 hours, because the CMA exam centers and all nowadays they are giving some 15 kilometers outside and 20 kilometers outside, like that. So you have to travel and go, no. So therefore these two things you revise. Then on the way you are traveling, okay, don't read anything, but in our YouTube some revision videos etc. and all will be there. So whichever topic you feel like, like your exemptions and all, just listen and go. You got it? That's the only thing you can do, because unlike CA final exam, for those students who are writing both the groups in CMA exam, you don't have that much time. So many times I feel like CA students are blessed in that. One day, if they are writing both groups also, 1 day gap is there. I don't know why CMA Institute is not doing like that. Maybe because that many days rent cost they wanted to reduce, because we are good at cost saving now. Understand? So therefore maybe because of that reason you can do that. Okay, then so the next area that we are moving on to is ducts and manholes. Clarification regarding availability of ITZ on ducts and manholes used in the network of optical fiber cables. So usually what happens is that these telecom companies and all will lay down the line, fiber net lines beneath the earth. For that they create the manhole, then one pipeline they laid down. Can we take ITC on this ducts and manholes? Usually construction expenditure is blocked credit. Any service in relation to construction of immobile property or any goods purchased for construction of immobile property is a blocked credit. Generally we cannot take ITC with respect to that. Okay, when we cannot take ITC with respect to that, we have some exceptions. What are those exceptions? You can see in the blocked credits I have given that construction related block credit, page number 160. You can see any service in relation to construction of immobile property or works contract or goods purchased or received in relation to construction of an immobile property, ITC not available on those inward supplies. Okay. However, we have three exceptions. Exception number one, this discussion is not applicable to this supplier. For example, I am a builder and I buy the raw material, I buy the material for construction, I can take ITC. If I receive the services, I can take ITC. You being the owner of the property, you cannot take ITC, but I can take ITC. So, the above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of immobile property, then ITC can be availed on construction services. Second exception is construction of plant and machinery. Plant and machinery always ITC can be availed, even though it is immobile in nature. But plant and machinery excludes, so telecommunication towers and pipeline laid outside factory. Then the third exception. Third exception is if the construction expenditure is charged to P&L rather than capitalized, but charged to P&L, then also ITC available. If construction expenditure is charged to P&L, then also ITC available. Now, look into the second exception. This optical fiber cable networks, etc., will it come under telecommunication towers? Yes or no? Tower is on the top, pipeline is below. How these two are same? These are not same. Are you understanding what I am telling? Pipelines which they lay down beneath the earth, is it telecommunication tower? No, telecommunication tower is different, na? Correct. So it will not come under telecommunication towers. Okay. Will it come under pipeline laid outside factory? No, because it is for the manufacturer who lay down the pipeline outside the factory gate, not for the telecom companies. Therefore, the circular clarifies that on these optical fiber cables as well as manholes, they can take ITC because it will come under plant and machinery. Consequently, ITC is available to them. It will not fall under telecommunication towers and pipelines laid outside factory. That is what they have given. Say this. The circular has clarified the issue of availing ITC on ducts and manholes used in network of OFCs, which was denied as the same was given in the blocked credits. Now it has been clarified that availing ITC on ducts and manholes used in the network of OFCs is not restricted. Why it is not restricted? See, this is what ducts and manholes means. What they do is that, so beneath the land they will put the pipes. In that pipe lot of fiber cables and all will be going. Okay. Now, so ducts and manholes are basic components for optical fiber network used in providing telecommunication services, and ducts and manholes are not specifically excluded from the definition of plant and machinery, as they are neither in the nature of land, building or civil structures, nor they are in the nature of telecommunication towers or pipelines laid outside factory. Therefore, whether ITC is available or not available? Available. So write down point number 42, just 2 lines. ITC available on ducts and manholes laid down for optical fiber network. ITC available on ducts and manholes laid down for optical fiber network, as the same falls under plant and machinery. As the same falls under plant and machinery. Then next one, done. So they have given an example related to this. Then there is one amendment, but this amendment is actually not applicable for your exam, but they have given previously input service distributor, like that one concept was there, and there is an alternative to that concept called as cross charge. Either they can follow input service distributor or cross charge. What is the difference between these two? Please listen. First, input service distributor is that there is a head office. That head office will receive the services and distribute the credit to the branch offices. So there is a corporate office. Under the corporate office we have 4 branches or 4 factories. The corporate office will receive the common services, will pay the GST, take the ITC and will distribute that ITC to the branches. This is called as ISD, Input Service Distributor. Okay. Now here the head office need to take a separate registration, file returns and distribute the credit as per the turnover ratio, like that lot of conditions are there. Alternatively, can one branch office take the credit and in turn raise the invoices to the other branch offices? That is also possible. That concept is known as cross charge. If we go it to head office and then goes to the branch, it is called as input service distributor. Rather than raising invoice to the head office, we will raise invoice to branch 1. Branch 1 will in turn raise invoice to branch 2 and branch 3. This concept is known as cross charge. But the advantage in cross charge is that we don't have to follow turnover ratio. In input service distributor concept, we need to follow the turnover ratio, but in cross charge we don't have to follow turnover ratio. That's the reason why they go for cross charge. Is it clear or not? Then with effect from 1/4/2025, this cross charge concept is omitted, which means only ISD. Only ISD should be followed. Okay. So with effect from 1/4/2025, only input service distributor concept needs to be followed and there is no concept of cross charge. Okay. And as you are appearing for June 2025 exam, all amendments up to November 30th will be applicable for you. So as this applicability is from 1/4/2025, this will be applicable for those students who are appearing for December exam. Okay. So for your June exam, whether cross charge is applicable or not applicable? Applicable. For your June exam, cross charge is applicable. For December exam only, cross charge is not applicable, because from 1/4/2025 only ISD is made mandatory. Just that line alone you write down. Okay. So point number 43. Concept of ISD, input service distributor. Input service distributor, ISD, concept of input service distributor, ISD, needs to be mandatorily followed. Needs to be mandatorily followed. Concept of ISD needs to be mandatorily followed with effect from 1/4/2025. Okay. Next. So this credit distribution and all we don't have to bother, that is simple. ISD concept only is what they have given, but that should be mandatorily followed from 1st April. Then already you know about ISD na? You want me to discuss? You know about ISD concept. Okay. Say this. The next one is section 16 subsection 5. Newly they have added one section. Section 16 subsection 4 is the time limit for availment of ITC, and they have added one new section, that is for the financial year 17-18 to 2021. From which financial year to which financial year? 17-18 to 2021. If the ITC has been availed beyond the time limit and if it is disallowed, again I am repeating. So what are the financial years we are talking about? Financial year 2017-18 to financial year 2020-21. For these financial years, what happened? You availed the ITC. You availed the ITC, but you have availed it beyond the time limit. Okay. ITC availed beyond time limit. ITC availed beyond time limit. Okay, but before 30th November 2021. So, financial year 17-18 to financial year 2021, you have availed the ITC beyond the time limit, but before 30th November 2021 and got rejected or got disallowed by department, got disallowed by department. You understood? So, what, sir? That ITC can be re-availed now. That ITC can be re-availed now because government lost the case in court, Supreme Court. So, usually government will win the cases, but government lost the case. Why government lost the case? Because at that time from 17-18 to 2021, this GSTR 3B concept was not there in the act. It was only GSTR 3. And GSTR 3 never seen the daylight. So, therefore, due to that reason, Supreme Court said you cannot restrict them to avail the ITC because 3B itself is not required to be filed, and moreover they are not required to file annual return also for these financial years. So, due to that reason, you have to allow the ITC to them even if they have availed the ITC late. And 2021 onwards only they brought in the new time limit for availment of ITC as 30th November of the next financial year, etc. and all. So, due to that reason, by 30th November 2021, if they have availed the ITC for these financial years, even though it is beyond the time limit at that time and it got disallowed, that ITC needs to be allowed. Okay, such ITC needs to be allowed. ITC needs to be allowed. Okay, ITC needs to be allowed. That is this amendment. You read it, you will understand. So, first, so notwithstanding anything contained in subsection 4 in respect of an invoice or debit note for supply of goods or service or both pertaining to financial year 17-18, 18-19, 19-20, 20-21, the registered person shall be entitled to take input tax credit in any return under section 39 which is filed up to 30th day of November 2021. So, what is the time limit by which we should have availed the ITC? 30th November 2021. Then it will be allowed to them. Got it? Sir, how to claim this ITC? Whatever is allowed, how to claim this ITC? For that, they have given a special procedure. You can see here, special procedure that is given for availment of ITC under section 16 subsection 5. They need to file an application. The registered person must file an application for rectification of the order electronically. Such application to be filed within 6 months from the date of notification, and officer must issue the rectified order within 3 months from the date of application. Okay. So, this is the process which they have given. So, how this ITC can be allowed? ITC needs to be allowed. How this ITC needs to be allowed? Upon application. By whom? Application by registered person whose ITC is disallowed. Whose ITC is disallowed. Okay. So, this much you remember, that is sufficient for this. Then next amendment, finished amendment of this financial year 17-18 to 2021, ITC availed beyond the time limit but before 30th November 2021 and got disallowed by the department. ITC needs to be allowed upon application by registered person whose ITC is disallowed. Then next one, 45, 16 subsection 6, like that one more section they have added, 16.5. So far whatever we discussed is 16.5. You see one example for 16.5. A registered taxpayer ABC Limited received a service invoice dated 15 March 2021 for financial year 2021 but failed to claim ITC in the return filed within the original deadline. So the taxpayer later claimed his ITC in September 2020 return filed on 20th October 2021. So before amendment, tax authorities could disallow the ITC claim citing the time limit under 16(4), but now ITC can be availed because it is claimed before 30th November 2024 even though it exceeded the original time limit under 16(4). But this is only for which financial year? 17-18 to 2021. Be careful, if you are getting a question related to this, you should check which financial year it is. 17-18 to 2021 only this facility is given. Then 16 subsection 6 of CGST Act. So let's try to understand the background of this. First, your registration got cancelled. When your registration got cancelled, so you have to make an application for revocation of cancellation of registration. First, officer is cancelling your registration, they gave a cancellation order. Then you request the officer, sir, please allow me to continue in the registration. So you need to make an application for revocation. After you make application for revocation, the officer will say, okay, I will forgive you. You continue with the registration, like that they will pass a revocation order. Now, whatever ITC that you have not taken during this time, because during this time, which time to which time? From the order of cancellation to revocation order, you cannot take ITC. Why you cannot take ITC? Because during this period you cannot file the returns. Are you getting this? So you cannot take ITC. So for that reason they are telling you can avail the ITC even though the time limit is expired within 30 days from the revocation order. You got it? Whatever ITC that you have not availed at that time, you can avail now even though it is beyond time limit. Is it clear? Provided it is within 30 days from revocation order. Say this, where the registration of a registered person is cancelled under section 29 and subsequently the cancellation of registration is revoked by an order either under section 30 or pursuant to any order made by the appellate authority or appellate tribunal or court, and where the availment of ITC in respect of an invoice or debit note was not restricted under subsection 4 on the date of order of cancellation of registration, the said person shall be entitled to take ITC provided the return is filed up to 30th November of the succeeding financial year or furnishing the relevant annual return whichever is earlier. This is your regular time limit or for the period from the date of cancellation of registration or the effective date of cancellation of registration as the case may be till the date of order of revocation of cancellation of registration where such return is filed within 30 days from the date of order of revocation of cancellation whichever is later. So they pretty much confuse this, okay. That is they are telling your regular time limit or 30 days from revocation order whichever is later. Definitely later will be 30 days from revocation order. By that time we can definitely take ITC, okay. So let's try to make note of this with the help of the dates so that you will understand, okay. So now concentrate, you can parallelly write down financial year 2024-25. For this financial year 2024-25, what is the time limit by which you need to avail the ITC? 30th November 2025, okay. What happened on 1st October? On 1st October 2025, they gave a order for cancellation. Order for cancellation of registration. Order for cancellation of registration. And for this financial year 24-25, ITC not availed as on this date. ITC not availed. Got it? They could have availed, but they have not availed because they thought still they have a time limit. What is the time limit? What is the time limit for availment of ITC? Time limit for ITC. Time limit for ITC. What is the time limit for ITC? 30th November 2025. So they have the time limit. So they thought we can take later, but they got the cancellation order. Because they got the cancellation order, they could not avail the ITC and they made an application for revocation and they got the revocation order. When they got revocation order 5/1/2026, they got revocation order. 5/1/2026, they got revocation order. Okay, but the time limit avail ITC is expired. Now tell me, what is the time limit by which they can take ITC? What is 30 days from this date? What is 30 days from this date? The 30 days from this date is 4/2/2026. Okay, 4/2/2026 is 30 days from revocation order. This is the time limit by which ITC to be availed for financial year 24-25. Got the clarity, pa? Even though the time limit is expired, but still they can take the ITC within 30 days, because what is the time limit for availment of ITC? The regular time limit. What is regular time limit? 30/11/2025 or 30 days from revocation order. What is 30 days from revocation order? 4/2/2026. Whichever is later is 4/2/2026. Okay. Suppose if this ITC is rejected in the past, can we again take the ITC? Yes. This is not only for prospective, even for the past periods also this will be applicable. How to claim ITC? Same procedure. We need to make a application and the officer will allow. Okay. So write down below. Above amendment is applicable for ITC disallowed with respect to past period. ITC disallowed with respect to past period. An application to be made by registered person. An application to be made by registered person. Okay. So that is this. Revocation by tax authorities. A taxpayer XYZ Limited had its GST registration cancelled on 15th March 2024 for non-filing of returns. The registration was reinstated on 1st August 2024 upon filing an application for revocation. XYZ Limited has issued invoices from February 2024 to July 2024. February to July 2024 means in between this period, correct? 15th March 2024 to 1st August 2024, in between this period. So they have got the invoices for which ITC was not claimed. Okay. Now here what happened, XYZ Limited can claim ITC for the invoices dated before cancellation. What is the invoice dated before cancellation? February, because cancellation is from 15th March na. For February month, whatever invoices is there, these invoices belongs to which financial year? 23-24. What is the regular time limit? 30th November 2024 or 30 days from the revocation order. What is 30 days from revocation order? 31st August 2024, whichever is later. So therefore by 31st August 2024 they can take ITC. And what about the cancellation period? For that cancellation period also they can take ITC by 31st August 2024. Okay. Then next, revocation by court order. For revocation by court order also it is same. Here they have just messed this. They are telling invoices before cancellation. These invoices for financial year, so ITC can be claimed up to 30th November 2024. And if you observe here, 30th November 2024 or 31st August 2024, whichever is later is what? 30th November 2024. In my example, what I have given, whichever is later is 30 days from revocation order. Whatever example that CMA Institute has given is, whichever is later is 30th November itself. Got it? Correct or not, pa? But 30th November or 31st August, which is later? That's why by 30th November, because the later date will be 30th November. They should have given like this an example so that it will be relevant. Okay. Then even revocation by court order, same. A taxpayer ABC Private Limited has its GST registration cancelled effective from 1st July due to tax arrears. On 15th April, Appellate Tribunal revoked the cancellation and reinstated the registration. So retrospectively, ABC Private Limited has invoices from June 2023 to March 2024. It is for which financial year? 23-24. For 23-24. So what is the time limit for availment of ITC? 30th November 2024 or 30 days from 15th April. What is 30 days from 15th April? 15th May 2025. Whichever is later is what? 15th May 2025. That is the time limit for availment of ITC. You got it? Whichever is later. Then what is the procedure for availing this ITC under section 16.5 and 16.6? So the procedure for both cases, both the above cases, whatever we have discussed is same. First, application to be made. What is the time limit within which application to be made? 6 months from the date of notification. So you write down below, this is point number 46. Procedure for availment of ITC, disallowed which can be availed based on section 16.5 and 16.6. Whatever we have discussed above is section 16.5 and 16.6. This 44th amendment what we discussed is section 16.5 and this 45th point what we discussed is section 16.6. What is the procedure for availment of ITC? First, what we need to do is that we need to make an application. What is the notification date? What is the date of this notification? When this notification was given? 8th, 16.5. is notification number. We inserted dated 16.8. Sorry. Procedure notification. 8th October 2024. So what is the date of notification? 8th October 2024. Date of notification. From the date of this notification, within 6 months, what we need to do? We need to make application for rectification to avail ITC. Once we make rectification, what will happen? Once we make the application for rectification within 6 months, the officer must issue the rectified order within 3 months from the date of application. So from the date of application, within 3 months, rectification order by officer to avail ITC. Got it? Then summary of rectified order. Once the rectification is made, the authority must upload a summary of the rectified order. Opportunity of personal hearing. If the rectification process adversely affect the registered person, so he should be given opportunity of being heard. Okay, but you remember just this procedure, that is sufficient. So 6 months point to 3 months point. Within 6 months from the date of notification, we need to make an application for rectification of that order to avail the ITC, and within 3 months they will pass the rectification order. See, all these things are little boring only, not that great, but why to take a chance? We will read, not important and all. What is really important, I already said is important. So these things you should be knowing somewhere in a place in MCQ or some other place if they have given. So why should we take a chance? For that reason we have discussed this. Then extension of ITC claim deadlines, already all these things we covered in our discussion, and we are moving on to the 12th point, amendment of section 17. Section 17 blocked credit, previously there was reference to 74, 129, 130 like that, but that is now substituted only for section 74. It is not a great amendment because simple pa, how can you take ITC? Only matched ITC can be taken. What is matched ITC? If the supplier has filed GSTR 1, then only that ITC will come in our 2B, then only we can take ITC in our 3B. Suppose if supplier has evaded the GST, we will not file GSTR 1. When he is not filing GSTR 1, naturally it will not come in 2B. If it is not coming in 2B, we cannot take the ITC in 3B. So that is irrelevant now. Means supplier has defaulted tax and it has been recovered from him under 74. Means definitely he would not have reported in GSTR 1 na. If he has reported in GSTR 1, it is not a fraud. As it is not a fraud, the recovery would not have happened under 74. Is it clear or not? So he has not at all reported in GSTR 1. Naturally, it will not come in 2B. So we cannot take ITC in 3B. That is this point. Then manner of recovery of credit distributed in excess. This also I told you that we can, that is wherever the reference to 73, 74 is there, the reference of 74A is added. That is, this is common in every place. Where and all we have 73, 74, in that place a new section is there. What is that? 74A. That 74A will be applicable. Then clarification on availability of ITC in case of demo vehicles. What is this demo vehicles? Usually for test drive and all, we use some vehicles na. So we go to the showroom, and if you are buying any vehicle, you will ask for the vehicle as a test drive, and on this test drive vehicle, can the dealer take ITC? Basically, this test drive car is a motor vehicle used for transportation of persons. Capacity does not exceed 13. Is it covered under further supply? No, it is not covered under further supply, because the test drive vehicle they are not selling. They will sell some other vehicle. Means on the test drive vehicle, ITC should not be logically taken. But CBIC gave a clarification stating that that test drive vehicle will help in sales. Due to that reason, they can take ITC on the test drive vehicle. Is it clear? So here are numerical examples based on the legal framework. So demo vehicle not capitalized. Suppose if it is capitalized, ITC can be availed. Even then, definitely demo vehicle will be capitalized. They will not charge it to P&L because it's not inventory. It is asset. Only inventory will be not capitalized, but asset will be capitalized. Demo car is an asset. Definitely it will be capitalized. Okay. But while capitalizing, there is one important condition. They should not have computed depreciation on the tax component. If they have capitalized for tax component, then they will not get ITC, because we have one condition. What is that? If depreciation is computed on the tax component, then ITC not available. Okay. So dealer A purchased a demo vehicle for 10 lakhs, excluding GST to showcase features and provide test drive to potential customers. GST charged by the supplier is 1,80,000. Dealer A uses the demo vehicle to promote the sale of similar vehicles. Now, in this case, can they take ITC? Yes. How they can take ITC? Because it will come under further supply, not directly but indirectly. So, since demo vehicles are used to promote the sale of similar vehicles, they are considered as being used for further supply of such motor vehicles. So, ITC will be allowed. Okay. But what if demo vehicle is capitalized including the GST component? That is next scenario. They purchased a demo vehicle for 12 lakhs, GST charged is 2,16,000. Dealer B uses the demo vehicle for test drive and later sell it after 2 years for rupees 8 lakhs. Okay. So, while capitalizing, so they should capitalize only for the vehicle. Okay. If they should not have claimed depreciation on the GST component. If they claim the depreciation on the GST component, then ITC not available. Okay. So, you write down this point first. So, point number 47. ITC treatment in case of purchase of demo vehicles. ITC treatment in case of purchase of demo vehicles. ITC can be availed or cannot be availed? ITC can be availed. ITC can be availed. In brackets, blocked credit not applicable. ITC can be availed as the same indirectly promotes what? Further supply. Next, GST component should not be capitalized. Okay. GST component on such vehicle purchased should not be capitalized. For claiming depreciation. Suppose if they capitalize for claiming depreciation, ITC cannot be availed. Okay, that we know. Now, this demo vehicle may be sold in future. Yes. When it is sold in future, then what is the treatment in case of sale of the demo vehicle? No, today we avail ITC. In future we sell the demo vehicle. At that time, should we pay GST? Yes. We are selling, na? When we are selling, it is supply under 71A. Then we need to pay GST on sale of the demo vehicle. But how much GST we need to pay on sale of the demo vehicle? Full sale price, full sale price into GST? No, there is one section, 18 subsection 6. 18 subsection 6 says, if you have purchased any capital goods on which ITC availed, on disposal of that capital goods, we need to pay GST as A. ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, or GST on sale value of that capital goods, whichever is higher. This is the GST payable under 18 subsection 6. You can see in your book the reference related to 18 subsection 6 which I have given. So 18.6 you can see in page number 166. In page number 166 you can see when 18.6 will be applicable, supply of capital goods on which ITC is availed. So what we need to do, see there, view 2 for exam, First you need to take total ITC minus 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of supply, or GST payable on such capital goods, sale value of such capital goods, whichever is higher, that should be taken. Got it? So write down, on disposal or on sale of such, upon sale of such demo vehicle, GST payable in terms of section 18 subsection 6. What is that 18 subsection 6? That is A, ITC availed minus 5% for every quarter or part thereof, every quarter or part thereof, or B, GST on sale value, whichever is higher or whichever is lower, whichever is higher. Clear? So these are the 3 points you need to remember related to that demo vehicles, and they can make a question also like this, that is this question. What they have done, the dealer B capitalized the vehicle and 2,16,000 ITC available. Now they are selling the demo vehicle. At what rate they are selling the demo vehicle? 8 lakhs. Now what is the ITC to be computed? So simple, we need to reduce the ITC by 5% for every quarter or part thereof. Say it has been used for 8 quarters. What is the ITC availed initially? 2,16,000. 2,16,000 minus 5% into 8 quarters. So 5 8s are 40. 2,16,000 minus 40%. See how much? 2,16,000 minus 40%. Minus 40%. 1,29,600, or GST on sale value. What is the GST on sale value? 8 lakhs into 18%, 1,44,000, whichever is higher. Which is higher? So that will be the GST payable. Is it clear? Next. Suppose if demo vehicle with depreciation on tax component, they purchased a demo vehicle for rupees 15 lakhs and 2,70,000 GST. What if they capitalized entire 15 lakh plus 2,70,000? ITC available, ITC not available? ITC not available. What if they sell the demo vehicle without capitalization? Simple, just the sale value into GST. But this 18 subsection 6 will be applicable only if it is capitalized. If it is capitalized, if it is not capitalized, we will pay GST on the normal sale value. Okay. Upon sale of such a demo vehicle, GST payable in terms of 18(6) etc. In brackets write down, only if such demo vehicle is, only if such demo vehicle is capitalized. If such demo vehicle is not capitalized, if such demo vehicle is not capitalized, comma, upon sale, GST payable on normal sale value, on normal sale value. But trust me, practically they capitalize because it's an asset, it is not an inventory. So usually they capitalize, but they have just given a combination. What if it is not capitalized? So 18(6) will not come. 18(6) will come only if it is capitalized. So if such demo vehicle is not capitalized, upon sale, GST payable on normal sale value. Okay. So that's what they have given. Next, we have another one, registration. I don't know why they gave registration. First of all, registration chapter is not there for CMA final. But in supplementary study material, why they gave registration, I am really clueless, because you can check the study material. In study material, nowhere we have registration chapter, but they gave this, okay. So you don't have to make note, but just in case if it is asked, na, so why should we take a chance? You don't write anything, just listen to it once. Simple pa. That is, there is one point now which says that, so biometric Aadhaar authentication, they have now brought to across all the states. What is biometric Aadhaar authentication? Previously, Aadhaar authentication is based on OTP verification. Now the Aadhaar authentication is based on biometric. That is, one app will come. In that app, we need to open and see. You need to speak. They will capture your eyeballs, and even if required, your fingerprint you need to give. And that's how they will cross verify whether it is really you or not. Okay. So that is known as biometric based Aadhaar authentication. Now they have enabled it across the country. Okay, previously it started in Gujarat and now they have extended. So just one line you remember. Registration process requiring biometric Aadhaar authentication and photograph taking will no longer be limited to Gujarat alone. It is extended across the country. Then next one, what if a person is not having Aadhaar number? How will they get registration? For that purpose, they need to go to the nearest facilitation center and they need to, give the other address proof, ID proof, etc. Okay, the physical, and along with that one photograph also they need to carry. That is this. Additional verification for non-Aadhaar authenticated applicants. For persons not opting for Aadhaar authentication, they should take a photograph, and so that photograph along with the original copy of the documents should be given to the nearest facilitation center notified by the commissioner, just to check whether that person is real person or not. If it is Aadhaar, they will verify. What if there is no Aadhaar? So that's why one photograph along with other documents they need to take and go. Okay. Then next one, here for revocation of cancellation. So what is the time limit within which we need to make application for revocation of cancellation? It is not 30 days. So the 30 days point is now over. So it is like 90 days plus 180 days. So regarding this, so that you don't have to remember, because first of all, registration related provisions are not applicable for your exam because it's not there in the syllabus itself. Okay. So maybe by mistake they would have given this here. Okay. Next. So can you tell on when legal base of the margin scheme will be applicable in case of sale of cars? If depreciation is computed on the tax component, then margin scheme is available on sale of demo vehicles. That is, here we saw na, usually what they should do, they should not have claimed the depreciation on the tax component. What if they claim depreciation on tax component? Means ITC not available. When ITC not available, they are selling the car. When they sell the car, there is something called as margin scheme. So that is sale price minus depreciable value. But that particular point is not applicable in your syllabus. So you don't have to bother about it. It is not given in study material. So you don't have to bother about it. Okay. But it is there. One concept is there like that, which is not there for you, for your exam. Next. Payment of tax. Now we completed almost major chunk. We are left with some procedural topics only, amendments in this. So look into this. In payment of tax, there is one point. Already we know that wherever 73, 74 comes, it is replaced with 74A. This is nothing. And so rule 86 sub rule 4B, what is it they are telling? If, that is, if a registered person deposits the amount of erroneous refund sanctioned to him under section 54 subsection 3 or under section 96 subsection 3, rule 96 sub rule 3, along with interest and penalty, so it will be recredited in form PMT 3A. So what are the categories of refunds where recredit will be done using PMT 3A? They gave 4. Okay. So what is this PMT 3A? Listen carefully. So first, this is 48. You can make note of this. Say this. You have electronic credit ledger. What will be there in electronic credit ledger? There are 3 electronic ledgers maintained by GST network on behalf of every registered person. What are the 3 electronic ledgers? Electronic cash ledger, electronic credit ledger, electronic liability ledger. Whatever ITC that you have availed will be there in electronic credit ledger. Debit side or credit side? Input tax credit is asset or liability? For you, asset. Asset shows what balance? Debit balance. But who is maintaining this ledger? GST network. So therefore it will show a credit balance. Contra. Okay, like cash book, passbook. Cash book shows debit balance, means passbook will show credit balance. That logic. Okay, so you have some ITC balance. So what is the balance in ITC? Say opening balance in ITC 1,50,000 you have. 1,50,000, some opening balance of ITC you have, and you will claim the refund of ITC. When you will claim refund of ITC, whenever you are making 0 rated supplies, you will claim the refund of ITC, correct? What are 0 rated supplies? Export of goods or services, supply of goods or services to SEZ is known as 0 rated supplies. In case of 0 rated supplies, you have 2 options. Option number 1, pay IGST and get refund of that IGST. Option number 2, don't pay IGST, get refund of ITC. So you will get the refund of ITC. So you claimed the refund. So you made refund application. Okay, refund claimed. What is that refund claim? Say 1 lakh you are claiming as refund. 1 lakh you are claiming as refund. So what is the closing balance of ITC? 50,000. You understood up to this? Now this 1 lakh, what they are doing, this is step number 1. First, in electronic credit ledger or A, like that you mark. First electronic credit ledger, there is some opening balance of 1,50,000 and that balance, not ledger, I mean in the account credit itself it will be there, not your regular ledger, not your regular ledger. So like this it will be, not opening balance, closing balance, say some balance, and after this debit and all, still there will be some 50,000 as balance. Okay, now happy? Next. So therefore what will happen thereafter? This 1 lakh will be given to the bank account of that person. This 1 lakh will go to bank account of that person. So step B, bank account 1 lakh will be credited. 1 lakh credited. Okay, but in this 1 lakh, 40,000 is erroneously claimed refund. Erroneously claimed refund means wrongfully they claimed the refund. Okay, so therefore out of this 1 lakh, what is the wrongfully claimed refund? Erroneous refund. Erroneous refund. Erroneous refund is say 40,000. Okay, that 40,000 is paid. Rupees 40,000 paid back to government. Rupees 40,000 paid back to government. When 40,000 is paid back to government, then what happens to the ledger? Say this: electronic credit ledger, debit, credit. Now what was the balance? Already we have 50,000. Now there will be a recredit. Sorry. Now there will be a recredit. For how much? Recredit for 40,000. For this recredit, they use PMT 3A. Okay, PMT 3A. Now the balance will come to 90,000. Is it clear, pa? So just go through that flow, you will understand. First, what happened in ledger? We had 1,50,000. In that 1,50,000, we claimed refund 1 lakh. To that extent, the ledger balance came down to 50,000. In this 1 lakh, we got the money into our bank account. In this 1 lakh, 40,000 is wrongfully we got. So that we are paying back to government. When we are paying back to government, then our ledger should increase now. So the ledger balance should increase by 40,000. So existing balance 50, now this 40. So it will go to 90,000. Is it clear? Now, what are the cases where we will get the recredit like this? So that they have given. You understood this process? What are the cases where we will get the recredit? Refund of IGST obtained in contravention, refund of unutilized ITC on account of exports, refund of ITC on account of zero rated, refund of ITC due to inverted tax structure. Mainly it is in case of, okay, when we will be having this ITC refund. What are the cases where we will get ITC refund? Zero rated supplies, inverted tax structure. That alone you write down. So when we will get ITC refund? ITC refund is available. ITC refund is available in case of zero rated supplies, or inverted tax structure. What is zero rated supplies? Export of goods or services, supply of goods or services to SEZ. What is inverted tax structure? The tax rate on output is less than the tax rate on input. Okay, in these two cases only we get the refund. So this recredit also is applicable in those cases only. Done. Next, related to interest, there is one very important point which they have given. Very important it is. Definitely it can be tested in exam. That is, previously and all, if there is a delay in filing GSTR 3B, we need to compute the interest on account of delay in filing GSTR 3B on the net liability. What is net liability? Gross GST minus input tax credit add RCM is known as net GST payable. But now what they are telling, if you have sufficient balance in the cash ledger, you don't have to pay interest. Okay, let's try to understand this with the example. So tax liability is 1 lakh. Due date of GSTR 3B is August 20 and date of tax deposit into cash ledger August 20. You deposited the money into cash ledger, and date of filing 3B August 25th. So what is the delay? 5 days. As there is a delay of 5 days, interest rate is 18%. So therefore what happened, this 1 lakh you maintained on the August 20th, correct? As on the due date of 3B you maintained that 1 lakh. As you maintain 1 lakh, as on the due date of 3B, whether interest payable or interest not payable, no interest is payable on this amount. Got it? And suppose you deposited 70,000. You deposited 70,000 and remaining amount you deposited on August 22. Then whether you need to compute interest? Yes. On what amount? 30,000. On 30,000. That is that much amount which is there in the cash ledger as on the due date of 3B. You don't have to pay interest. On the remaining amount you need to pay interest, correct? So 30,000 only you need to pay interest. And that too, what is the delay? By when it should have been paid? 20th. By when it should have been paid? 20th. But when is it deposited? 22nd. So interest should be computed for 2 days. This is the place where there is a difference between ICI and ICMAI. For CA, it is not like this. On the 30,000, we need to compute the interest from the due date till the actual date of filing 3B. Got it? From the due date till the actual date of filing 3B. So when are they filing their 3B? So August 25th. So therefore interest should be computed for 5 days. Okay. But as this is clearly given as like this, for CMA exam you follow this only. You understood? If you follow like that for 5 days and all, you may not get marks. So you need to compute interest till the date of deposit, because Really speaking, the date of filing 3B is only considered as the date of payment of tax. Sir, then it is mistake, sir? Yes, it is mistake. But this mistake only you follow for your exam. Is it clear or not? Because there was a confusion whether we need to take 3B date of filing or the date of deposit. There is no clarity. So it all about the view which they have taken. They took the view that we need to compute interest only for 2 days. So therefore you need to compute interest for the 2 days till the date of deposit, not till the date of filing GSTR 3B. Understood, pa? So 30,000 rupees into what is the rate of interest? 18% into 2 by 365. Suppose if it is a leap year, you consider it as 366. Okay. So and all interest, tax, etc. should be rounded off to nearest 1 rupee. So therefore it is rounded off to 30 rupees. Got the clarity? So write down 49 interest on account of delay in filing GSTR 3B. Two points. Sufficient balance of what liability? Net liability, correct? Sufficient balance of net liability maintained where? In which ledger? ECL, electronic cash ledger, as on the due date of GSTR 3B. As on the due date of GSTR 3B. Interest payable or not payable? Interest not payable. Interest not payable. We don't have to pay interest. Otherwise, what is otherwise means? Sufficient balance not maintained. Okay. So whether interest is payable or not? Yes. Interest payable on balance not maintained. Balance not maintained. At what rate? 18%. From which date to which date? Interest rate up to which date? Up to date of filing 3B, date of deposit. Up to date of deposit of such balance. Clear, pa? Very, very important. This is different from CMA Institute to CA Institute. Date of deposit. Clearly they took the view. We need to compute only up to date of deposit. So please follow that only for exam. Okay. Next. So you forward this information and all to your friends also. Because they will be thinking, okay, we read it for CA, we can directly go for CMA. No, slight differences are there. Okay. Next. So this already we know 73, 74 reference has been removed and it is taken to 74A. Then tax invoice. Again, this chapter is not there, but I don't know why they have given. But in this, one major amendment is self invoice 30 days. That already we have written. What is the time limit within which the self invoice to be given? 30 days from the date of receipt of supply. Okay. This is when in case of supply by unregistered person to registered person and the supply is covered under RCM. Already we have written that, so you don't have to make note of this. E-way bill, information to be generated prior to commencement of movement of goods and generation of e-way bill. So what is this? That is, even unregistered person is required to generate e-way bill. Yes. even an unregistered person also required to generate e-way bill. For this they have given this proviso provided also that an unregistered person required to generate e-way bill in form GST EWB1 in terms of 4th proviso to rule 138. Okay. So, or unregistered person opting to generate e-way bill in form EWB1 on the common portal shall submit the details electronically on the common portal in form GSTNR3 either directly or through facilitation center. Upon validation of the details so furnished, a unique enrollment number shall be generated and communicated to the said person. Previously it was not there. That is, just we used to mention URP and generate the e-way bill. But what they are telling, even if you are an unregistered person, sir, first of all, why unregistered person will generate e-way bill? See, if my aggregate turnover exceed threshold limit only, now I need to register. Otherwise, I don't have to register. Until that point of time, I can do business and I will be sending the goods from my location to my customer location. Remember, for taxable goods, always e-way bill is required. Got it? For taxable goods, always e-way bill is required. What if the person who is generating e-way bill is unregistered? They need to get a unique enrollment number. Before this amendment, only transporter was required to get a unique enrollment number. But now, not only transporter, but also the unregistered person generating the e-way bill is also required to get a unique enrollment number. Can you remember like this? Okay. So, write down point number 50. Unregistered person generating e-way bill is required to obtain unique enrollment number UEN before commencing movement of goods. Before commencing movement of goods. Because lot of people just they will mention URP like that, they will generate the e-way bill. But really department don't know who is that person. For identification purpose, they brought this amendment. Okay. So, some identification they should have. That's the reason why unique enrollment number they have brought in. So, that is this. So, they have given some examples for this. Mr. Ramesh, a handicraft artisan based in Rajasthan, transport handmade wooden toys worth rupees 8,000 to Gujarat for an exhibition. Mr. Ramesh is exempt from GST registration under section 24 because he is making handicraft goods, and in case of handicraft goods always e-way bill is required. Okay. So, Mr. Ramesh must generate a e-way bill regardless of the consignment value. Generally e-way bill is required only when the value exceeds 50,000. But in two cases, even if the value does not exceed 50,000, e-way bill is required. What are they? Job work and handicrafts. In case of goods sent on job work and handicrafts, e-way bill is always required. So, Mr. Ramesh submits his detail electronically in form GST NR3 on the common portal. After validation, he receives a unique enrollment number. Using this enrollment number, Ramesh generates the e-way bill in EWB1, and e-way bill accompanies the transport of goods from Rajasthan to Gujarat. Is it clear? Then, so even unregistered individuals, Ms. Neha, a freelance interior designer, sells antique furniture worth rupees 45,000 to a client in Karnataka. Sneha is unregistered under GST but wishes to generate e-way bill voluntarily. So, in this case, because even though the value does not exceed 50,000, if you want to generate e-way bill voluntarily, you can do. That is, Sneha is doing overaction here. Actually not required to generate e-way bill, but she want to generate e-way bill. Will the department say, no, you don't have to generate? Okay, you don't have to comply. I'll say, no sir, I want to comply. So, then in that case also, whether she need to get unique enrollment number? Yes. So, EWB, that is ENR3, unique enrollment number, then only e-way bill can be generated. Clear here? Just one point only. What is it you need to remember? Unregistered person. Why unregistered? Any reason pa? Unregistered. They are unregistered. and they want to generate e-way bill. So if they want to generate e-way bill, what they should do? They should get a unique enrollment number when before commencing the movement of goods. Then accounts and records, again the reference to 73, 74 is replaced with 74A. So this is not a great amendment. Then TDS. In TDS also, this already we know, 73, 74 replaced with 74A. Then next one, GSTR 7. What is the TDS return? TDS under section 51. Who will deduct TDS? Government department, local authority, or any body in which government has invested greater than 50%. So they will be deducting TDS whenever you are making supply to them. And that TDS deductor is required to file return. What is the return that they will be filing? GSTR 7. What is the time limit by which GSTR 7 needs to be filed? By 10th of the month following every month. If there is any delay in filing GSTR 7, what is the late fee that is payable? 25 rupees per day, subject to maximum 1000 rupees, not 5000 rupees, 1000 rupees. What if it is nil return? What if it is nil return? Then the late fee is waived. Got it? See this. Notification 23/2024. This notification waives the late fee for delay in filing GSTR 7 applicable from June 2021 onwards. Late fee of GSTR 7, the late fee is capped to 25 rupees per day, subject to maximum 1000. If it is nil TDS return, complete waiver of late fee. You don't have to pay any late fee. Is it clear? So that is this information. Point number 51. Late fee for delay in filing. Sir, usually for nil return also late fee is applicable. Yes. GSTR 1, GSTR 3B, nil return also there is a late fee. 10 rupees per day, subject to maximum 500. Like that late fee is there for GSTR 1 and GSTR 3B. Okay. However, TDS will be by government. Are you getting? GSTR 1, GSTR 3B, normal people will file pa. Okay. So what is 10 rupees? Nil return also late if you are filing 10 rupees per day, subject to maximum 500. But TDS, okay. So they are not people like us. Okay. So therefore they will be not required to pay late fee. And what if it is normal return? GSTR 1, GSTR 3B, other than nil return, maximum is 5000 for us. 25 rupees per day, subject to maximum 5000. But for them, they are not normal people, no, like us. So that's why 25 rupees per day, subject to maximum 1000. Okay, don't forget this. So late fee for delay in filing, GSTR 7. What is GSTR 7? TDS return. TDS return. If it is nil return, no late fee, correct? No late fee. Other than nil return, 25 rupees per day, subject to maximum 1000. Then one more amendment already we discussed. TDS on metal scrap. When TDS will be applicable on metal scrap? Sale by dash to dash. Registered person to registered person. Between two registered persons, whenever there is sale of metal scrap, they may not be government. You understood? They may not be government. TDS is definitely applicable. Where we have written, just turn back the pages. While discussing RCM on metal scrap, there I told you one table I have drawn. RP to RP, URP to URP, like that and all we have discussed now. There I told you, when TDS will be applicable, a registered person. What is the point number pa? 8. 10. Point number 10. Under that point number 10, I have given, whenever a registered person is selling metal scrap to a registered person, TDS will be applicable. Okay, what is the rate at which it is applicable? 2%. Whether the registered person should be government? No, any registered person. Any registered person to any registered person. If they sell metal scrap, TDS will be applicable. Not necessary that the recipient should be government, etc. Normal goods, if you sell to government, then TDS will be applicable. Is it clear or not? But metal scrap, between registered person to registered person. Okay, that is this TDS on metal scrap. So TDS at the rate of 2% is applicable on B2B supply of metal scrap, and they have given one example related to this. Hanuman Limited, registered person under GST Chennai, and making supply to Messrs Rajaram and Company, registered person under GST Coimbatore. Both are registered. As both are registered, definitely TDS will be applicable, and metal scrap is 3 lakhs. Remember metals, like any goods or services, TDS will be applicable if the value of supply, total contract value of supply exceeds 2,50,000. If the total value of supply under the contract does not exceed 2,50,000, then TDS is not applicable. Here, what is the value of supply under the contract? 3 lakhs. It exceeds 2,50,000, so TDS will be applicable. So the recipient should deduct the TDS. That is it CGST, SGST, intrastate or interstate? Intrastate. How it is intrastate? Supplier is in Chennai, recipient is in Coimbatore. Intrastate means CGST, SGST. So CGST 9%, SGST 9%, and accordingly TDS also will be computed 1% on 3,03,000, 1% on 3,03,000. Is it clear? Then, so this is the table which we were discussing. Unregistered person to unregistered person, no GST, no TDS. The table you check. Already I discussed this table with you. And unregistered person to registered person, will it come under RCM? Yes, RCM, but TDS is not applicable. Registered person to unregistered person, FCM. So TDS is not applicable. And registered person to registered person, FCM, and TDS will be applicable. Is it clear? Next, related to TCS, there is one amendment. Previously the rate of TCS was 1%. Now they reduce the rate of TCS to 0.5%. Okay, so write down that 52 reduction in rate of TCS, reduction in rate of TCS if it is interstate supply. If it is interstate, 0.5% towards IGST. If it is intrastate, 0.25% towards CGST and 0.25% towards SGST. Interstate 0.5% towards IGST, intrastate 0.25% towards CGST and 0.25% towards SGST. Okay. So that is the reduction in rate of TCS. And services not notified for e-commerce TCS. So already we know this. So TCS is not applicable if GST is payable under section 9.5. What are the cases where GST is payable under 9.5? Whenever the supply is made through e-commerce operator, there are some notified services. HATE, housekeeping services, accommodation services, transportation of passengers, and eating food in restaurants. In that case, GST is payable by e-commerce operator, so TCS is not applicable. That is not an amendment, that was a old point. Only amendment is the rate that you need to remember. So here they gave one example. E-commerce operator Flipkart Limited, supplier XYZ Private Limited, buyer Mr. A, nature of supply, sale of goods, taxable supply, supplier in Karnataka, buyer also in Karnataka, sale value 1 lakh. So on 1 lakh TCS will be applicable at the rate of 0.25% towards CGST and 0.25% towards SGST. Why it is intrastate? Simple. Supplier also Karnataka, buyer also Karnataka. That's why it is intrastate. Next. In returns under GST, so we have some information. So all these are small topics only. We'll take a break. Okay. Or can I continue? 1:30 you take break. You take break at 1:30. 1:30 to 2:15 like that you take. Okay. So see this. GSTR 1A. Previously GSTR 1 you know. What is GSTR 1A? See, if I have filed a return in GSTR 1, if I need to amend it, I have to amend it only in the next month GSTR 1. But if I want to amend it now itself, can I amend it? Yes, through GSTR 1A. But by when? GSTR 1A should be filed before the due date of 3B for that particular month. Before the due date of that particular month. Okay. For example, say this. For the month of July 2024. For July 2024, what is the time limit for filing GSTR 1? GSTR 1 due date. What is the GSTR 1 due date? 11 August 2024. What is the due date of GSTR 3B? GSTR 3B due date. GSTR 3B due date is 20th August 2024. Got it? Now, if we need to rectify the details of this GSTR 1, okay, so we can file GSTR 1A between which date? Between 11th, okay, between 11th August to 20th August, GSTR 1A can be filed to what? To rectify the details of GSTR 1 filed on or before 11th August 2024. Is it clear? If you have filed any GSTR 1, but you want to rectify the details immediately, can the GSTR 1 details be rectified? Yes. How it can be rectified? By filing GSTR 1A. But that 1A should be filed between when? 11th August 2024 to 20th August 2024. Between that period, you can file GSTR 1A. What is the advantage? What is the advantage of this? We can add the liability without interest. Otherwise, next month if you are adding this month liability, next month if you are adding, you have to pay interest. What is the advantage of filing this? What is the advantage of filing this? Interest liability gets reduced. Because if you need to rectify this next month GSTR 1, next month GSTR means unnecessarily 1 month liability you have to pay. Now immediately you can discharge the liability by 3B. Okay. Because of this, will it be added to the 3B liability? Yes. So whenever GSTR 1 will be filed, so in 3B there will be two liabilities. Liability as per GSTR 1 plus liability as per GSTR 1A. You got it? My one liability anyhow will come to 3B, but 1A if I do any amendment, that liability also will come in 3B. Otherwise, next month only I have to pay. So in order to avoid that interest liability, we use 1A. Got it? So in 3B, there will be two liabilities, one as per GSTR 1, second one as per 1A. If you have made any extra things, that will also be reflected in 3B. Sir, what about ITC, sir? This is supplier point of view. But what about recipient point of view? So far what we discussed is from the supplier point of view. What about recipient? One data will come to the recipient in 2B. What about 1A? What about 1A? 1A also will come to the recipient, provided that 1A is filed by 13th. You got it? You understood? If 1A is filed, one data will come to recipient in 2B pa, 1A data also will come in 2B, provided that 1A is filed within 13th. If 1A is filed beyond 13th to 20th, then it will be reflected in the next month 2B. Is it clear? So, continuing further, write down below another chart. This is from whose perspective? This is from supplier perspective. Supplier perspective. Now we will see from recipient perspective. From recipient perspective, same month I am taking July 2024. For July 2024, what is the date by which we will get 3B? 2B. GSTR 2B. When GSTR 2B is available? 14th August 2024. Correct? 14th August 2024. Now, in this 2B of 14th August 2024, what data will be reflected? Come on. What data will be reflected? GSTR 1 filed by 11th August 2024 plus GSTR 1A filed by 13th. That's what, by. After 11th only we will file. By 13th August 2024. Got it? Now, so what if GSTR 1A is filed after 13th August? So for this month, July 2024, if GSTR 1A filed after 13th August 2024 but before 20th August 2024, then what will happen? Reflected in GSTR 2B of which month? August 2024, available on which date? Correct, 14th September 2024. Which month? For which month? August month data will be coming in September na. So that is 14th September. If GSTR 1A is filed after 13th August but before 20th August, it will not come in 2B of July month. It will come in 2B of August month. Actually, this is 2B of which month? First one, 2B of July 2024. 2B of July 2024 available on 14th August 2024. Up July month 2B comes in 14th August, means August month 2B will come in 14th of September. So by 13th whatever 1A is filed, it will come immediately same month. If it is filed beyond 13th, then it will come in next month 2B only. Is it clear? This is from the recipient perspective because of GSTR 1A. Okay. Now anything can be tested in exam. Either they can ask from supplier point of view or they can ask from the recipient point of view. So that is about this year, GSTR 1A. A taxpayer who needs to amend any supply record furnished in GSTR 1 or need to add any supply record of the same tax period, the same can be done through 1A in the same month after filing GSTR 1 and before filing GSTR 3B. What is the due date? After GSTR 1 but before 3B of the relevant month. Okay. And what is GSTR 1A? GSTR 1A is a form used by taxpayer to amend or add supply records for the same period. For example, GSTR 1 of August 2021 has been furnished by the taxpayer on 10 September. So 10 September they furnished. Now 1A can be furnished. Taxpayer committed a mistake of 2 records and missed to report 1 record in its GSTR 1. Now 1A can be opened for him or her on 10 September or due date of GSTR 1, whichever is later. What is whichever is later? 11th. After 11th only it can be done. So taxpayer will be able to amend the incorrect record and shall be able to add the missed record in 1A, and the correct value shall be auto populated in 3B. Okay. And for monthly filers, so open the later of due date or actual date of filing GSTR 1. For quarterly it is 13th. Whatever we discussed is from monthly perspective. If it is quarterly, what is the time limit for quarterly GSTR 1? 13th of the month following every quarter. Okay. Next. So filing guidelines, limitations, etc. All these things we have seen. How it is going to impact GSTR 3B, etc. So this information is sufficient. Beyond this it is not required. And annual return already we discussed. For a composition scheme, what is the annual return time limit? From 30th April it has been extended to 30th June. Then this GSTR 7, what is GSTR 7? TDS return. So whether nil return needs to be filed? Yes. Even nil return needs to be filed. What is the time limit by which it should be filed? 10th of the month following every month. But is there any late fee? No. There is no late fee. But they have to file nil return. You tell me who are the people who should file nil return. If you want, you can just write down that point also. Point number 54. Following persons are required to file. Following persons or following returns should be filed even though it is nil return. Even though it is nil return. Nil return means what? All the details in the return will be nil. So even though it is nil return, they have to file. Tell me what are those returns? GSTR 1 next. GSTR 3B next. GSTR 7 next. GST CMP 08. Composition scheme. Composition scheme. This composition scheme quarterly return it is. Composition scheme quarterly return. Okay. What is GSTR 8? TCS return. TCS return is not required to be filed if it is nil. GSTR 7 only, even if it is nil, they have to file. But TCS is not required to be filed like that. Okay. So that's what they have given here. Every registered person required to deduct tax at source under section 51 shall electronically furnish a return for every calendar month, provided the said registered person shall furnish a return for every calendar month whether or not any deductions have been made during that month. That's why nil return needs to be filed. Then this rule 88D, there is nothing here. In the place of 73, 74, it is replaced with 74A. Okay. Then refund under GST. Okay. From this we will see afternoon, after lunch break. Okay. And what I will do after lunch break, see we have only small concepts only in this. So after lunch break, we will complete the mighty 50 questions and then we will discuss the remaining things. So because these are all small things only, not that much important also. Whatever we have covered so far is very important. On those amendments can be asked. Remaining things also I will complete, don't worry. but only thing we will give priority to mighty 50 questions and then we will cover the remaining things. Okay. So tell me at what time we will meet? 2:30? Okay, 2:30 we will meet. Take some rest because afternoon we are going to cover the remaining 40 questions. Already 10 questions we have completed. Thank you. Okay. We'll start with the remaining questions in Mighty 50. So please look into question number 11. Question number 11. See that Musicara Private Limited, owned by Nitish Dani, a famous classical singer, wishes to organize Nitish Dani music concert in Gurugram, Haryana. Musicara Private Limited, registered in Ludhiana, Punjab, enters into contract with a event management company, Supriya Private Limited, registered in Delhi, for organizing the said music concert at an agreed consideration of 10 lakhs. So this is the transaction. So while reading this transaction, you need to identify what is the service about. The service is about organizing an event. For organizing an event, what is the place of supply? If it is section 12, we need to see B2B or B2C. If it is B2B, location of recipient. If it is B2C, then location where the event is held. If the event is held outside India, then location of recipient. But in case of section 13, it is always location of event. So this is the provision that you need to remember. So you need to refer to the place of supply chart. I told you, na, services. Place of supply, in case of services, you can see that chart. So in the book, what you have, so place of supply provision, that summary we discussed, na, what is the page number? You can see here, organizing an event, page number 96, sorry, 97, page number 97, service in relation to organizing an event. What should be taken as the place of supply? If it is B2B, location of recipient, section 12, B2C, location where the event is held. If the event is outside India, then location of recipient. Whereas in the case of section 13, always it is location where the event is held. So coming back to this question, so it is B2B or B2C. Who is the supplier? The supplier is event management company Supriya Limited, and recipient is this Musicara Private Limited. Where is Musicara Private Limited? Registered in Punjab. So organizing an event, first you need to identify the service, then you need to identify who is the supplier, then you need to identify who is the recipient. Okay, service is organizing an event, supplier is Supriya Private Limited, Delhi, and recipient is so this Musicara Private Limited, Ludhiana, Punjab. Okay, so therefore it is B2B. B2B, we need to take location of recipient as a place of supply. So Punjab will be taken as the place of supply in this case. That is the first transaction. So Punjab will be taken as place of supply. And what is the nature of supply? It is intrastate or interstate. What is the location of supplier? Location of supplier will be Delhi. Place of supply will be Punjab. Therefore it will be coming under interstate supply and chargeable to IGST. So therefore IGST will be applicable in this case. Then look into the next transaction. Continue further. Supriya Private Limited books the launch of Hotel Dum Dum, Gurugram, registered in Haryana, for holding the music concert for a lump sum consideration of 4 lakhs. For this 4 lakhs, what will be taken as the transaction? What is the transaction there? Booking of hotel, correct? Booking of hotel means it will come under service in relation to immovable property. What will be taken as place of supply in case of service in relation to immovable property? You can see here. So page number 96, service in relation to immovable property as per section 12, location of property will be taken as place of supply. What if the property is located outside India? Then location of recipient will be taken as place of supply. But in case of section 13, always location of immovable property will be taken. So coming back to this question, so service is booking of hotel, that is service in relation to immovable property. Who is the supplier? Hotel Dum Dum in Gurugram. Who is the recipient? Recipient is Supriya Private Limited, Delhi. What will be taken as place of supply? Location of immovable property. Where is immovable property located? Gurugram. So hotel also Gurugram, place of supply also Gurugram. Therefore it will be coming under intrastate supply. So therefore this 4 lakhs will be chargeable to CGST, SGST. So you can see here hotel accommodation 4 lakhs, place of supply will be Gurugram, Haryana, and CGST 9% and SGST 9%. Understood, Nayar? Then next, continue further. So Musicera Private Limited fixes the entry fee to the music concert at rupees 5,000. 400 tickets for Nitish Dani music concert are sold. So related to concert, we have exemption. If the ticket price does not exceed 500, it will be exempted. So musical performance, theatrical performance, concert, pageant, then even sporting events, like that we have some list. So total 9 points you need to remember, 9 entry tickets. For these 9 entry tickets, if the ticket price does not exceed 500, it will be exempted. First 4 related to performance. What is that performance? Theatrical performance, dance, music, concert, these 4. Next 4 events. What are those 4 events? Circus, pageant, and award function. Okay. Then sporting event, 4 events. Then finally one place, that is planetarium. For these 9 entry tickets, the ticket price, if does not exceed 500 rupees per person, it will be exempted. But here it is how much? 5,000, means it exceeds 500. So entirely it will be taxable. What is the service here? Admission to event, correct? Entry ticket, admission to event. For admission to event, what will be taken as a place of supply? Let it be section 12 or section 13. Service in relation to admission to an event, always place of supply will be location where the event is held. So coming back to this, what is the service? Service is admission to an event. Who is the supplier? Supplier is Musicera Private Limited. Who is the recipient? People who come purchasing the ticket, audience. And what will be the place of supply? Location of event. Now read where the event is held. So wishes to organize Nitish Dani music concert in Haryana, Gurugram, Haryana. So Haryana will be taken as the place of supply. And where is Musicera Private Limited located? Where is that they are registered? Punjab. So location of supplier Punjab, place of supply will be Haryana. Therefore it will be coming under interstate supply. You can see here. So place of supply will be, this is related to entry tickets now. So what is the value of the entry tickets? 400 into 5,000. So 20 lakhs. 20 lakhs, and the place of supply will be, so Gurugram, Haryana, location of supplier Punjab, place of supply Haryana, therefore it is interstate supply, chargeable to IGST. Then one more line they have given. You are required to determine CGST, SGST, IGST liability, that already we determined. Will your answer be different if the price per ticket is fixed at 450? Yes. If the ticket price does not exceed 500 rupees per person, then this ticket will be exempted. Then next one, question number 12. Determine the place of supply for the following independent cases. Festival event, an event management company at Mumbai organizes 2 business promotion events for Prabhu Enterprises registered in Ahmedabad, Gujarat, at New Delhi and in Malaysia. Now, what will be taken as a place of supply? What is the service? What is the service? First, you need to identify the service. What is the service? Event management means organizing an event. For organizing an event, whether it is 12 or 13, where is the supplier located? Who is the supplier? Read the question. Who is the supplier? Festival event is the supplier. And where is it they are located? Mumbai. Who is the recipient? Prabhu Enterprises. And where is it they are located? Ahmedabad, Gujarat. So both are in India. So section 12. Section 12, B2B or B2C we need to check. There are 3 services for which we need to check B2B, B2C. What are those 3 services? TOT. TOT. T for training and performance appraisal. You can see the table. Training and performance appraisal. That is a place where we check B2B, B2C. Training and performance appraisal services. Again, O. O for organizing an event. T for transportation of goods or transportation of passengers. These places only where we apply B2B, B2C. So this is organizing an event. For organizing an event, what should be taken as a place of supply? B2B, location of recipient. It is B2B because both are registered, correct? So B2B, location of recipient. What is the location of recipient? Ahmedabad, Gujarat should be taken as the place of supply. Is it clear? Understood pa? Next, suppose if they are unregistered, then B to C. So at that time we need to see location where the event is held. Where the event is held, New Delhi and Malaysia, but it will be taken as New Delhi only, because if the event is held outside India, then again we will come back to location of recipient only. But here it is B2B, that is the answer. Okay. Then continue second point. Global Planners, Jodhpur, Rajasthan is hired by Mr. John, unregistered person based in Kochi, Kerala, to plan and organize his son's wedding at Mumbai, Maharashtra. Will your answer be different if the wedding takes place in Singapore? First, identify what is the service. Organizing an event. Again, B2B or B2C? B2C. B2C, because the recipient is unregistered. So what should be taken as place of supply? Location where the event is held. Where the event is held? Mumbai, Maharashtra. That will be taken as the place of supply. Will your answer be different if the wedding takes place in Singapore? Yes. If the wedding takes place in Singapore, then location of recipient. What is the location of recipient? Kochi, Kerala will be taken as the place of supply. Understood here? Next one. Third. Dhirubhai Private Limited, New Delhi, imports a machine from Japan for being installed in its factory at New Delhi. To install such machine, Dhirubhai Private Limited takes the service of an engineer who comes to India from Japan for this specific installation. Now, what is this service? Services, installation service. Installation service, 12 or 13. Where is the supplier located? Outside India. Who is coming to India to do the service? Correct? And where is the recipient located? In India. Section 13. As per section 13, performance based services in relation to goods. Physical presence of the goods required. We need to take location where the services are actually performed. Physical presence of the goods not required, then we need to take location of goods. In this case, whether physical presence of the goods required or not, yes, to do the installation. Otherwise, how we can do installation? Through remote can we do installation? I mean, I am in some other place, can we do installation? Abracadabra, install, means it will get installed. No, na. So the machine is required for installation, means physical presence of the goods is required. So what will be taken as a place of supply? Location of performance. Location of performance, where the installation is taking place. New Delhi, that will be taken as the place of supply. So see here, location where service is actually performed, that is New Delhi. You got it? So this is why I told you place of supply chapter is very, very important, because if you know the provision, you will be able to arrive at the answer. If you don't know the provision, you cannot write. Okay, the appropriate provision you should know. Okay, then next one, 4. Mr. Gogai, an architect, New Delhi, provides professional services to Mr. George of New York in relation to his immobile property located in Pune. What will be taken as a place of supply? What service first of all? Architect services. Architect service means service in relation to immobile property. What will be taken as a place of supply for service in relation to immobile property? Location of property. Where is the property located? So in India, that is Pune. So that will be taken as the place of supply. But we need to apply 12 or 13? 13. Why 13? Because architect is in Delhi, but the recipient is in New York. So therefore, location of property will be taken. The property is in Pune. What if the property is in New York? Still it is location of property only, not location of recipient. That is for 12 only. Okay. So check the book properly. So in case of section 12, that is both supplier and recipient in India, there only we see if the property is outside India, then location of recipient. Otherwise, for section 13, always it will be location of property. Even if the property is outside India, that location of property only will be taken as a place of supply. Don't get confused. Okay. Then next, look into 5th one. Mr. Jigar, an unregistered person based in New Delhi, hires a yacht from a company based in London, UK for 20 days. What will be taken as a place of supply? 12 or 13? 13. Why 13? The one who is giving the yacht on rent is outside India. The one who is taking it on rent is in India. So section 13. What is it? Hiring of means of transport. For hiring of means of transport, we have a specific provision. You can see that in page number 99. Point number 14. Hiring of a means of transport. In case of hiring of a means of transport, if it is aircraft or vessel, always general provisions. Whereas in case of other vehicles, up to 1 month, then it will be location of supplier. Beyond 1 month, it will be general provisions. 13 subsection 2 means general provisions. Could you identify that? Hiring of a means of transport, aircraft or vessel, always general provision. Other vehicles up to 1 month, location of supplier. And beyond 1 month, it will be general provision. Now come back to this question. Here, yacht is other than aircraft or vessel. Is it given for up to 1 month or beyond 1 month? Up to 1 month for 20 days. Then what will be taken as the place of supply? Location of supplier. Who is the supplier? So that is a company based in London. So therefore London will be taken as the place of supply. Is it clear? So what I have observed in the past exam questions of yours is that they have given these two type of questions also. So first they have given this type wherein they give a situation. In that situation we need to identify the place of supply and determine whether it is intrastate or interstate, like that. Like this also one question, and it involves computation also. This type of question also they have given. Another type of question what they have given is that like this, some 5 or 6 situations they gave, and you need to write what is the place of supply in this case. Like this type of question is also there, okay, in your past exam. So any type of question can be tested on place of supply. Now we are moving on to question number 13, that is related to valuation. So up to this 11 and 12, any doubt related to place of supply? See, you should be thorough with these 4 pages. So section 12, section 13, what will be taken as a place of supply? I gave you a summary. So that table you should be thorough with, okay. Then coming back to question number 13. Shri Krishna Private Limited, a registered dealer, furnishes the following information relating to goods sold by it to Shri Balram Private Limited in the course of intrastate. Price of the goods is 1 lakh, municipal tax 2000, inspection charges 15,000, subsidies received from Shri Ram Trust. First, what should be taken as the transaction value? The price involved in the transaction will be taken as the transaction value. So 1 lakh will be transaction value. Municipal tax. What is the treatment of municipal tax? As per section 15(2)(a), taxes, duties and cess by whatever name called other than GST should be included in the value. So kindly open your book, page number 120. Open that page. Generally, what should be taken as the value for payment of GST? The value will be transaction value. What is transaction value? The price actually paid or payable will be taken as a transaction value. To this price actually paid or payable, totally there are 5 inclusions. In that 5 inclusions, see the first inclusion, 15(2)(a). What does it say? Tax, duties, cess, other than GST, if charged to the recipient, should be included in the value. So coming back to this, is this municipal tax other than GST? Yes. And whether it should be included in the value? Yes. Now what they have done in the given price, go to the last paragraph. According to GST, determine the value of taxable supply. Items in point number 2 to 6 are not considered while arriving at the price of the goods given in point number 1. Means in this 1 lakh, this 2000 is not included. So therefore we need to, first as per provision, it is to be included. In the given price it is not included. So therefore we need to add. Then next, inspection charges. Inspection charges will be done before delivery of goods or after delivery of goods? Before delivery only inspection will be done. So we have 15(2)(c). 15(2)(c) says supplier incurring the expenditure and charged to recipient. When it should be charged to recipient? Before or at the time of delivery of goods or supply of service, then it should be included. So consequently, these inspection charges to be included, but in the given price it is not included. So therefore, we need to add. Then subsidy received from Sri Ram Trust, as the product is going to be used by Blind Association, 50,000 rupees. So this particular subsidy is what, we have subsidy related one point. What does it say? Subsidies directly linked to price from other than central government or state government should be included in the value. Now coming back to this, is it from CGSG or others? Others. Sri Ram Trust, others. Therefore, it is to be included in the value. In the given price, it is not considered. Not considered means they have not reduced. Usually subsidy is an income that will be reduced. So they have not reduced. They have not reduced means it is to be included. In the given price, it is already included, so no need to add again. Is it clear or not? Not considered means what, pa? Not considered means they have not reduced. Okay. Not considered means they have not reduced. If it is considered, what they would have done? They would have reduced, because subsidy is a income. They are getting that income, okay, for that reason. So see the explanation. Subsidy received from Sri Ram Trust, as the product is going to be used by Blind Association, it is includable, as only subsidy received from government is not includable. Already included, as the given price is without considering the subsidy. Is it clear? Next, what if they give that the subsidy is considered, the given price is after considering subsidy? Then what they would have done? While arriving at 1 lakh, they would have reduced 50,000. So we need to add back 50,000. Is it clear? So in this case, they have not reduced, means already in 1 lakh this 50,000 is included, so ignore. Then late fee for delayed payment, though Sri Balram Private Limited made late payment, but these charges are waived by Sri Krishna Private Limited. Now look into the inclusion. 15(2)(d), what does it say? Interest, late fee or penalty for delay in receipt of consideration should be included in the value, but only when it is actually charged it should be included in the value. But they are waiving off now. Generally late fee to be included, but in this case they are waiving off. As they are waiving off, it is not required to be included. Then continue further. Sri Balram Private Limited paid to Radhe Private Limited. Who is Balram Private Limited? Recipient. Correct? Sri Balram Private Limited is recipient. Paid to Radhe Private Limited on behalf of Sri Krishna Private Limited. Weighment charges 2,000 rupees. For this also we have an inclusion. What is that? Recipient incurring expenditure on behalf of supplier. Actually, who should incur this expenditure? Supplier. But who incurred it? Recipient. So it is an indirect consideration to the supplier. Therefore, it should be included in the value. Now do the calculation. 1 lakh plus 2,000 plus 15,000, that is 1 lakh 17,000 plus 2,000, that is 1 lakh 19,000 will be taken as the value. Understood, pa? So this question covers all the inclusions. Taxes point, recipient incurring expenditure on behalf of supplier, incidental expenses, late fee, subsidy, all 5 inclusions are there in this question. So this one question covers all the 5 points. Okay. Next, look into question number 14. Rolex Forex Private Limited, registered in Delhi, is a money changer. It has undertaken the following purchase and sale of foreign currency. Determine the value of supply in each of the above cases in terms of Rule 32(2)(a) and Rule 32(2)(b). I told you for 5 transactions we have special valuation rule, Rule 32. In that, foreign exchange transactions. Kindly open that particular page. It is in page number 135. Page number 135. Valuation in case of foreign exchange transactions. For that, we have 2 rules. Rule 32(2)(a) and Rule 32(2)(b). These are 2 options. We can decide between either option 1, that is 32(2)(a), or option 2, 32(2)(b), and this option needs to be decided in the beginning of the financial year, and that will be applicable throughout the financial year. Now look into the first option. What does the first option says? Check whether one of the currency exchanged involves Indian rupee, and RBI reference rate is available on that day, then you need to see the difference. Difference between what? Either the purchased or sold currency and the RBI reference rate into units of currency. Suppose if RBI reference rate is not available, you take the gross amount in Indian rupees into 1%. What if both the currencies are foreign currencies? Convert both the currencies into Indian rupees using RBI reference rate, multiply with 1%, whichever is lower. List of the following: purchased currency converted into rupees using RBI reference rate into 1%, sold currency converted into rupees using RBI reference rate into 1%. Now, go to that question. In this question, what is that they have given? 1000 US dollars are purchased from Rajesh Enterprise at the rate of 68 rupees per dollar. What is the exchange rate? 68. And what is the RBI reference rate on that day? 68.6. So one of the currency exchange involves Indian rupee. Correcta? Correcta pa? Don't sleep. Please concentrate. Okay. So one of the currency exchange involves Indian rupee. Whether RBI reference rate is available on that day? Yes. So we need to see the difference between exchange rate and the RBI reference rate multiplied by units of currency. What is the exchange rate? 68. What is the RBI reference rate? 68.6. What is the difference? 0.6. 0.6 into how many dollars? $1000. That is 600 rupees will be taken as the value. Understood? What if it is next question? $2000 are sold to Srinidhi at the rate of 67.5 per dollar. RBI reference rate is not available. Then what we need to do? 1%. See the gross amount in Indian rupees. $2000 into 67.5 into 1%. How much? So that will be taken as the value. Got it? That is 1350. Okay. Now, what if both the transactions are in foreign currency? What we should do? Say $1000 exchanged for 400 pounds. Like that they have given. What should we do? Convert both that $1000 as well as 400 pounds into Indian rupees. How? Using RBI reference rate. Thereafter you multiply with 1%. So whichever is lower will be taken as a value. Is it clear? Maybe that type of question also may be given in exam. Now, second option. They are asking answer these two questions as per rule 32.2a as well as rule 32.2b. Now we will understand what is that rule 32.2b. Rule 32.2b is like slab rate model. Okay, see there. What does that slab rate model says? If the gross amount is up to 1 lakh, that is first slab. Beyond 1 lakh and up to 10 lakhs is second slab. Beyond 10 lakhs will be third slab. Up to 1 lakh is first slab. Beyond 1 lakh and up to 10 lakhs is second slab. Beyond 10 lakhs will be third slab. For the first slab, what will be taken? 1% of gross amount. What is the gross amount? Say for example 80,000. 80,000 into 1%. 80,000 is in first slab na. 80,000 into 1% is what? 800 or 250, whichever is higher. That is 800. Suppose if it is 20,000, that is also in first slab, not 20,000. 20,000 into 1% is what? 200 or 250, whichever is higher will be 250. Exactly 1 lakh, still it is in first slab. For exactly 1 lakh, how much we will take? 1 lakh into 1%, 1000 or 250, whichever is higher will be 1000. Which means when you are going into second slab, what is the fixed amount? 1000 plus whatever is excess beyond 1 lakh on that 0.5%. For example, 6 lakhs pa. For first 1 lakh it will be 1000. For remaining 5 lakhs into 0.5%, that is 2500 plus that 1000, that will be 3500. Are you listening? Then suppose if it is 8 lakhs, try first 1 lakh, 1000, remaining 7 lakhs, 7 lakhs into 0.5%, 3500, 3500 plus 1000, 4500. Got it? Now exactly 10 lakhs, first 1 lakh, 1000, remaining 9 lakhs, 9 lakhs into 0.5%, 4500, 4500 plus 1000, 5500, which means when you move to third slab, what is the fixed amount? 5500. And in the third slab, beyond 10 lakhs, what will be taken as the percentage? 0.1%. For example, you take 25 lakhs. For first 1 lakh, it will be for first 10 lakhs, it will be 5500. and for remaining 15 lakhs, 15 lakhs into 0.1%, that is 1500 only. 1500 plus 5500, that will be 7000. Got it? Like that. What is the maximum value? 60,000. Okay. Suppose if it goes to somewhere like 250 lakhs. For first 10 lakhs it will be 5500. Remaining 240 lakhs. 240 lakhs into 0.1%, 24,000. 24,000 plus 5500, that is 29,500 only. So maximum is not touching. Is it clear or not? Suppose if the transaction is like 800 lakhs, 900 lakhs like that, then the maximum will be 60,000. Okay. So that will be taken as the answer. Now coming back to this. First question. What is the gross amount in Indian rupees? Do the calculation. $1,000 into 68. 1000 into 68 is what? 68,000. Means it is in the first lap. For first lap, how much we need to take? 1%. So 68,000 into 1% is what? 680 or 250, whichever is higher, that is 680. Then go to the second question. What is the gross amount in Indian rupees? 2000 into 67.5. Do the calculation. 2000 into 67.5 is how much? 1,25,000. 35,000. For 1 lakh it will be 1000. Remaining 35,000. 35,000 into 0.5%. How much? 175. So 1000 plus 175, 175 will be taken as the answer. Is it clear? 680, 175. So this question is related to that foreign exchange transactions. Okay. Then next one. Both the rules we did. Okay. I think this question they gave in model test paper. Recent one model test paper they have released for June exam. In that they gave this question. Okay. Next. Question number 15. LIC of India provides you the following information for the month of January. You are required to compute the value of taxable supply of services under Rule 32 sub Rule 4 of determination of value of supply. Already we discussed in the supplementary discussion. What is that? Insurance company, different policies, how much should be taken as a value? General policies, total premium collected 12,000 lakhs, out of which first year premium is 5,000 lakhs. How much should be taken for 5,000 lakhs? Value 25%. So 5,000 lakhs into 25% is what? 1,250 will be taken as the value. Is it clear? Then next, out of 12,000, if 5,000 is first year, what is the remaining? Subsequent year, 7,000 into 12.5, that is 875 lakhs. Then single premium annuity policy, premium is 850. How much? 10%. So 850 into 10%, 85 lakhs. Then only risk cover policies, 500 lakhs. Full 500 lakhs. Life micro insurance policies where the sum assured does not exceed 2 lakhs, premium 10 lakhs, exempted. Because all micro life insurance is exempted if the sum assured does not exceed 2 lakhs. So therefore under that exemption this premium 10 lakhs will be exempted. Then variable insurance policies, premium collected 8,000 lakhs. Out of this 8,000 lakhs, 80% of the amount is allocated for investment on behalf of policy holder, for which policy holder is given separate breaker in premium receipts. Now whether the amount allocated for investment is intimated to the policy holder? Yes. Then how much should be taken as a value? 8,000 minus 80%. What is that remaining 20%? 1,600. So total taxable value will be 4,310 lakhs. Got it? So this is on that Rule 32 life insurance business. Then next, look into question number 16. Sacrosanct Manufacturers Limited, a manufacturer of bottle caps, is registered in Dhanbad, Jharkhand. It imports a bottle cap making machine from Japan. Sacrosanct Manufacturers Limited avails the service of Zumro Logistics, a licensed customs broker in Kolkata. It is for getting the said machine cleared from the customs station. That is their work. Sacrosanct Manufacturers Limited also authorizes Zumro Logistics to incur on its behalf the expenses in relation to clearance of imported machine. So generally supplier incurring the expenditure and charge it to recipient should be included in the value. But if the supplier is incurring the expenditure on behalf of recipient as a pure agent, that expenditure should not be included in the value. Is it clear? Pa, I am your supplier, pa. You are my recipient. I incur some expenditure. For the purpose of providing service, I incur the expenditure. And that expenditure I recovered from you. Whether it will be included in the value? Yes, it should be included in the value. Whereas, it is your liability. You are my recipient. Your liability. I incurred it and I recovered from you. Which means it should be included in the value? No. Because actually it is whose expenditure? Recipient expenditure. On behalf of recipient, supplier is incurring. It should not be included. For example, say, so one person is coming to you and asking you to file, sir, you file my GST return. And you said, okay, fine, I will file your GST return. You have to give me 5,000 rupees. He said, yes, sir, I will give you 5,000 rupees. While filing GST return, you came to know in GSTR 3B, there is a liability of 2,000 rupees. And you called him, boss, your ITC is less than your liability, so 2,000 rupees you have to pay. He is telling, sir, I am outside, you make the payment, and thereafter along with 5,000 you collect that 2,000 rupees also, like that he said. Now you collected 7,000. Now what should be taken as a value? 7,000 or 5,000? 5,000. Why 5,000? That 2,000 is whose expenditure? Recipient's expenditure, but you incurred, so it should not be included in the value. Got it? That is a concept of pure agent. Here, Sacrosanct Manufacturers is asking Zumro Logistics to incur on its behalf the expenses. What expenses? In relation to clearance of the imported mission. Whatever expenses for clearance of mission means what? Customs duty or charges, everything. Who should incur? Customs agent, customs broker should incur. Okay, that is Zumro Logistics. For clearance of the imported mission from the customs station and bringing the same to the warehouse at Dhanbad. So transportation cost also they need to incur on behalf of recipient. These expenses would be reimbursed by Sacrosanct Manufacturers to Zumro Logistics on actual basis. In addition, Sacrosanct Manufacturers will also pay the agency charges to Zumro Logistics. Now, what should be taken as a value? First, these agency charges will come. That is the basic amount. Okay, that is for their work. For their work, they will collect that 5 lakhs will come. What about customs duty? Who should pay customs duty? Recipient. Manufacturer who is importing the mission only should pay na. So this customs broker is paying. Means it is on behalf of recipient. So it should not be included in the value. Then port charges, dock dues, who should pay? Whomsoever is importing mission, they only should pay. But these people are paying. So again, expenditure as pure agent. Again, transportation cost, who should incur? Recipient. See, all these are clearly given in the question itself. Sacrosanct Manufacturers authorize Zumro Logistics to incur on its behalf the expenses in relation to clearance of imported mission. From where to where? Customs station and bringing it to the warehouse at Dhanbad. You got it? Then, so this transportation charges also will not come. Unloading, again unloading whose job? Client job, but incurred by the supplier, it will not come. But these three are for the purpose of providing the services. Hotel expenses, traveling expenses and telephone expenses, because that is not given here. What and all is given? Only expenditure for clearance and then bringing up to warehouse. Correct? So remaining amount and all will come under in the course of supply. You got it? First you need to check whether it is expenditure incurred as a pure agent. If yes, it will not be included. Remaining expenses and all will be included. Accordingly, this 45,000, 50,000 and 2,000 will be included. So do the computation. 5 lakh plus 45,000 plus 50,000 plus 2,000. How much it comes to? 5,97,000 should be taken as the answer. Got the clarity? Then, but all these expenses should be shown separately in invoice. What if these expenses are not shown separately? Together if they give a single amount, whether the pure agent benefit we will get? No, we will not get the pure agent benefit. Means entire amount will be taken as a value. See the next paragraph. Compute the value of supply made by Zumro Logistics with the help of given information. Would your answer be different if Zumro Logistics charges 13 lakhs as lump sum consideration for clearing the imported machine from the custom station and bringing the same to the warehouse of sacrosanct manufacturers, what will be your answer? This benefit of pure agent will not be applicable. So entire 13 lakhs will be taken as the value as per section 15. Got it? Now say this. This is the concept of pure agent. As we discuss this, I am also explaining it here. First, expenditure is incurred by supplier and charged to recipient. You can see. Come back to page number 120. So supplier is making supply of goods or services to the recipient, and whatever payment that recipient makes, that will be taken as a transaction value. Now supplier is incurring some expenses and recovers it from the recipient. First we need to see, is it expenditure on behalf of recipient, pure agent? Yes. Then such expenditure shall be excluded from value. What if it is in the course of supply? Then it will be included in the value. When the expenditure is said to be on behalf of recipient, the concept of pure agent is applicable if it is liability of recipient which is incurred by supplier. Total 4 conditions should be satisfied. Condition number 1, the recipient should authorize the supplier to incur the expenditure. So in that GST example, so recipient is asking you to incur the GST payment and then recover from him. So supplier should enter into agreement with the recipient to act as pure agent. Supplier should recover only the actual amount. How much GST you paid on behalf of your client? 2000. So how much you should recover? If you recover more than 2000, you are not a pure agent. Is it clear? Then supplier should not hold the title. That GST receipt should be in whose name? Your name or client's name? Client's name. Supplier should not use the said goods or service so procured for his personal purpose. Your personal GST paid or client's GST paid? Client's GST paid. Then only it will come. Okay, 4 conditions. First, contractual agreement. Number 2, only the actual amount should be recovered. Supplier should not hold the title and it should not be used for the personal purpose. Got it? So that is about this question number 16. Then question number 17. So can you all get up and sit once? Stand up. What afternoon curd rice you had, huh? Sit, 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 sit. Allah thungreenga ukkandu. Online they left the discussion. So morning 11 o'clock, few students were there. By 1 o'clock and all, everyone thought, okay, Sunday, like that they went. And afternoon and all, no one is there. Maybe they can watch later on also. But time is important. Now you are covering this in half a day, so that you don't have to spare extra time. I don't know whether you tried this in YouTube and all. When you sit, no, if the lecture is for 2 hours, it will take 4-5 hours for you. 4-5 days also it happened. Okay, it happens, really it happens, because you know, when it is at home, when we sit, we have a facility to pass, and we will get like that one notification, we will open that, some WhatsApp, and some issue will come, we will call, and thereafter the mood to come back, very difficult here. Then, okay, we completed 5 questions, so we will open Instagram for some time, scrolling and all. It will, we think 5 minutes, 10 minutes, but it will go for 2 hours, really. And thereafter again we come back, you know, that mood will not be there. So recorded classes when we are watching, it is very, very difficult. But no other go, lot of people will be dependent on that. That's why I always conduct face-to-face class. Any revision, anything, I do that, so that some students who sit here, they will find he is watching me or he is making me to listen, so that you will listen. Okay, fine. Coming back to this. Okay, some students are watching. Good, good, very good. Keep it up. Mr. Lakshmi Narayanan is a registered supplier in the state of Orissa. This is CMA past exam question. This is a CMA past exam question. Mr. Lakshmi Narayanan is a registered supplier in the state of Orissa under the regular scheme. Following are the details of transaction entered into by him during the half year ended on 31st March 2021. Particulars: intrastate supply of product Sun, GST rate 12%, 30 lakhs. Intrastate supply of product Moon, GST payable by the recipient under RCM 10 lakhs. Remember, whenever my outward supply is covered under RCM, for ITC purpose it will be treated as exempted supply. Got it? I am making sale to you. I will not pay GST. You will pay GST. But for me it is treated as exempted, which means I cannot take ITC on my inward supply. Got it? Then export of product Sun without payment of GST. So export is what? Zero rated. Zero rated. Even though I am not paying any GST, still I can take ITC. Yes. Carefully listen, pa. The general rule is, if my outward supply is taxable, I can take ITC on my inward supply. If my outward supply is exempted, I cannot take ITC on my inward supply. Clear? Now, so we have a special case, that is zero rated supplies. When my outward supply is zero rated. Why zero rated is called as zero rated? Because the rate is zero. No, not like that. What is the reason? The burden will become zero. How burden will become zero in case of zero rated? First I will pay IGST. That IGST paid I will get as a refund. Simple pa. First I am paying IGST. That IGST paid on export I will get as a refund. Means what is my burden? That's why it is zero rated. Okay. Then second option is what? I will export without payment of IGST. Then I will get the refund of ITC on my inward supply. Then also my burden will become zero. Got it? So even though my outward supply is zero rated, I am not paying any GST, but I can take ITC on my inward supplies. Is it clear? Then next point, that is this point. So whenever you are exporting a product without payment of GST, but export is zero rated, you can still enjoy ITC. So it will be classified as what turnover? Taxable turnover, exempted turnover, taxable turnover. Sir, why are we discussing all these things, sir? Because there is one point which says, whenever you have the common inward supplies, okay, which is partly used for taxable and partly used for exempted, okay. So see this discussion. So I have some inward supplies. So here itself I will write, I have some inward supplies. I have some inward supplies. You don't have to make note, just listen. I have some inward supplies which is partly used for taxable and which is partly used for exempted, okay. So when it is partly used for taxable, partly used for exempted, definitely we cannot take full credit on this inward supplies, correct? Say for example, this inward supply is 10 lakhs excluding GST at 12%, okay. Then what is the ITC that we have? 1,20,000, am I right? Whereas taxable turnover is say 40 lakhs and exempted turnover is say 20 lakhs. Tell me how much ITC I can enjoy. What is the eligible ITC? This is total ITC, but this is not my eligible ITC. Why it is not my eligible ITC? Because I am using this inward supply partly for exempted. So what should I do? First, ITC availed. How much is the ITC availed? 1,20,000 minus ITC reversed. What is that ITC reversed? 1,20,000 into what is my exempted turnover? 20 lakhs divided by what is my total turnover? 60 lakhs. To that extent I need to reverse. Is it clear? Why? Because 20 lakhs portion is exempted for that reason. So 1,20,000 into 20 by 60. Please calculate and tell me. 40,000. So 40,000 needs to be reduced. So what is my net eligible ITC? 80,000 will be taken as eligible ITC. Is it clear? So eligible ITC will be only 80,000. This is how we need to compute the ITC when we have partly taxable and partly exempted. For this purpose, they have given this data. So one product is taxable, so it will come under taxable turnover, okay. One product, Moon, GST payable by recipient. Even though GST is payable by recipient, but for supplier it will be treated as exempted. Taxable to whom? Recipient. For supplier it will be treated as exempted. So it will come under exempted turnover. Then where 0 rated you will keep, even though it is 0 rated, you will keep it under taxable turnover. All this is for ITC computation. Okay. Next, legal services received from an advocate for product son. How much? 2 lakhs. Son is what? That's what, taxable, exempted. Taxable. Son is taxable. So legal service is fully used for taxable. Can we enjoy the ITC? Any proportionate calculation is required. Fully we can enjoy ITC. Got it? Ayya, son is in 2 places. Both the places it is taxable turnover. When inward supply is fully used for taxable outward supply, can we take ITC? So therefore on these legal services, whatever GST we paid under RCM, we can take ITC. First 3 is your outward supply. This is your inward supply, received, inward supply. Got it? On that inward supply, legal services is covered under RCM. Advocate services, arbitrator service is covered under RCM. So whatever GST we pay under RCM, we can avail it as ITC. Fully can we avail, or should we do a computation like this? Fully you can avail. Why fully you can avail? Because it is used fully for taxable turnover. You got it? Or taxable outward supplies. Got the clarity? Next one. Common inputs used for supplies of above. Common means for both taxable and exempted. We have partly taxable, partly exempted. Proportionately we need to reverse. Proportionately we need to reverse. And all amounts given above excluding GST wherever applicable. GST rate on service is 18%. All conditions for availing ITC have been availed, complied. Turnover during the earlier financial year was 35 lakhs. Why they gave this line? Turnover during the earlier financial year was 35 lakhs. Because for legal service we have an exemption. What is that? Services provided by individual advocate or firm of advocate to a business entity whose turnover during the previous year does not exceed threshold limit for registration, then the service is exempted. What is their turnover during the previous year? 35 lakhs. Means it is more than 20 lakhs. Therefore, whether this legal service is taxable or exempted? Taxable. For that purpose they have given this. Understood? Now, can we do this question answer? So you take your notebooks, one rough page you take. Just some rough page you take, we will do. So what is the computation we need to do this? You are required to compute the net GST liability. Whenever there is a computation related to net GST liability, you need to do it in 4 statements. Okay, 4 statements. First, we need to compute the gross GST payable on outward supplies. Okay, that is first statement. Second statement is GST payable on inward supplies under RCM. Third statement will be computation of ITC, availed, reversed and net eligible ITC. Fourth statement will be computation of net GST payable. Can we do it as per that? Yes. So, I will just write, you make note first. What is the first statement you need to do? Computation of, write down, computation of gross GST payable on what supplies? Outward supplies. Computation of gross GST payable on outward supplies. That is your first statement. In this, you need to write particulars value, CGST, SGST, IGST. Because sometimes there will be intrastate supplies, sometimes there will be interstate supplies, okay, for that reason. Now, what is the first one? Intrastate supplies of product Sun. Okay, so write down in particulars, sale of product Sun. Sale of product Sun. What is the value? In value column you write down 30 lakhs. And in CGST, SGST column, why CGST, SGST column? Because it is intrastate. In CGST column you take 30 lakhs into 9%, because the rate of GST given is 18, means CGST 9, SGST 9. 2 lakh 70, 2 lakh 70, got it? Next, intrastate supply of Moon. So sale of product Moon under RCM, write down in particulars, sale of product Moon under RCM. In particulars column write down sale of product Moon. You want me to write? I can tell, you can write na. How many times I only should do? You try, no. Only when you try you will know how to present in exam, okay. So first you have written sale of product Sun. In particulars you did the value, you have written the tax component. Next, sale of product Moon under RCM hyphen treated as exempted for ITC purpose. Treated as exempted for ITC purpose. All these things you need to write in the particular column. Treated as exempted for ITC purpose. Value how much? 10 lakhs. Don't take any liability because it is payable by recipient under RCM. So don't add it to your liability. Is it clear? You are supplier. Don't add it to liability. Just write that. Okay. And here it is given as 12%. Sorry. So you change that 30 lakhs into 6% and 6%, because clearly it is given as 12%. So you go by 12%. Wherever the rate is not given, then we need to take 18%. That too for services only it is 18%. So here it will be 12% only. So 6%, 6%. So then it is not 2 lakh 70. It will be 1 lakh 80. 1 lakh 80, 1 lakh 80. CGST column 1 lakh 80, SGST column 1 lakh 80. For product Sun. For product Moon, no liability. Then next, export of Sun. Next line in particulars. Export of Sun. Which option they are going? With payment or without payment? Without payment. Without payment. Hyphen treated as what? Taxable. Taxable for ITC purpose. Treated as taxable for ITC purpose. Value 5 lakhs. GST, no GST. Only 3 transactions. Now you total this. 1 lakh 80, 1 lakh 80, 0. Correct? 1 lakh 80, 1 lakh 80, 0. What is this? Gross GST payable. Gross GST payable under FCM. Gross GST payable under FCM. We finished the first statement na? Now next statement. So next second statement is computation of GST payable on inward supplies. GST payable on inward supplies under RCM. Computation of GST payable on inward supplies under RCM. Again same particulars. Only CGST, SGST, IGST. Value not required. Value not required. Just CGST, SGST, IGST. Now we will analyze the inward supplies. What is the inward supply that we have? First inward supply. Legal services received. Okay. So whether it will come under RCM? Yes. Write down legal services. In particulars, write down legal services. And what should be taken as the liability? 2 lakhs into 18%. Why 2 lakhs into 18%? Rate is clearly given for services as 18%. And whether it is intrastate or interstate. So they have not given anything. So we can take, mostly legal services will be intrastate only, within the state only they will receive. So therefore we will take the assumption that it is intrastate. Okay. So 2 lakhs into 9% and 9%, CGST, SGST column. So how much? 18,000, 18,000, 18,000, 18,000. Next. We don't have anything else. Only one transaction is in RCM. So that over. Then next, we'll go to third statement. What is the third statement? Computation of ITZ. Computation of ITZ availed, comma, reversed, and net eligible ITC. Net eligible ITC. So our friend is telling my cases are always in Supreme Court G. If that be the case, interstate only, because Supreme Court means you may take an advocate from other state also. So but usually we are taking assumption that it is intrastate, but in question it has to be given. But that question, what they did, they have done lot of mistakes in that answer. Okay. So I am just telling you what is the perfect way of arriving at the answer. They have not considered intrastate, interstate. Everything they did in one computation itself. See this. They have not considered intrastate, interstate. Everything is one computation itself they completed. Okay. But that is not acceptable. You should just present it properly. Okay. Next. So in this computation of ITC availed, reverse and net eligible ITC, again same particulars, CGST, SGST, IGST. First, legal services. For legal services we can take ITC na? Any blocked credit? No, legal service is not there in blocked credit. And is it used in the course or furtherance of business? Yes. Can we take ITC? Yes. But GST we paid under RCM, it's okay. Whatever GST we paid under RCM we can take as ITC. So in the same month or next month, same month we can take ITC. Only thing, invoice should have been issued. If the supplier is unregistered, the recipient should give the invoice. That's what amendment today we have learnt. Okay. Now what is the CGST, SGST component? 18,000, 18,000 we can avail as ITC. Then common inputs. What is that common inputs? What's the value of common inputs pa? 20 lakhs. On that 12%, 25 lakhs. On that 25 lakhs, 12% means 6%, 6%. We will take it as intrastate. We will assume it as intrastate. So 25 lakhs into 6% is how much? 1 lakh. 1,50,000, 1,50,000 and 1,50,000. This is called as ITC availed. ITC availed. 1,68,000, 1,68,000 and 0 minus ITC reversed. What is the ITC reversed? How much is exempted turnover? Go to the first statement. Which transaction is exempted? Which transaction is exempted? Go to the first statement in your answer. Sale of moon is only exempted. How much is the turnover? 10 lakhs. What is the total turnover? 35 lakhs. 45 lakhs means 10 divided by 45 is what you need to reverse. Is it clear, pa? Exempted turnover divided by total turnover. But listen, whether entire 1,68,000 we need to reverse, 1,50,000 only we need to reverse, 1,50,000 only we need to reverse, because that legal service is exclusively used for taxable. But in that attempt, CMA Institute made a mistake. They reversed on entire 1,68,000. Okay. And sir, what should we do if it is our exam? Don't worry, because at that time and all, no one knows properly anything, and therefore it was like that. Suggested answers and all was not released, not made available public, etc. That was immediately before they converted to this MCQ. CMA Institute converted everything into MCQ, you know that? Objective exam. At that time, crazily people cleared. If they write now and all, gone. They will not qualify, okay. So at that time, amazing. They used to sit in the exam hall and send me message. Sir, what is the answer for this, sir, like that. Really? Bloody idiot, you are in the exam, no, you are sending me message. No, sir, they are allowing mobile and all. Because it was in a computer lab. Some engineering college, computer lab, they were allowed. They are sitting there and Telegram they are opening and they are taking photo and sending me. Sir, tell me the answers are like that. I told. And that idiot should have written answer and come back, na. He is circulating that. Everyone. Okay. So Tharun sir said, this is the answer, you answer like that. Many people cleared at that time, like discussion, group discussion only they cleared, okay. And now and all, it is, everything is made up public, and if there is error also, immediately lot of faculties are there in north also, south also, many people are there, they will reply immediately to CMA Institute, and thanks to social media, it is now working to a greater extent, things will fall in line, don't worry, okay. So now they will not make mistakes and all of this sort, but that old question, I am just answering as per the today's relevant provision, okay. So ITC reverse, what should be taken? 1,50,000 into what by what? 10 by 45. How much? 1,50,000 into 10 by 45. 33,333. Yes. So that much we need to reverse. Is it 10 by 45 correct only? Yes. 10 divided by 45. Say this. What they did is, total ITC on inward supply 25 lakhs into 12%, 3 lakhs, and that 3 lakhs into 10 by 45, 66,667. Okay. So this I have amended. Suggested answer is not there. Suggested answer is full. Full they have taken and then they have reversed. Next. So what will be your net eligible ITC? Net eligible ITC. Sir, total turnover is 35 lakhs. Sir. 45 only, no? 45 is correct only, pa. 30, 10, 5, 45. Correct only. Total, exempted to total. Exempted is 10, total is 45. How much? 667. 1,34,667 0. Now last statement we need to do. What is that last statement? Computation of net GST payable. Computation of net GST payable. While doing the computation of net GST payable, first, what is the format? Simple. Gross GST. First we need to take gross GST. What is the gross GST? Gross GST 1 lakh 1,18,000. 1,80,000 1,80,000, 0. This is your gross GST. Don't add RCM liability. First reduce ITC, then add RCM liability. But ITC balance is less than the gross liability now. What if the ITC is like 1,80,000? What if 1,80,000 is the ITC? Then can we reduce entire 1,80,000? Yes, but there is one rule, rule 86B. What does that rule 86B says? If your taxable turnover in a month exceeds 50 lakhs, then you have to pay 1% of your liability through cash. Only 99% of the liability you can adjust from the credit ledger. But that is not applicable here. Why not applicable here? What is your taxable turnover? Only 35 lakhs. 45 lakhs minus 10, 35 lakhs. In that also export should not be taken in taxable turnover. Got it? So purely taxable turnover is only, what is your purely taxable turnover? See there, 30 lakhs, only 30 lakhs. It does not exceed 50 lakhs. Due to that reason, rule 86B will not be applicable. Anyhow, rule 86B not applicable here because we don't have that much of ITC, but I'm just telling you for application purpose, okay? Minus ITC utilized. What is that ITC utilized? 1,34,667. Now add back RCM liability. What is that RCM liability? Statement 2, already we did 18,000, 18,000. This will be taken as the net GST payable. Net GST payable. So what is the net GST payable? 63,333 and 63,333 will be taken as the net GST payable. So you can check the answer here. So 63,333, 63,333, what is the net GST payable? 1,26,667. Sir, 666. Okay. Total. That 63,333 plus 63,333 total is 1,26,666. Same answer only we get. Only thing, presentation you follow. Okay. For the presentation sake only I gave you. So this format you keep in mind. Whenever you get a question on computation of net GST payable, just apply this format, you will get the correct answer. Okay. Now we are moving on to question number 18. Sakshita Private Limited, a registered supplier, furnished the following details relating to supplies effected during December 2021. Sale price charged to customers within the state 10 lakhs. Service charges levied in the invoices 11,000. Packing, weightment, commission, prompt payment discount indicated in invoice 1% if payment made within 1 month. The tax rates are given here. Additional information, 60% of the customers did not make the payment within 1 month from the date of supply. Hence the supplier recovered the prompt payment discount offered to them. Determine the GST liability first. So this is a question related to valuation. So first see what is the sale price. How much is the sale price? 10 lakhs. That will be taken as the transaction value. Service charges levied in the invoices. Service charges means normal expenses. Who incurred? Supplier, and recovered from the recipient. So it is to be included in the value. But in the given price they have not given anything, means it is not excluded, not included. So we need to add. Then next, packing and forwarding expenses incidental to sale. It is expenditure to be included. In the given price not included. So we need to add. Weightment charges shown separately in invoices. These also all expenses. All these are before delivery only na. Packing, weightment, service charges, everything. So we need to add these three. Now, commission charged to buyers. So that is also to be included. So all these expenditure to be included. What about the prompt payment discount? Are we giving the discount or not giving the discount? Indicated in invoice 1% if payment made within 1 month. Means it's a post supply discount. But terms are agreed before at the time of supply? Yes. So 10 lakhs plus 11,000, 14,200, 7,800, 15,000. So total 10 lakh 48,000. But prompt payment discount is 1%. 1% into 10 lakhs. How much? 10,000. 10,000. What they are doing is that first they are giving the discount. Carefully listen. Carefully listen. 60% of the customers did not make the payment within 1 month. Hence the supplier recovered the prompt payment discount. Means what? First the discount is already given. And if you are not making payment on time, it is recovered. Means at the time of supply itself the discount is given now. Even though it appears to be post-supply discount, but in this case they have already given the discount, means it's a pre-supply discount allowed as deduction. So therefore minus 10,000, minus 10,000. So therefore the value of taxable supply will be 10,38,000. On the 10,38,000, it is clearly given that it is what? Intrastate, interstate, intrastate, within state. Therefore CGST is 6%, SGST is 6%. Is it clear? Now, simple question. Only twist is what you know, that usually we think it as post-supply discount, but it is a discount given at the time of supply itself. Now, what is the treatment of the discount recovered? The discount recovered, what is the treatment? That will be included in the value whenever it is recovered. Means for that, what is the document that is given by supplier to recipient? Debit note. Is it clear? So see the note. Prompt payment discount is deductible because it is not the time of supply. It is immaterial that 60% of the customer did not make the payment within the eligible period of 1 month. When the supplier issues debit note and recovers the same from buyer, the same will be taxable then. Whenever it is recovered, at the time supplier has to give a debit note and they need to pay GST on that. Is it clear? That line we have to write in exam. Got it? Next. Question number 19. PQR Company Limited, a registered supplier of Bengaluru, Karnataka, is a manufacturer of goods. The company provides the following information pertaining to GST paid on input services. So all these are inward supplies on which GST paid. Now, all the above input supplies except 3 has been used in manufacture of taxable goods. Compute the amount of net input tax credit available. So we need to compute the ITC. If it is a blocked credit, we cannot take ITC. Otherwise, we can take ITC. Okay. So look into the first one. Life insurance premium paid by the company on the life of factory employees as per the policy of the company. Do we have any blocked credit for insurance? Yes. So please open your book. You can see the blocked credits point. CMA final exam blocked credits are very, very important because quite a long time, almost every attempt they have tested on blocked credits, input tax credit. You cannot imagine your question paper without input tax credit. That too in input tax credit, blocked credits will definitely be tested. So you can see here insurance, page number 161 you take. Page number 161. See there, 1, 2, 3, fourth point, food and beverages, outdoor catering, beauty treatment including cosmetic, plastic and hair transplantation, life insurance and health insurance is blocked credit. However, we have 3 exceptions. What are the 3 exceptions? Exception number 1, if it is provided by employer to employee under a statutory obligation, then ITC is available. Now, in this question, is it under the statutory obligation or as per the policy of the company? Policy of the company, not statutory obligation. So therefore, that exception will not come. Second exception, if inward supply, outward supply in the same category, are they in the business of insurance? No, they are in the business of manufacture. If they are in the business of insurance, their inward supply also insurance, outward supply also insurance, they can take ITC. Third exception, inward supply is part or component of the composite or mixed outward supply, that is also not applicable here. So first of all, they are not providing any insurance services, they are only receiving the insurance services. So it's a blocked credit. ITC available or ITC not available? ITC not available. Then second one, raw material purchased for which invoice is missing but delivery challan is available. No, they cannot take ITC. One of the condition for availment of ITC is that the person availing ITC should be in possession of tax paid document. If the invoice is missing, they cannot take ITC on that. Okay. So whatever explanations I am giving, that 1 or 2 lines you need to write. Okay. Next, raw material purchased which are used for zero rated outward supply. Can they take ITC? Yes. Just now in the previous question I told you, when our outward supply is zero rated, we can definitely take ITC on our inward supply. So ITC is available. Works contract service used for repair of factory building which is debited in the P&L. Generally construction expenditure is block credit, but we have an exception. What is that? If it is charged to P&L, we can take ITC. Company purchased the capital goods for rupees 4 lakh and claimed depreciation of 44,800 on full amount of 4,48,000. So can they take ITC? No. Why? Because they computed depreciation on the tax component. That's why ITC not available. In the month of September 2020, PQR Company Limited availed input tax credit of 2,40,000 on purchase of raw material which was directly sent to the job workers premises under a challan of 25/9/2020. The said raw material has not been received back from the job worker up to 30/4/2021. Now listen, if the goods sent on job work is not received within 1 year, that is the processed goods are not received within 1 year, then it is deemed as supply on the day it is sent to the job work. What is the date on which it is sent to job work? 25/9/2020. As on 34, whether 1 year expired or not expired? Not expired, pa. September, pa. September. You know, na, January, February, March and all. September to April, how 1 year will get over? Pa? September to September only will get over 1 year, correct? So we are still in April only, okay? So it is not more than 1 year. So whether we need to treat as supply and pay any GST? No. So there is no treatment for this, just ignore it, okay? So what is the ITC? 50,000 plus 30,000. So total 80,000. Hence ITC reversal not required for the last line. Why? Because it is received back within 1 year, correct? Understood this one? Any doubt in this? Doubt, Amma? 1 year. Goods sent on job work should be received back within 1 year. And it can be extended for a further period of 1 year. For capital goods, it will be 3 years and it can be extended for a further period of 2 years. Okay. Then look into this question number 20. Arise India Private Limited, a company engaged in manufacture of various goods, has its corporate office at Mumbai and manufacturing units in Pune and Chennai and service center in Kolkata and Bengaluru. So they have business in 4 states: Pune, Maharashtra, Chennai, Tamil Nadu, Kolkata, West Bengal and Bengaluru, Karnataka. And where are their head office located? Corporate office is in Mumbai, Maharashtra. Okay. Now, the corporate office registered as input service distributor. All the units and centers of Arise India Private Limited are operational in the current year. The corporate office intends to distribute the ITC for the month of October. The following details are available for such distribution. So, this is a question related to input service distributor. Okay. Now, remember, when the head office is in the same state and the branch also in the same state, CGST credit distributed as CGST, SGST as SGST, IGST as IGST. But for the branches in the other state, so all credits will be distributed as IGST only. Okay. So now, when you prepare the table in the answer, what you need to do? Where is the head office located? Mumbai. And one branch is in Pune. Both Pune and Mumbai is in the same state. Sir, how do we know that in exam? We may not know Mumbai and Pune in the same state or not. So they will give in the question itself like this. So the manufacturing units Pune and Chennai and service center Kolkata and Bangalore registered in Maharashtra, Tamil Nadu, West Bengal, like that they will give. Mostly they will give, don't worry, okay. But in case, this is little bit general knowledge you should be having, okay. Now, in the same state, what we need to do? So, like this, you need to prepare a template. First, Pune unit. For Pune unit, it will be 3 columns: CGST, SGST, IGST. But all other units, you don't have to make 3 columns, only 1 column. What is that? IGST. So, what is the next unit? Pune unit, particulars, Pune unit, Chennai unit. Chennai unit is fully IGST. Next unit, Kolkata, that is also IGST. Bengaluru, that is also IGST. Okay. Next, what is the first one? Unit or center, Pune. For Pune, they gave turnover for the quarter ending September. Sir, on what basis we need to distribute the ITC? Either previous year turnover or the previous quarter turnover. Right now, it is for which month? October month. October month, they can take either previous financial year or the last quarter. What is the last quarter ending? September. So, they are distributing based on quarter data. Anything can be taken. So, Pune 20 lakhs, Chennai 30, Kolkata 10, Bengaluru 40 lakhs. And eligible ITC on input service attributable to a specific unit or center for the month of October. The specific ITC means what? That particular division related ITC should be distributed to that division only. When it is common ITC only, it should be distributed to all the divisions based on turnover ratio. So, for Pune, what is this specific credit? CGST 30, SGST 30, IGST 30. Please update that. So, specific ITC for Pune 30,000, 30,000 and 3 lakhs. Correct? It's clearly given by the question itself. Next, Chennai, what is the specific ITC for Chennai? 2 lakh 40, sorry, 24,000, 6,000, 6,000. Should we separately distribute? No. Group everything as IGST and give 24 plus 6 plus 6. How much? 36,000 for Chennai. So, entire 36,000 is given for Chennai. For Kolkata and that is Kolkata and Bengaluru, we don't have any specific ITC. Got it? Then, next, below that table, input services used by all units and centers, means it is common. Eligible ITC, ineligible ITC, they have given. Should we distribute both or only eligible ITC we need to distribute? See, head office will distribute the entire credit to branch office. Then the branch office will decide what is eligible, what is ineligible. Is it clear or not? For head office, whatever they get, they have to give. Eligible, not eligible, blocked credit, not a blocked credit, they will not check. Fully they will distribute. Is it clear? Their job is distribution job. So, whatever they get, they need to distribute. So, both eligible and ineligible, both will be distributed. Is it clear? So, do the total. What is the total of this eligible and ineligible? 1 lakh 20 plus 40, 1 lakh 60, 1 lakh 60 and 2 lakh 40 plus 80, that is 3 lakh 20. So, the entire credit will be distributed. Is it clear? But to Pune unit, it will be distributed as CGST, SGST, IGST. But all other units, it will be distributed as IGST. Correct? Now, first you take CGST credit. How much is the CGST credit to be distributed? 1 lakh 60. In that 1 lakh 60, what is the Pune unit ratio? 20 divided by total. What is total? 20 plus 30, 50 plus 10 plus 40, 100. So, 20 by 100 or 2 by 10. So, 1 lakh 60,000. See this. Common services 1 lakh 60,000 into 2 by 10. Okay. SGST how much? 1,60,000 into 2 by 10. IGST how much? 3 lakh. 1,60,000 only na pa. 1,60,000, 1,60,000, 3 lakh 20. So 3 lakh 20 into 2 by 10. You understood or not? Hey, this is just like your overheads pa. Costing overheads distribution is there na. Like that it is. So if you are not understanding this, it's too much. So your calculator will do the job. You don't have to do anything. Okay. So 1,60,000 into 2 by 10. 1,60,000 into 2 by 10. How much? 32,000. 32,000. 3 lakh 20 into 2 by 10. 64,000. Now you don't do separately like this. Take everything together. Take everything together to the total of this. What is the total of this? 1,60,000, 1,60,000. How much? 3 lakh 20. 3 lakh 20 plus 3 lakh 20. 6 lakh 40. 6 lakh 40 into, for Chennai, what is the ratio? 3 by 10. So 6 lakh 40,000 into 6 lakh 40,000 into 3 by 10. Okay. Then how much? 1,92,000. Then again 6 lakh 40,000 into, for Kolkata what is the turnover? 10 lakhs. Therefore 1 by 10. 64,000. Then last 6 lakh 40,000 into Bengaluru, what is the turnover? 4 by 10. That will be 2 lakh 56,000. That's it. Easy. Next, inputs used by Pune unit and Kolkata center. What we should do? Inputs used by Pune unit and Kolkata center. What we need to do? Distribute between Pune and Kolkata based on the ratio of Pune and Kolkata. Absolutely wrong answer. It is not input distributor or capital good distributor. What is the name? Input service distributor. So inputs and all cannot be distributed. Is it clear? Inputs cannot be distributed. What is the name of this person? Input service distributor. So inputs cannot be distributed, capital goods cannot be distributed. Only input service related credit only can be distributed. Be careful. Okay. Next, input services used by Chennai unit and Bengaluru center. Then now you are correct. Distributed to Chennai and Bengaluru. Do the total. What is the total? 70,000. And what is the ratio? For Chennai and Bengaluru, 3:4. Correct? 7. So 3 by 7, 4 by 7. So say this. Services to Chennai and Bengaluru. So for Pune there is nothing. For Chennai, 70,000 into 3 by 7, that is 30,000. And for Bengaluru it is 70,000 into 4 by 7, that is 40,000. Only those two turnover ratio we should take, that is 30 lakhs and 40 lakhs. So 3:4, that is 3 by 7, 4 by 7. Now if you do the total, you will get the answer. That is the answer for this question. Okay. Pray God that you should get this question and all, this type of question. There is nothing, only little bit trap and all is there, but otherwise you can do. But it will eat your time. Lot of computations is involved, so it will eat your time, but otherwise you will get the correct answer for sure. Finished? So the answer will be like this, but I have just given it in one column, but you need to separate it like CGST, SGST and IGST. Next, look into question number 21. On 25th August, Messrs. Agarwal and Agarwal, a registered supplier of taxable goods located in Bengaluru, Karnataka, purchased one machine for 12,39,000 including IGST from one supplier of Maharashtra who issued the invoice on the same date. Agarwal and Agarwal put the machinery to use on the same day and availed ITC for the eligible amount. But this statement is actually irrelevant. Whenever they use, they can take ITC in the same month. I mean, not necessary that they have to take ITC only in the month in which they are put to use. That is only for income tax depreciation. Depreciation you will compute based on put to use. But for availment of ITC and all, put to use is irrelevant. You purchase the asset, you are not using also, you can take ITC. Okay. Then, so therefore, they have taken the ITC. And Agarwal use the machine in the process of manufacture of taxable goods. However, Agarwal sold this machine to Suresh Kumar of Andhra Pradesh on 20th August of next year. What is the date on which it is purchased? 25th August. And when are they selling? 20th August next year. How many quarters they have used? 4 or 5? August. August means July, August, September, 1 quarter. Then October, November, December. Next year, Jan, Feb, March, April, May, June, July, August, September. 5 quarters. You understood? Sir, how sir? 1 year only na sir? You see it like quarter, calendar quarter. Calendar quarter. That too quarter or part thereof. First August comes in, quarter ending September. Then October, November, December. Next year, Jan, Feb, March, April, May, June. Then again few days in the next quarter, July, August we are using. So 5 quarters. Okay. For 5 quarters we need to reduce. Which computation? Today only we discussed 18 subsection 6. What we need to do? ITC availed minus 5%. For how many quarters? 5 quarters. What is the ITC availed? What is the ITC availed? 12,39,000 into 18 by 118. Why 18 by 118? Because this 12,39,000 is including IGST. So 12,39,000 into 18 by 118, how much? 1,89,000 minus 5% into 5 quarters, that is 25% you reduce. 1,89,000 minus 25%, how much? 1,41,750 or GST on sale value. What is the price at which they are selling to Mr. Suresh Kumar of Andhra Pradesh? 7,50,000. 7,50,000 into 18%, how much? 1,35,000. Whichever is higher, 1,41,750. So they have to pay GST of 1,41,750. Can this 1,41,750 be availed as ITC by the recipient? Yes. Whatever GST paid by supplier, the recipient can take ITC. Okay. Then next one. Question number 22. Quanto Enterprises is not required to register under CGST Act. So they are not required to register. However, it applied for voluntary registration on 17 September. Registration certificate has been granted to the firm on 25th September. So means from when they are required to pay GST? 25th September. Now the CGST and SGST liability for the month of September is 24,000 each. Now whenever you are getting registered voluntarily, whatever is the closing stock before the date of registration certificate, on that GST paid can be availed as ITC. What is the closing stock? Inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of FG held in stock. Again I am repeating, in this question, what is the date on which they are getting registered? 25th of September. As on 24th September, they will have closing stock. That closing stock only they will use for making sale from 25th September. Means logically on that closing stock, whatever GST paid, they would not have taken ITC. Why they would not have taken ITC? Because at the time they are unregistered. Now only they are getting registered. So they can take ITC. On what? Inputs as such held in stock. As on 24th September, whatever inputs is there, on that GST paid can be taken. Then inputs in WIP. We should see WIP in stock. In the WIP there will be inputs content on that whatever GST paid. Now we need to see finished goods in stock. In that finished goods, what is purchased? Inputs. On that input GST paid can be taken as ITC. Is it clear? But very important condition is that all these inputs should have been purchased within 1 year prior to the closing stock date. Means 24th September, within 1 year only this input should be purchased. If this input is purchased beyond 1 year, means old stock and all, they are not giving the credit benefit. Is it clear? Are you getting this? Now interpret the closing stock details. Quanto Enterprises provide the following information regarding capital goods and inputs held in stock as on 24th September. Now you understood the relevance of 24th September. Before the date they got the registration certificate. Now inputs procured on 2nd September lying in stock. Is it within 1 year prior? Yes. And inputs as such held in stock. Can we take ITC? Yes. So this 4,500 we can take ITC. Inputs received on 21st July contained in semi-finished goods held in stock. Is it within 1 year? Yes. So this also we can take as ITC. Value of inputs contained in finished goods held in stock 2 lakhs. Such inputs were procured on 19th September last year. Invoice for the goods was also same date. Can we take ITC? No, because it is beyond 1 year. 24th September, what is within 1 year? Within 1 year is 24th September of previous year only, correct? 19th September of previous year is beyond 1 year. You got it? So that's why we cannot take ITC on that. Next. Inputs valued at 50,000 procured on 13th September lying in stock. Can we take ITC? Yes. Same month. Same month, not previous year, same month. Okay. The previous one only 19th September last year. Capital goods procured on 12th September, same year. Can we take ITC? Same month? No, because we can take ITC only on 3 PA. What are those 3? Inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of finished goods held in stock. Only 3. Got it? Capital goods and all they cannot take. So you are required to compute the net GST payable from electronic cash ledger by Quanto Enterprises. Tell me how much is their liability? CGST 24,000, SGST 24,000. Correct? Now how much is the credit they have? IGST 9,000, CGST 4,500 and 7,500. How much? 12,000. So see this. First they have IGST 9,000. That 9,000 can be utilized for payment of CGST, SGST, any manner, any proportion. So full 9,000 is used for CGST. Then 12,000 CGST credit, SGST credit is adjusted. So the net GST payable will be 3,000 and 12,000. You know now manner of utilization of credit. First which credit you need to exhaust? IGST credit. IGST credit should be fully exhausted. That too, first you need to use it for payment of IGST. Thereafter between CGST, SGST in any manner, any proportion, then only we need to touch CGST credit and SGST credit. Accordingly, we will utilize. So therefore, the net GST payable will be 3,000 and 12,000. Got it? So this is related to this question. Nothing, this much only. Capital goods and all we cannot take as credit. Okay, only inputs held in stock, inputs semi-finished goods and this 9,000. Okay, then we'll take a break and we'll meet at 4:30. We'll continue with the remaining questions. You have a quick break, drink some coffee or tea and come back. Okay, we'll start. Look into question number 23. Hema Pesticides Private Limited, registered person under GST law, furnishes the following data for the GST paid by them in the month of February. So these also related to that input tax credit. You are required to determine the quantum of input tax credit available to the above registered supplier for the given month. GST on machinery purchased and used in the factory premises. So machinery is not there in the block credit, and moreover it is used in the course or furtherance of business. So definitely we can take ITC with respect to this. GST on machinery purchased and sent directly to job worker working for the company. Can we still take ITC? Yes, because we have one concept of deemed delivery. Whenever the goods are delivered to a third person on behalf of the registered person, the date on which the third person has received, it is deemed that the recipient, the registered person has received, and they can take ITC. So even though the goods are directly sent to job worker, even then the date on which job worker is received is deemed that the registered person has received, and they can take ITC on this, no issue. Then next one, GST on car purchased used mostly for business purpose, 25% usage estimated for personal use. First of all, car is a blocked credit because it is a motor vehicle, capacity does not exceed 13 and it is not coming under the exceptions. Is it used for further supply? No. Is it the business of transportation of passengers? No. Imparting driving skills? No. So due to that reason ITC is not available. Then GST on raw material purchased. Goods are received in lots or installments and 25% of the material were received in February. Can we take ITC? Right now we are in February month. So February only 25% is received. So we have one provision which says that when goods are received in lots or installments, we can take ITC only on receipt of last lot or installment. So therefore we cannot take ITC on this now. We can take ITC only on receipt of last lot or installment. In the earlier month, GST has been paid on another lot for which 90% delivery has been completed. Then in the current month, balance material were received. GST paid in the earlier month was 1,60,000. Can we take ITC now? Yes, because we would not have taken ITC in the earlier month because earlier month only 90% is received. This month only fully received. So we can take ITC in this month. Then GST on health insurance premium paid for employees working in the factory, providing this is optional, and the company has taken this measure to improve relation with laborers, not because of statutory obligation. So can they take ITC? No. What if the health insurance is taken under a statutory obligation? Then ITC is available. So what is the total? Do the calculation. 92,000 plus 42,000 plus 1,60,000. How much? So that will be taken as the total ITC. Is it clear? Next. Look into question number 24. Messrs XYZ, a registered supplier, supplies the following goods and services for construction of building and complexes. Excavators for required period at per hour rate, manpower for operation of excavators at per day rate, soil testing and seismic evaluation at per sample rate. The excavators are invariably hired out along with operators. Similarly, operators are supplied only when excavator is hired out, means it is naturally bundled. If I am giving excavator, I am supplying operator. If I am giving operator, means I am giving the excavator, means it is naturally bundled. That is the meaning of this. Okay. Now, Messrs XYZ receives the following services: maintenance services for excavators, health insurance for operators of excavators, scientific and technical consultancy for soil testing. For the given month, the receipts of XYZ are as follows: higher charges for excavators, service charges for manpower for operation of excavators. These two are naturally bundled, correct? And both are taxable. See here, hiring of excavator 12%, manpower is 18%. Both are taxable, naturally bundled in the ordinary course of business. What is the principal supply? Hiring of excavators. If the excavator is not given, this will not come. So therefore, this 18,20,000 will be taxable at what rate? Principal supply rate, that will be 12%. So 18,20,000 into 12%. Do the calculation. 18,20,000 into 12%. 2,63,400. Correct? How much? 2,18,400. Then next one, next you see service charges for soil testing and seismic evaluation. This is an independent transaction, so it will be taxable at the separate rate. Soil testing and seismic evaluation 18%. So do the calculation, 2,50,000 into 18%. How much? 45,000. So what is the total? 2,63,400. That is their gross liability. Then next one, the GST paid during the said month on the services received by measures XYZ is as follows. Maintenance of excavators 1 lakh. Can they take ITC on this maintenance? Yes. So there is no blocked credit and it is in the course or furtherance of business. So they can take ITC on this. Health insurance. Health insurance is block credit. Just now we discussed. It is block credit, ITC not available. Scientific and technical consultancy for soil testing and seismic evaluation, ITC available. So 1 lakh plus 1 lakh, 2 lakhs is eligible for ITC. So therefore the balance will be 63,400. Got it? So simple question only. Only thing, ITC is connected with composite supply, mixed supply. Okay? And this is also one question. I think somewhere in RTP or some past exam this question is there. Okay? This question is from CMA source only. Then next, question number 25. Suraj Limited, a manufacturing concern in Rajasthan having aggregate turnover of 100 lakhs in financial year 1920 has opted for composition scheme, furnishes you with the following information for financial year 2021. It requires you to determine its composition tax liability and total tax liability. So they have opted for composition scheme. A person who is opting for composition scheme and they are manufacturer or trader. What is it they are? Manufacturer. What is the rate applicable to manufacturer if they are under composition scheme? 1% of total turnover, not taxable turnover. That is for trader. For a trader it is 1% for tax, 1% on taxable turnover. But for a manufacturer it will be 1% on total turnover. Suppose if it is supply of food service provider, then it will be 5% on total turnover. Here manufacturer means 1% on total turnover. That 1% also how they need to pay? 0.5% CGST and 0.5% SGST. Now, what if they have some inward supplies under RCM? On that they need to pay the regular rate. Even though they are under composition scheme, on inward supplies under RCM they need to pay the regular rate of GST. Got it? So see there. First, intrastate supply of goods X chargeable at 5%. Yes, take this. Intrastate supply of goods which are chargeable to nil rate. Take this. Intrastate supply of goods Y. Take this. Intrastate supply of services chargeable with 5%. Take this. On this entire amount, the GST will be payable at 0.5%. Sir, what about interest on fixed deposits? Should not be taken. Should not be taken. Interest on loans, advances, fixed deposits should not be taken into computation for a person opting for composition scheme. Both for deciding the eligibility to opt for composition scheme as well as for computation of GST under composition scheme. So accordingly, this 8 lakhs we should not take. Then what about inward supply under RCM? I told you regular rate. For these inward supplies under RCM, we need to take the regular rate of 5%. So do the computation. You do this 30 lakhs plus 18 lakhs plus 30 lakhs plus 6 lakhs. How much total? 84 lakhs. On that 84 lakhs into 1%. What is 84 lakhs into 1%? 84,000. And on inward supply under RCM, what is inward supply under RCM? 5 lakhs into 5%. That is 25,000. Got it? So total liability will be 84 and 25,000. 1,09,000. In the same question, they have given one more line. What will be your answer if that person is a trader? What is your answer? How it will differ? If that person is a trader, we need to pay GST under composition scheme only on taxable turnover. So what is the taxable turnover? 30 lakhs, 30 lakhs and 6 lakhs. Is it clear? Because this 18 lakhs is nil rate, that is exempted turnover. So we need to take only 30 plus 30 plus 6, that is 66 lakhs. 66 lakhs into 1% is how much? 66,000. On inward supply under RCM, the regular rate, that is 25,000. So total 91,000 will be taken as liability. Is it clear? This is a question related to computation of GST under composition scheme. Now see the another question. This is related to eligibility to opt for composition scheme. When a person can opt for composition scheme, there are two composition scheme now, 10.1 and 10.2a. 10.1 composition scheme when applicable, if their aggregate turnover during the previous year does not exceed 1.5 crores, current year they can opt for composition scheme. And for 8 states, it will be 75 lakhs. What are those 8 states? MMTN, SAM, MMTN, Manipur, Mizoram, Tripura, Nagaland. U for Uttarakhand, S for Sikkim, A for Arunachal Pradesh, and M for Meghalaya. The limit will be 75 lakhs. Got it? There is another composition scheme called as 10.2a. So when 10.2a composition scheme is applicable, if their aggregate turnover during the previous year does not exceed 50 lakhs, then they can opt for composition scheme during the current year. Got it? Now this question is based on that. Again, this is also CMA past exam question only. In this mighty 50, approximately some 20 to 25 questions are based on your CMA past exam, because those are the questions which can be asked. Not necessary they will repeat, but in those lines they will be. But what I have observed is that there are a number of repeated questions. Yes, which is rarely that will happen in tax exam. Usually costing, financial management, SCM, SFM, SPM, BV, CFR and all, repeated questions will come. But usually DTI, IDT and all, repeated questions rarely will come. But it's good thing that in your exam, CMA final exam, when I am analyzing the past exam question papers, lot of repeated questions are there. I mean, model same, numbers will change. Literally same model, no change in that. Numbers alone will change. So therefore, my suggestion to you is that depend on your past exam questions. Okay, all subjects. That is one other secret, another hack in CMA final exam. Past exam questions. The more and more you solve the past exam questions, the high chances that it will be coming. Not necessarily same, but same model will come. Okay. Half of the people are surviving only on suggested answers and go for exam, intermediate level and all. Okay. So really, they don't know anything. CMA intermediate students and all, they don't know anything. They buy this scanner, Suchita Prakashan scanner, like that one book is there. They will buy that. All past exam question they will sit and by heart, and they go for exam and vomit there, and they will clear. Understood? So that is another hack. Then coming back to this, say this, and nothing wrong. At least that art is required now. That art at least required. So they are also preparing. Next, say this: examine whether the suppliers are eligible for composition levy under section 10 in the following independent cases in the beginning of the financial year 22-23. Technology enterprises registered in Jalandhar, Punjab is engaged in manufacturing and supplying computer systems. Its aggregate turnover in the financial year 21-22 is 125 lakhs. For Punjab, what is the applicable limit? 1.5 crores. So whether it exceeds or it does not exceed? It does not exceed. Technology enterprise supplies computer systems manufactured by it within the state of Punjab only. So no problem. If they make interstate supplies, they are disqualified from composition scheme. So there are some disqualifications from composition scheme which you should be knowing. So remember that with a mnemonic S9 RCM. You can see here who cannot opt for composition scheme. Page number 184. Page number 184. Who cannot opt for composition scheme. In that, remember this mnemonic S9 RCM. Section 9 is RCM. Okay, wow. Section 9 is RCM. Yes, 9 RCM. S for service provider other than supply of food or beyond 10% limit. They cannot opt for composition scheme. N, non-resident taxable person. I, interstate supplier of goods or services. Then N, non-taxable supplies, a person who is making non-taxable supplies, that is alcoholic liquor for human consumption and petroleum products. Then E, supplier of services through e-commerce operator, but supplier of goods through e-commerce operator can opt for composition scheme. R, purchases from unregistered person, RCM 9 subsection 4. So 9 subsection 4 will come into picture whenever a registered person is making purchases from unregistered person. So then also if they have not paid GST, they cannot go for composition scheme. Then C for casual taxable person. M for manufacturer of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. These are the list of goods. If they are manufacturing, they cannot opt. That's the reason why they gave this line that they are making sale only in Punjab. Because if they make interstate supplies, they are disqualified. Then, with a view to expand its business systems, it will also start providing repair services of computer systems in Punjab. Can they provide any other services? Under 10-1 composition scheme, 10-1 composition scheme, they can provide only 3. What are the 3 things that they can provide under 10-1? See page number 180. So a person who is under composition scheme 10-1 can be engaged only in manufacture or supply of goods or supply of food services. Basically, what is their business? Their business is manufacture. So they can go for composition scheme, but they can provide any other services. Yes. To what extent they can provide the services? Respond pa. Up to what extent they can provide the services? See next page, page 181. Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. They can provide service, but what limit? Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. That is the answer you need to write in this case. So can they opt for composition scheme? Yes. Provided they are providing services only up to 12.5 lakhs during the current year. Understood pa? That is what we need to write as the answer for this. Okay. Next, B part. Any doubt in the A part? Clear? B part. Messrs. Siddharth and Sons, registered in Delhi, owns a restaurant Tasty Foods with a turnover of 112 lakhs in the financial year 21-22. In view of growing customer demand, it will also start intrastate trading of juices in Delhi from financial year 22-23. So they are restaurant where in Delhi. They want to supply goods also. Can they do? Yes. There is no restriction. Restaurant and goods they can do. And what is the turnover? 112 lakhs. It does not exceed 150 lakhs. Yes, definitely they can opt for composition scheme. There is no restriction. They can opt for composition scheme. Look into C part. Sitaram Associates, registered in Sikkim, is engaged in running a restaurant chain, Veg Kitchen, in the state. It has a turnover of 73 lakhs in the financial year 21-22. In the financial year 22-23, it decides to shut down the food chain owing to huge losses being incurred in the said business. Instead, it will start providing intrastate architect services from financial year 22-23. Services other than supply of food means which composition scheme? 10-2A composition scheme. So 10-2A composition scheme is applicable to whom? Manufacturer, supply of goods, trader, and supply of any other service. So they can opt for composition scheme. But for 10-2A, what is the limit during the previous year? It should not exceed 50 lakhs. But listen, what is that person's turnover during previous year? 73 lakhs. But not this business. It's okay. Some other business also. But the turnover of that person, not that business, turnover of that person exceeds 50 lakhs. So current year they cannot opt for composition scheme. Is it clear pa? But sir, they are not doing architect business, sir. Last year some other business. Let it be. But we need to see the turnover for the person. That person's aggregate turnover is what? 73 lakhs. It exceeds 50 lakhs. So current year they cannot opt for composition scheme. Understood? Next pa. D. Deepti Services Limited, registered in Uttarakhand. Uttarakhand, what is the limit? 10-1, 75 lakhs. Is exclusively providing intrastate hair styling services Hairstyling services. Services means definitely 50 lakhs. If their business itself is only services, 10 to a composition scheme. For 10 to a composition scheme, what is the limit? 50 lakhs. It has a turnover of 34 lakhs in the financial year 21-22. So can they opt for composition scheme? Yes. Will your answer be different if Deepti services also start intrastate supply of beauty products along with hairstyling service? No, the answer will remain the same. They can do trading, they can do service also, but their turnover during the previous year should not exceed 50 lakhs. Is it clear? Then look into question number 27. See, I gave very big detailed answers and all, but in exam you don't have to write that much. You write half of that, that is sufficient. Why I gave that much, sir? Had I given half, you would have written half of that. Okay, that's why I gave little detail. At least when you read it na. So don't just stop with this. Like today we discussed mighty 50 means okay, happy, jolly, over. No, you have to read once. Read the answers once at your end. So you will know how to present it in the exam, what and all information to be written. Okay, so don't just stop with this discussion. So when you do revision, so at least some 3 hours you sit and you go through the answers. You know the answer, but you go through the answer. Then only you will learn how to present it in exam. Got it? Then, so first learning, you are learning the application, concept, provision, application. Second reading when you are doing, you will refine that. Plus, you will also learn the presentation. Okay. Agni Limited filed GST return under section 39 for the month of January 2021 on 11th April 2021. Original due date of the said return was 20th February. Details of tax assessed as payable for the said month are given below. Output tax payable 1,80,000, 1,80,000. Tax payable under reverse charge 40,000, 40,000. Input tax credit available for utilization 70,000, 70,000. You tell me how to compute the net GST payable. I already told you. First you need to take gross liability minus ITC. Then we need to add RCM liability. What is the ITC? 70,000. 1,80,000 minus 70,000. Sir, I have one doubt, sir. This 40,000 can be taken as ITC. You said GST paid under RCM can be taken as ITC. Why are we not adding 40 to 70,000? Because in the 70 itself 40 is there. In that 70 itself 40 is there. How, sir? Read what is 70. Read what is 70. Input tax credit available for utilization. Means already they would have considered this 40,000 into that 70,000. Is it clear or not? So 1,80,000 minus 70. How much? 1,10,000 plus RCM liability you add. What is that RCM liability? 40,000. So you will get the net liability. Why should we do net liability? This is a question related to delay in filing 3B. Whenever there is a delay in filing 3B, we need to compute interest on net liability. What if in this question they have given that there is sufficient balance in the cash ledger? This 1,50,000 is there in cash ledger as on the due date, then interest is not payable. That is the latest amendment. Okay, but here they have not given, means we need to compute interest. Which month liability we are talking about? Which month liability? January liability. January liability, what is the due date? 20th of February. But when they are filing GSTR 3B, 11th of April, how many days delay? Count. February how many days? 8 days. Correct? 8 days. February. March 31 days. April 11 days. So total 50 days. For that 50 days we need to compute interest. How much is the net liability you said? 1,50,000 into 18% into 50 divided by 365. Because February month you considered 8 days only na. So denominator it will be 365. So that is the interest payable. Is it clear pa? So check the answer. First 1,80,000 minus 70 plus 40, 1,50,000. On that we need to compute the interest. Understood? Now see the second part of this question. Assuming the company has an ITC balance of 2,50,000 each under CGST, SGST for the said month. How much ITC they have pa? 2 lakh 50 means using 2 lakh 50 we can pay 1 lakh 80, correct? Yes sir, no? Yes. Sir, even RCM 40 also we can pay using 2 lakh 50? No. Remember always that input tax credit cannot be used for payment of RCM liability. RCM liability should always be paid through cash ledger. That's why I told you this format. First gross GST under FCM minus ITC. Then only you need to add RCM liability. What is the gross GST under FCM? 1 lakh 80 minus ITC. Fully 2 lakh 50 can be utilized. Is it clear? So 1 lakh 80, 1 lakh 80. Now gross liability under FCM will become 0. Add RCM liability. What is RCM liability? 40,000. That anyhow you have to pay through cash ledger. So interest will be computed on that 40,000. Is it clear? So the next part is 1 lakh 80 fully you have utilized. So 40,000 is only payable. And this is the excess ITC that is carried forward, 70,000. So interest will be payable only on 40,000. Understood this question, pa? Now, this question they may modify to include. So what will be your answer if there is sufficient balance in the cash ledger as on the due date of 3B? Then no interest payable. Or they will tell on this date this much balance is there. Thereafter this much they have deposited like that. Accordingly you need to compute the interest. Is it clear? Then. And I gave some questions on amendments. Okay, so in my website itself you can see some additional questions on amendments. It's not. Here you can see questions based on amendments. I have given some questions. Okay, all these questions are based on the amendments which we have discussed from yesterday and today and all. So these questions also you please go through. Some 26 questions are there. Okay, so these are on amendments so that you know like this type of questions also could be asked. Okay, so mighty 50 you need to do. Thereafter this questions on amendments. Then you ask me some important theory concepts, na? So these are some important theory concepts. So these are some important theory questions, okay, which I have listed out, like cases involving cancellation of registration. What is the meaning of contravention of provisions relating to cancellation of registration? What are those contraventions? Like this, these questions could be asked. Okay, so this also I have listed. Go through this. Okay, and apart from this, I will analyze. If there is any extra questions also, I will update in this list. I will update in this list, but it will be available here. You can check that. Okay, then coming back to this question number 28. Ragini Traders, a registered supplier of Jaipur, is engaged in supply of various goods and services exclusively to government departments, agencies, local authority and persons notified under section 51 of CGST Act. You are required to briefly explain the provisions relating to tax deduction at source under section 51 and also determine the amount of tax, if any, to be deducted from each of the receivables given below, assuming that the payments as per the contract values are made on 31st October. The rates of CGST, SGST and IGST may be assumed to be 6% and 6%, 12% respectively. Supply of computer stationery to PSU located and registered in Mumbai, total contract value 2,72,000. While explaining, I told you TDS is applicable only if the value of supply under the contract exceeds 2,50,000. While doing the value of supply under the contract, take out GST. Always while doing value, you need to exclude GST. Only in one place, value includes GST, that is e-way bill. In e-way bill, we do 50,000 computation. There alone, value includes GST. In all other places, when we refer to value, that value excludes GST. Now, how much is the value given here? 2,72,000, including GST, excluding GST? Including GST. Take out the GST. How to take out the GST? What is the GST rate? 12%. So 2,72,000 into 100 by 112. How much 100 by 112? Means 12 by 112 you take out. So remaining part is 100 by 112. How much? 2 lakh? Exceeds 2 lakh 50 or does not exceed 2 lakh 50 or does not exceed 2 lakh 50, which means TDS is not applicable. So that is the answer for the first case. TDS not applicable because the value is 2 lakh 42. It does not exceed 2 lakh 50. Then see the second one. Supply of air conditioner to GST department located and registered in Delhi. Total contract value is 2,55,000 excluding GST. Whether the value of supply under the contract exceed 2,50,000? Yes. So TDS will be applicable. Now the intrastate or interstate, whether it is intrastate or interstate, where is the supplier located? Ragini Traders, Jaipur, and to whom they are supplying? Delhi. So usually ending point will be taken as place of supply. Therefore it is interstate supply chargeable to IGST. So therefore, on this 2,55,000, what is the rate of TDS? 2%. CGST, SGST means 1%, 1%. IGST means 2%. TDS rate is 2%. So do the computation. 2,55,000 into 2%, 5,100. Understood pa? Next. Supply of generator renting service to Municipal Corporation of Jaipur, not exempt under GST law. Total contract value 3,50,000 inclusive of GST. Now take out GST. 3,50,000 into 100 by 112. How much? More than 2,50,000. So TDS is applicable. Yes. And this is what? Renting service means general provision. Location of recipient. What is the location of recipient? Jaipur. What is the location of supplier? Jaipur. Therefore it is intrastate. So 1% CGST and 1% is GST. What is the value you got after excluding GST? 3,12,500 into 1% towards CGST and 1% towards SGST. Understood pa? So this is one question on TDS. Then look into question number 29. Rajwada Operators Limited ROL is registered under GST in the state of Karnataka as an e-commerce operator. It owns and operates a web portal which supplies various goods and service on behalf of various sellers or service providers to its ultimate customers. Details of supplies undertaken through ROL in the month of October 2023 are as under. Sale of goods worth 1,47,500 including GST by A Limited, registered supplier of Rajasthan, to B Limited Gujarat. Also goods worth taxable value 1,40,000 sold by A Limited Rajasthan to B Limited Gujarat in the month of September 2023 were returned back in the month of October 2023. Now listen carefully. When TCS is applicable, whenever supply of goods or services is made through e-commerce operator, the e-commerce operator will deduct TCS at the rate of 0.5% on the net value of taxable supplies. So first you need to check, is it taxable supply? Check the question. Is it taxable supply? Yes, it is taxable supply. And sir, the 2,50,000 point is there for TCS? No, the 2,50,000 point is only for TDS, not for TCS. So TCS will be applicable always, whatever may be the value, but sales returns will be deducted while computing TCS. What is the sales made during the month? 1,47,500, okay, minus 1,40,000 needs to be reduced, okay. Why 1,40,000 needs to be reduced? Because sales returns needs to be reduced. But 1,47,500 is including GST, but 1,40,000 is excluding GST. So please do the computation. What is this? Always TCS should be computed on value excluding GST. TDS also compute on value excluding GST. While computing TDS and TCS, the GST component should not be included in the value. Is it clear or not? So take out the GST. 1,47,500 into 100 divided by 118, because the rate of GST is given as 18%. So 1,47,500 into 100 by 118, how much? 1,25,000. Sales returns is how much? So it is negative, correct? Negative means TCS will be nil. You got it? Negative means TCS nil. Don't compute TCS and then tell negative TCS give me refund. You understood? Government and all will not give refund. So value minus sales returns. If it is negative, that's it. We don't have to pay any TCS. Okay. So see the answer. 1,25,000 minus 1,40,000 negative value. So thus TCS to be collected is nil. Sir, I have a question now, sir. Can this 15,000 be carry forward and adjusted? This is not MAT credit. Understood? Or it is not set off and carry forward of losses. We don't have such provision. Sir, then it is loss na, sir. Correct. Ask your customer not to return that much. You understood? Ask your customer not to return that much. That's the only way you can do. But law wise, there is no benefit given. Got it? Next, second point. Value of services provided from 21st October to 30th October by way of transportation of passengers by motor vehicles by X Limited registered under GST in Karnataka to Z Limited registered under GST in Karnataka amounting to 5,50,000. It includes 1,50,000 against transportation services provided by omnibus. Now please listen, there is one very important point here. Generally, transportation of passengers through e-commerce operator, section 9(5) will come. When section 9(5) comes, e-commerce operator only will pay GST. Again I am repeating, whenever there is transportation of passengers through e-commerce operator, okay, 9(5) will come. So liability to pay GST is on e-commerce operator. So 9(5) when applicable, TCS will not be applicable. Section 9(5) and TCS section 52 are mutually exclusive. So e-commerce operator will pay GST on the transportation service. But sir, supplier is registered, that is irrelevant. In case of transportation service, whether the supplier is registered or unregistered, always e-commerce operator will pay GST on that. However, if it is transportation of passengers through omnibus by a company, 9(5) will not be applicable. When 9(5) is not applicable, TCS will be applicable. Is it clear, pa? So, is the supplier a company? Check the question. Is the supplier a company? Yes, X Limited. And are they transporting passengers through omnibus? Yes. How much? 1,50,000. So on that 1,50,000 only TCS will be applicable. On remaining amount TCS will not be applicable. So 1,50,000 only TCS applicable. That too, what is the rate of TCS? 0.25% CGST and 0.25% SGST. Is it clear? Next. Look into third one. Miss Zara of Mumbai books a room for 3 days and 2 nights in Rajnivas Palace, Jodhpur, Rajasthan through Maharaja Resorts Limited, MRL, also an e-commerce operator registered under GST. So Miss Zara is the guest. She is booking through MRL, one e-commerce operator. Okay, MRL is integrated with ROL, who has an agreement with Rajnivas Palace. Actually, there are 2 e-commerce operators here. Who are the 2 e-commerce operators? ROL and MRL. 2 e-commerce operators are there. Rajnivas Palace is registered under GST in Rajasthan and raises invoice for rupees 1,50,000 to Miss Zara and receives 1,45,000 from ROL for the same. Okay. Now, in this case, what should be taken? Like, who will deduct the TCS? First question. Who will deduct TCS? Supplier side e-commerce operator, recipient side e-commerce operator. Which e-commerce operator will deduct TCS? Remember, whenever there are 2 e-commerce operators, multiple e-commerce operators, the supplier side e-commerce operator will deduct the TCS. Who is the supplier side e-commerce operator? ROL. So ROL only will deduct the TCS. Is it clear? Next, second question. The TCS will be computed on what? Is it computed on 1,45,000 or 1,50,000? TCS will be computed on 1,50,000. Okay, that is total value, not on payment made. Total value. What is the total value? 1,50,000. So who will be deducting TCS? ROL, being supplier side e-commerce operator, is liable to deduct TCS. Is it clear, pa? So remember one point, what is that? When there are multiple e-commerce operators, which e-commerce operator will deduct TCS? Supplier side e-commerce operator will deduct TCS. Got it? So this is a very good question on TCS application because lot of points are covered here. Okay. Then question number 30. Mr. Gauri Shiva, a registered person in Punjab, supplies goods taxable at 12% in the state of Punjab and Haryana. He has furnished the following details in relation to independent supplies made by him in June. Supply number 1, Mr. A, B, C, like that it is given. Discuss the manner in which details of above supplies are required to be furnished in GSTR 1. This is also one amendment. You can just update this amendment in your book, point number 55. Point number 55. How invoices should be reported in GSTR 1. So previously we have a different format. Now they are giving how invoices needs to be reported in GSTR 1. How invoices needs to be reported in GSTR 1. First you need to see whether it is B2B or B2C. First you need to check whether it is B2B invoices. What is B2B invoices means? Sale to registered person. B2B invoices always invoice wise. Okay, invoice wise, always we need to report it invoice wise. Suppose if it is B2C invoices, that again divide into two, interstate and intrastate. If it is intrastate, always we do consolidation, consolidated details. What is the meaning of consolidated details? We will not report invoice wise. We will do the total and we will put it there. You understood? For example, 10 invoice also is there. 10 invoices total we will do and the total amount only we will put. That is intrastate B2C. Suppose if it is interstate B2C, then check the value of invoice. Value of invoice exceeds 1 lakh. Value of invoice exceed 1 lakh per invoice, or value of invoice less than or equals to 1 lakh per invoice. If the value of invoice exceeds 1 lakh per invoice, then also we need to give invoice wise details. Suppose if the value of invoice does not exceed 1 lakh per invoice, then we need to do state wise consolidation. State-wise consolidation. Clear? State-wise means that particular state-wise you need to do the total. Okay. So only in two places we need to report invoice-wise. What are the two places? Number 1, B2B. Number 2, B2C, interstate, where the value of invoice exceeds 1 lakh. Now, based on that, how a question may get, you can see this. You finish now writing that. See this. First one, B2B or B2C? B2B. So invoice wise, correct? So invoice wise, invoice wise. Next one, B2B or B2C? So invoice wise. Next one, B2C, intrastate, interstate. So consolidation, correct? Next one, B2B or B2C? B2C, intrastate, so consolidation. Then B2B or B2C? B2C. Interstate. Invoice value exceeds 1 lakh. So, invoice wise. You got it? Next one. B2C. Interstate. Invoice value does not exceed 1 lakh. So, state-wise consolidation. State-wise consolidation. Next. B2C. Interstate. 75,000. It does not exceed 1 lakh. So, state-wise consolidation. Then B2C. Interstate. 2 lakh 80. More than 1 lakh. So, invoice wise. B2B. B2B. So, definitely it will be invoice wise. So, that's what I have given. So, all these invoices, first 2 invoices will be invoice wise, then third and fourth one will be consolidated, correct? Then also it will be invoice wise, and 6th and 7th will be state wise consolidation, okay? Like that we need to prepare a table and present it, simple question only, okay? Then look into question number 31, that is related to refunds. Kailash Global Private Limited supplies various goods in domestic and international market. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. The company exports goods without payment of tax under letter of undertaking in accordance with the provisions of section 16(3)(a) of IGST Act. Sir, B2C large limit is 2.5 lakhs. No, that is amendment. Previously it was 2,50,000. Just now we discussed, they have reduced it to 1 lakh. Okay. Previously, wherever this 1 lakh we saw, in this place, this 1 lakh was there. Previously it was 2,50,000. Now they reduced it to 1 lakh. Okay. Now, coming back to this, Kailash Global Private Limited supplies various goods in domestic and international market. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. The company exports goods without payment of tax under letter of undertaking. So, how they are making? Exporting goods without payment of tax under LUT. So, second option means they will get refund of ITC. In accordance with the provisions of section 16(3) of IGST Act, the company has made the following supplies during a tax period. This is a very good question, consolidated question that covers all types of refunds. So, please concentrate. Little bit concept also we need to understand here. First one, export of product A to UK for $10,000, assessable value under customs in Indian rupees. Export duty is levied on product A at the time of export. So, whenever export is upon payment of customs duty, we will not get refund under option 2. We will get the refund only under option 1. Is it clear? Again I am repeating. Whenever we are making exports or supplies to SEZ, there are 2 options. Option 1, pay IGST, get refund of that IGST. Option number 2, don't pay IGST and export it under bond or LUT, or supply to SEZ under bond or LUT and get refund of ITC. But whenever we are making export of goods upon payment of customs duty, we will not get refund under option 2, disqualified. Only possibility is option 1. But in this question, option 1 also not possible, because they wanted to go for without payment of IGST, which means in the first transaction there is no refund. Is it clear, pa? Understood or not? Again I am repeating, they are making export of product A to UK 10,000 and they are paying export duty. When they are paying export duty, they will not get refund under option 2. Okay sir, but they will get option 1 na sir? Correct. But that option 1 also not possible. Okay. Why? Because they are going for without payment of tax under letter of undertaking. Now, related to this, there is one amendment that has happened. Okay. What is that? The moment you are exporting goods upon payment of customs duty, latest amendment is that neither option 1 nor option 2. Is it clear, pa? So, therefore, that is another amendment. you can write down point number 56. Export of goods. Export of goods upon payment of what? Upon payment of customs duty. Export of goods upon payment of customs duty. No refund under option 1 or option 2. No refund under option 1 or option 2. What is option 1, option 2? Option 1, pay IGST and get refund of gross IGST. Option 2, don't pay IGST and get refund of ITC with respect to inputs and input services. Get refund of ITC with respect to inputs and input services. Sir, previously we were getting only option 1. Now the latest amendment is that for your exam, neither option 1 nor option 2. Okay. Clear? So see this. So this is that section 16. Hope it is visible for you. This is an amendment which is there in your supplement. Zero rated supply means any of the following supplies, namely export of goods or supply of goods or services for authorized operations. And see this subsection 3. A registered person making zero rated supply shall be eligible to claim refund of unutilized ITC on supply of goods or service or both without payment of tax under bond or LUT, provided that the registered person making supply shall, in case of non-realization of proceeds, I think somewhere it is given, notwithstanding anything contained in subsection 3 or subsection 4, no refund of unutilized ITC on account of zero rated supply of goods or integrated tax paid on account of zero rated supply shall be allowed, where such zero rated supply of goods are subject to export duty. Is it clear? So you don't have to read everything, just that is the line, that's what I have given. So whenever you are exporting goods upon payment of customs duty, export duty means customs duty, no refund under option 1 or option 2. So neither option 1 nor option 2. So that's where in this question, whether we will get any benefit? No, you will not get any refund. Is it clear, pa? Got the clarity? Then look into the next one. Domestic supply of taxable product B during the period excluding tax at the rate of 5%. So to whom we are supplying? Domestic. What is the tax rate? 5%. Now read further. Inputs used in manufacturing such goods are taxable at 18%. Will it come under inverted tax structure? Yes. The tax rate on input is 18. The tax rate on output is 5. That is called as inverted. The tax rate on output is less than the tax rate on input, is called as inverted rate structure. In case of inverted rate structure, we will get the refund. Okay. So therefore refund is available. Refund of ITC. Refund of ITC on account of inverted tax structure we will get. Next, supply of goods to EOU. Whenever we are making supply of goods to EOU, that is called as deemed exports. In case of deemed exports, either supplier can claim refund or recipient can claim refund. Carefully listen. Whenever we are making sale to advance authorization holder, or whenever we are making sale to EPCG holder, or whenever we are making sale to EOU, that is called as deemed exports under GST. In case of deemed exports, there are two options. What are the two options? Either supplier can claim the refund, that is, I will make sale to you, I will not charge any GST from you, whatever GST I pay to government, that I will get as a refund. Okay. Option 2, the recipient will claim refund, means I will charge GST from you, so you will claim the refund. Is it clear? So what are the two options in case of zero rated supply? Check your book, I have given there. So go to refunds chapter. You can see there page number 238. First, zero rated supply, two options, you know na? Zero rated supply, two options, you understood na? What are the two options for zero rated supply? Pay IGST and get refund of gross IGST. And second option, don't pay IGST, get refund of ITC on inputs and input services. Clear? Now look into this. This is in case of deemed exports. In case of deemed exports also there are two options. What are considered as deemed exports? Same page, page number 238. Page number 238. See on the top of that page. What are considered as deemed exports? Supply of goods against advance authorization. Supply of capital goods against EPCG. Supply of goods by a registered person to EOU. These transactions are treated as deemed exports. Come below. What is alternative one? There is a supplier who is making supply of goods to the recipient, and from the recipient they will collect only sale price. GST not collected by the supplier, which means who will claim the refund? Supplier will claim the refund. First supplier will pay GST to government, and from government they will get the refund. Is it clear, pa? So this is one alternative. Who is claiming refund? Supplier is claiming refund. Now second alternative you see, alternative 2, supplier will collect the sale price plus GST from the recipient. Got it? Now recipient will take the ITC and supplier paid GST to government. So who will get the refund of ITC? Recipient. So there are two alternatives in deemed exports. Alternative 1, supplier will claim refund. Alternative 2, recipient will claim refund. Is it clear or not? Now read this question. Sir, is this deemed exports? Yes. Supply of goods to EOU is deemed exports. ITC has been claimed by recipient, means who will claim the refund? Yo, I charged GST from you, you took the ITC, means you are only going to claim the refund, correct or not? See this pa? Alternative 1, first of all, I am not charging GST to you. Then how can you take ITC? Correct? Alternative 1, I am supplier, you are EOU. Carefully listen. I am Kailash Global, you are EOU. I am not charging any GST to you. How will you take ITC? You cannot take ITC. Means if you have taken ITC, means I have charged GST. If I have charged GST, then it is not alternative 1, it will be alternative 2. In alternative 2, who will claim refund? Recipient will claim refund. Means EOU will claim refund, but this Kailash Global will not claim refund. Are you understanding this? So therefore, no refund. No refund. Then next, fourth case, export of exempted supplies of goods. Even though the product is exempted, the moment it is exported, it will become zero rated. Okay. Generally the product is exempted, but when it is exported, its character will change to zero rated. And whether it is with payment of GST or without payment of GST. They wanted to go for without payment of GST, which means will they get the refund? Yes. Yes. Refund of ITC. Option 2. Option 2. Option 1 will not be possible. Option 2. What are the two options for zero rated? Pay IGST, get refund. They are not paying IGST. So, export without payment of IGST and get refund of ITC. Clear? So, there are two refunds. One is on account of zero rated, that is exports. Another is on account of inverted rate structure. Now, we need to do the answer. So, we will do the answer together. You take your notebook, one rough page you take. One rough page you take. Tell me which refund we will do first. Which refund? There are two refunds. You decide as your wish. Audience poll. Inverted or zero rated? Zero rated we will try first. Write down. Refund of ITC on account of zero rated supplies. Give the side heading. Refund of ITC on account of zero rated supplies. Refund of ITC on account of zero rated supplies. Refund of ITC on account of zero rated supplies. What is the formula for refund? Write down. Maximum refund equals to, first write down the formula. Maximum refund equals to net ITC into, maximum refund equals to net ITC into zero rated turnover. Maximum refund equals to net ITC into zero rated turnover divided by adjusted total turnover. Zero rated turnover divided by adjusted total turnover. Okay. Next line. Net ITC equals to, net ITC equals to ITC on inputs and input services. ITC on inputs and input service. Capital goods ITC you should not take. Okay. Only inputs and input services. Now see the data here. How much is the ITC on inputs? 3,50,000, including 50,000 on export of exempt supplies. Can we take? Yes. Why? Generally the product is exempted. For example, this product is exempted. So generally we cannot take ITC for this product. But the moment this product is exported, it will become zero rated. So we can enjoy the ITC. So 3,50,000 right there, 3,50,000. Net ITC equals to ITC on inputs and input services, that equals to 3,50,000 plus input services how much? Input service how much See there, 2 lakhs plus 2 lakhs plus 2 lakhs. But in the 2 lakhs, 18,000 rupees is outdoor catering. Outdoor catering is a blocked credit, means we cannot take ITC. So minus 18,000. 3,50,000 plus 2 lakh minus 18,000 equal to 5,32,000. This is net ITC. Are you understanding the way in which we need to arrive at the answer? First formula you need to remember. What is the formula? Net ITC into zero rated turnover divided by adjusted total turnover. What is net ITC? Net ITC is ITC on inputs and input services. So inputs 3,50,000, input service 2 lakhs, but blocked credit we should not take. Okay. Then zero rated supply. Next line. Zero rated turnover. Zero rated turnover. But which zero rated you should take? Only without payment of IGST, whichever refund you are claiming. So there are two zero rated turnovers. 7 lakhs also there, 6 lakhs also there. Which one you should take? Which one you should take? For which you are claiming refund? For this first one you are claiming refund, last one you are claiming refund, last one. So that only should be taken. But that should be compared with 1.5 times the similar goods sold in the local market, whichever is lower. Okay, so write down 0 rated turnover equals to 6 lakhs or 6 lakhs or 5 lakhs into 1.5, because usually what will happen, we will inflate the value, so we will claim more refund. That's why they have brought this. They are telling you compare with the domestic market value into 1.5, whichever is lower. So 6 lakhs or 5 lakhs into 1.5, whichever is lower, that is 6 lakhs. Correct? Because 5 lakhs into 1.5 will be 7,50,000 na. So therefore whichever is lower will be 6 lakhs. Okay pa? So we got 0 rated turnover. What is the next we need in the formula? Adjusted total turnover. Write down adjusted total turnover. Adjusted total turnover. Okay. So what we need to do, we need to first take first turnover 7 lakhs, next 10 lakhs, that is also turnover only na. Then 5 lakhs, that is also your turnover. All turnovers pa, all turnovers, 0 rated, non-zero rated, everything you should take except exempted supplies. Anything is exempted in this? No, everything is taxable only, take everything. So 7 lakhs plus 10 lakhs plus 5 lakhs plus 6 lakhs, that equals to 28 lakhs. 28 lakhs. Generally in adjusted total turnover, exempted turnover will not come, because if it is exempted turnover, you cannot take ITC na. But sir, there is export exempted, that is taxable only. For ITC purpose, export of exempted goods is treated as 0 rated. 0 rated means we can enjoy ITC. I am not talking about that. Normally within India, is there any exempted turnover given in the question? No. Okay. So now do the formula. Refund equals to, all numbers you know, refund equals to 5,32,000 into 6 divided by 28. That equals to 1 lakh. So that is the answer pa, 1,14,000. You understood how we got this 1,14,000? This is one refund we have computed so far. Which refund? 0 rated. Now we are going to do inverted tax structure. Okay, write down. Refund of ITC on account of inverted tax structure. Refund of ITC on account of inverted tax structure. Refund of ITC on account of inverted tax structure. How to calculate refund of ITC on account of inverted tax structure? I will tell you the easy way. Okay, formula and all, don't break your head. I will tell you the easy way. 5 points we need, 5 numbers. Okay, what are those 5 numbers? Write down. Number 1, net ITC. Number 1, net ITC. Net ITC is only inputs. ITC only on inputs. ITC only on inputs. Now see the data. What is the ITC only on inputs? 3,50,000 equal to 3,50,000. But we need 5 numbers pa. If you get 5 numbers, easily you will get the refund formula. Okay. First one is net ITC. Second one is inverted turnover. Inverted turnover. Inverted turnover. Which one is inverted turnover? 10 lakhs. Correct? For that only now we are claiming refund. Inverted turnover is 10 lakhs. Why it is called as inverted turnover? Because the rate of GST on output is less than the rate of GST on input. That's why it is called as inverted turnover 10 lakhs. Okay. Next, number 3. Adjusted total turnover. You will take everything same as previous. What is that? 28 lakhs. Adjusted total turnover 28 lakhs. Same as previous. Everything except exempted turnover 28 lakhs. You got these 3. Next, number 4. tax on inverted turnover. First net ITC, second inverted turnover, third adjusted total turnover, four tax on inverted turnover. What is the tax on inverted turnover? Inverted turnover already you know 10 lakhs pa. What is the rate of GST on that? 5%. So 10 lakhs into 5%. 50,000. 50,000. Next one. ITC on inputs and input services. ITC on inputs and input services. How much is the ITC on inputs and input services? See here. 5,32,000. Already you did. Previous sum. Previous computation. 5,32,000. How 5,32,000? 3,50,000 plus 2 lakh minus 1,80,000 minus 18,000, that is 5,32,000. You got the 5 numbers. What are the 5 numbers you got? Net ITC, inverted turnover, adjusted total turnover, tax on inverted turnover, and ITC on inputs and input services. Now write down the formula. Refund equals to 1 into 2 by 3. 1 into 2 by 3 minus 1 into 4 by 5. 1 into 2 by 3 minus 1 into 4 by 5. Easy appa. Can you remember like this? Formula and all, very big formula. That big formula you cannot remember. That's why I am telling you 5 points you remember. 1 into 2 by 3 minus 1 into 4 by 5. What is that? 1, 2, 3, 4, 5. Already you know the numbers. You just put it there. Okay. 1 into 2 by 3 minus 1 into 4 by 5. What is 1? 3,50,000 into 2 by 3. What is 2? 10 lakhs. What is 3? 28 lakhs. 3,50,000 into 10 by 28 minus again 1 into, see this is one computation, separate computation. 1 into 2 by 3 is one computation minus 1 into 4 by 5 is another computation. 1 into, that is 3,50,000 into 4 by 5. What is 4? 50,000 divided by total ITC on inputs and input service 5,32,000. Now you do the computation, you will get one answer. $92,105. See this? 92,105 is the answer. So you learnt both the refunds, how to compute. Okay? And this question covers everything. All refund points are covered in this question. It's a very good comprehensive question. Now, look into question number 32. So this is on inverted tax structure. Separately also they can give a question like this. See this. Ever Young Manufacturers LLP, a registered supplier under GST. But refunds chapter is there for you in syllabus. You know that? You know na? Beginning itself they gave. Somewhere like 4th chapter, 5th chapter itself, they have given refunds, exports, deemed exports, everything is there. Ever Young Manufacturers LLP, a registered supplier under GST, is engaged in manufacturing of Ayurvedic cosmetic products within the state of Gujarat. It provides the following information for the month of January 2023. Particulars of the month of January 2023. Outward supply of skincare products 2.5, outward supply of skincare products 6%. So they have two outward supplies, one is at 2.5, another is at 6%. And they have 3 inward supplies. Inward supply of input 6%, inward supply of input service 2.5%, inward supply of capital goods 9%. Will it come under inverted turnover or not? Yes, because one outward is less than the inward. You should see inputs you should see inputs. What is called as inverted tax structure? The rate of GST on output is less than the rate of GST on input, then it is called as invert. Here, what is the rate of GST on input? 6%. What is the rate of GST on output? 2.5%. Definitely it is inverted. But there is another skincare product which is 6% only, that is non-inverted. You understood? In this question, there is both inverted turnover as well as non-inverted turnover. Is it clear, pa? Now, All other information, ITC in respect of all types of inward supply as given above was claimed in the relevant GSTR 3B and same was also reflected in 2B, and all other conditions are complied. No refund was claimed in the month of January. You are asked to compute the maximum refund amount. Can we do this? Come on. What are the 5 numbers that we need? Net ITC. Start. Number 1, net ITC. What is net ITC? Only inputs are, both inputs, input services are, or inputs, input service and capital goods are. Only inputs. What is the inputs related credit? Check the question. The inputs related credit is 35 lakhs into, you do total 12%. 35 lakhs into 12%. 4 lakh 20,000. 4 lakh 20,000. 35 lakhs into 12%, 4 lakh 20,000. Number 1 over. What is number 2? Inverted turnover. Write down. Inverted turnover. Out of these 2 turnovers, which is inverted turnover? First one. That is 50 lakhs. Right there. 50 lakhs. 50 lakhs. Next, adjusted total turnover. So total, what is adjusted total turnover? 50 lakh 50,000. Correct? Both are outward only. 50 lakh 50,000. Next, number 3. What is number 3? Tax on inverted turnover. Tax on inverted turnover. What is the tax on inverted turnover? 50 lakhs into 5%. That is 2 lakh 50,000. Next, number 5. ITC on inputs and input services. ITC on inputs and input services. What is that ITC on inputs and input services? Huh? 35 lakhs into 12% plus 5 lakhs into 5%. 35 lakhs into 12% plus 5 lakhs into 5%. How much? 4 lakh 45,000. So you got all the numbers. Now do the computation. 1 into refund equals to 1 into 2 by 3 minus 1 into 4 by 5. Come on. One lakh 79,887. Check the answer screen. 1,79,887. Easy pa? Respond here. Everyone got this? Okay. Then see this question number 33. This is an independent question on refund on account of 0 rated. The previous question what we did is inverted. This is on 0 rated. First question what we did is both. Everything is there. Next independent question on inverted. This is independent question on 0 rated. See this question number 33. Bhagwan manufacturers, and 1 minute pa. I don't think so we will be able to complete remaining questions and all, because already it is 6 o'clock and even few points in supplementary notes is there. Can I take half day extra? Okay only, na? So even if you are unable to come also, it's fine. You can attend in YouTube online live also. So I'll take it on Tuesday. Tomorrow I am not available. So Tuesday I'll take morning itself. So morning to afternoon, if you are able to come, you come. Otherwise also don't worry, you can watch it in YouTube at a later point of time also if you are having office or etc. and all. In few days exam, still you are in office means you are great only, and you can watch later also, it's up to you. But if you can come, you can come, okay. So that the remaining some 17 questions, this 33 we will discuss. The remaining some 17 questions and plus that few points in the supplementary that we will complete. Just some 3-4 hours if I have, that is sufficient for me. Okay, done. So see this question number 33. I thought of completing, but you are only, I am not wasting time, but that much is there that you are listening as if you are learning for the first time. I don't know whether you are really learning for the first time or it is an entertainment for you that you are making me explain everything or not, but no reaction from your side. So that's why I am explaining everything. Okay, say this. Bhagwan Manufacturers and Exporters Company, BMEC, is registered under GST in the state of Rajasthan and supplies various goods in domestic as well as in international market. It is engaged in both manufacturing and trading of goods. It exports goods without payment of tax under bond or LUT in accordance with the provisions of section 16(3) of IGST Act. BMEC provides the following information in relation to various supplies made by it during October 2023. Now, taxable value of goods star supplied within India, this is local sales, 14 lakhs. Taxable value of goods son exported without payment of tax under letter of undertaking, 10 lakhs. So we will get the refund, correct? Refund of ITC. Refund of ITC. However, taxable value of such goods when supplied domestically in similar quantities is 6 lakhs. So how much should be taken as value? 6 lakhs into 1.5, that is 9 lakhs or 10 lakhs, whichever is lower, that will be 9 lakhs. Next one, taxable value of goods moon exported without payment of tax under bond. However, taxable value of such goods when supplied domestically is 1,50,000. So here also we will get refund of ITC. How much? What is the turnover? 2 lakhs or 1,50,000 into 1.5. What is 1,50,000 into 1.5? 2,25,000 or 2 lakh, whichever is lower is only 2 lakhs. Okay. Then the input tax credit availed for the above tax period is capital goods, inputs and input services. Now, can we do the computation? So write down. Maximum refund equals to, first write down the formula. What is the formula? Maximum refund equals to net ITC into zero rated turnover divided by adjusted total turnover. Net ITC into zero rated turnover divided by adjusted total turnover. What is net ITC? What is that? ITC on inputs and input services. See the question. 3 lakh plus 1,50,000, 4,50,000. Write down. Net ITC equals to 3 lakh plus 1,50,000, that equals to 4,50,000. Next line. Zero rated turnover equals to this 10 lakhs or 6 lakhs into 1.5, whichever is lower, that is 9 lakhs. So take 9 lakhs plus 2 lakhs or 1,50,000 into 1.5, whichever is lower, 2 lakhs. So 9 lakhs plus 2 lakhs, that equals to 11 lakhs. Next line, adjusted total turnover. How much is the adjusted total turnover? How much? 20? Wrong answer. You know what is the mistake you did? You took the given information, but you have computed now. No, that only should be taken in denominator. Whatever is there in numerator, that should only be there in denominator. Na. In this place 14 lakhs, correct pa. In this place 10 lakhs is wrong. How much you took? 9 lakhs. In this place you are taking 2 lakhs. Okay. So therefore, what is adjusted total turnover? 14 plus 9 plus 2. What is that? 25 lakhs. 14 lakhs plus 9 lakhs plus 2 lakhs. Sir, why 9 lakhs, sir? Because we took whichever is lower. 9 lakhs only we took in numerator. That's why. Got it? 14 lakhs plus 9 lakhs plus 2 lakhs. That equals to 25 lakhs. Now do the formula computation. Maximum refund equals to 4,50,000 into 11 divided by 25. How much? 1,98,000. You got it? Now there is one important point here. This much you will not get as refund. This is subject to balance in ITC. Yes, you are eligible for 1,98,000, but that much balance should be there in your ITC ledger. You got it? Suppose if the balance what you have is only 1,50,000, then that 1,50,000 only they will be giving it to you. Simple logic, pa. You can withdraw 10,000 rupees using your debit card. So you go to the ATM, but 10,000 is not coming. Why? You got it? If the balance is 100 rupees, how 10,000 will come? So whatever is there in account, that much only you will get. Like that, you are eligible for 1,98,000. But what is the ITC balance that you have? That much only you will get as refund. So you see what is the ITC balance. See there. BMEC also provided the following additional information. The balance in credit ledger at the time of filing refund application is 1,50,000. The balance in credit ledger at the end of October is 3,25,000. So what is the refund? 1,98,000, whichever is lower. So 1,50,000 only you will get as refund. Is it clear, pa? First, refund as per formula 1,98,000. Balance in ITC at the time when you make the refund application 1,50,000. Balance in ITC pertaining to the month for which you are filing refund, that is 3,50,000. So whichever is lower, so you will get only 1,50,000. You see this. Refundable amount is least of the following. Refund as per formula 1,98,000. Balance in credit ledger at the time of filing refund application 1,50,000. Balance in credit ledger for the month for which you are filing refund application 3,25,000. Whichever is lower is 1,50,000. So you will get only 1,50,000 as the refund. So that is this, and we have completed all the possible questions in refunds. These are the 3 possible questions, okay? And the balance, question number 34 to 50. So 16 questions are what we have. 16 questions plus few points in the supplementary we will discuss in Tuesday. With that we will wind up, okay? Thank you. We'll meet on Tuesday. So I am not completing the batch, okay? Even though I planned for 2 days, but as lot of things are there, I want to discuss this and complete. Thank you. We'll meet on Tuesday morning, okay? And 9 o'clock, as usual, 9 o'clock we'll meet. 9 to 1, 1:30 like that we'll take and complete. I said now 4 hours I need. So 9 to 1:15 with break, okay? So I'll try to complete that in that 4 hours. Done? And those who are watching in YouTube, so you will, anyhow it will be live. You just subscribe, you will get the notification. You can watch that. And even you also, if you want to watch online, you can watch, no issue, okay?